Hello and welcome to the September 10th, 2025 meeting of the Governmental Accounting Standards Board. Good morning, everybody. Great to see everybody again. We had a busy day yesterday, revenue and expense recognition, a lot of good progress. Then we had our last public forum for the preliminary views in our going concern project. All very productive. And this morning we're starting with subsequent events. Emily, turn it over to you to take us through what you have for us today.
Great. Thank you. Good morning, everyone. So today, if everything goes according to plan, this is the last full redeliberative meeting for this project. So we have two papers. The first paper covers remaining issues. It covers 4 different topics, primarily based on respondent feedback. And then our second paper is related to effective date and transition. So we'll start with that first paper, the remaining issues paper. The issues that are covered in this paper include note disclosures and comparative financial statements, evaluating subsequent events and financial statements that have been reissued, the scope and applicability provisions, and then a follow-up discussion on the explicitly identified non-recognized event debt-related transactions. So we'll start with the first topic, which is note disclosures and comparative statements. In response to the ED, we received some feedback asking that a final statement include in the standards section whether subsequent event note disclosures should be presented for prior periods. The board did discuss this topic leading up to the exposure draft, and at that time, the board decided that the broad guidance for note disclosures and comparative statements that resides in Statement 62 is appropriate and applicable in this case. And to that end, the board decided that no specific or explicit guidance would be needed in a statement resulting from this project because that topic is covered in Statement 62. The staff continues to believe that those conclusions remain appropriate, and so we're not recommending that anything be added to the standard section of a final statement. We do note that the basis for conclusions of the exposure draft discuss the board's considerations relative to this topic, and we would expect that the basis for conclusions of a final statement include those considerations as well. And that will bring us to our first board question. Question 1, does the board believe that additional guidance should be provided regarding note disclosures about subsequent events and comparative financial statements in a final statement? And we are recommending that additional guidance not be provided in a final statement.
Thanks, Emily. Board member responses, comment? Chris.
I thought the concept was very straightforward and that no additional guidance is needed.
Thanks, Chris. Carolyn.
I agree with the staff's analysis and their reasoning and their recommendation.
Thanks, Carolyn. Robert.
I also agree with the staff recommendation based on the rationale that was included in the basis for conclusions in the ED.
Thanks, Robert. Diane.
I agree with staff recommendation. I think 62 provides clear guidance and we don't need anything else.
Thanks, Diane. Jackie.
I also agreed with the staff recommendation. We had discussed this before and thought 62 was sufficient. I still think that it's sufficient. And as you pointed out, this shouldn't be occurring that often. We didn't do anything that'll cause a lot more disclosures than we did in the past, or just more consistent disclosure perhaps. So I don't see that there's any need to add anything more to what's already in 62.
Thanks, Jackie. Jeff?
Yeah, I think I agree. The only thing that gave me pause was our addition of the date through which the subsequent events are to be included, which we didn't have in the exposure draft, right? But we decided to add, and so I sat back a minute and said, well, would a government ever consider that date relative to my date this year in and of itself to be significant? And I didn't know. When I put my user hat on, there's a part of me that says, well, maybe there's some significance there to me. But so I talked to staff a little bit about it. It seems pretty unlikely that they would find that to be in and of itself significant. So, but that was the only thing I really thought about is in terms of what's different here. And so I think in the end, 62 can handle it. So I'm fine with the recommendation.
Thanks, Jeff. I agree with the recommendation as well. I would imagine a similar basis will be in the final as was in the ED, which will explain our thinking, and I think that should be satisfactory.
All right. We'll move into the second topic discussed in this paper, which is evaluating subsequent events in financial statements that have been reissued. So as a little bit of background, leading up to the exposure draft, the board considered whether to retain the guidance that is in Statement 56 regarding reissuance and subsequent events. And at that time, the board decided to not retain that guidance, in part because there's no definition for what constitutes reissuance or reissued financial statements. Instead, the board concluded leading up to the ED that the modifications and clarifications around the end date for the subsequent events timeframe would enhance clarity around the application of the requirements of the standard and when subsequent events should be evaluated. Some respondents agreed with the approach taken in the exposure draft and others disagreed with that approach. Those that disagreed raised a concern that the removal of that guidance may limit the circumstances in which preparers evaluate and disclose subsequent events. The project staff continues to agree with the approach that was taken in the exposure draft. Specifically, we continue to believe that the modifications to the subsequent events timeframe, so the shift from issuance date to available to be issued, and the clarification around what available to be issued means, we've laid out criteria with respect to what that constitutes, will help clarify the time frame in which subsequent events should be evaluated in all cases. We believe that the intention of not carrying forward the guidance in Statement 56 is to instead rely on whether that available to be issued date has changed in order to determine whether the subsequent events timeframe is extended or changed or there needs to be additional valuation, rather than relying on whether the financial statements have been reissued, which is the context of Statement 56, particularly because we don't have a definition of what it means to be reissued. Some of the circumstances when you think about when financial statements might be represented or reproduced include cases where they're included in like an offering document, for example. And we'll note that for that specific example, AICPA literature does provide certain guidance with respect to exempt offering documents, and the SEC's continuing disclosure requirements also address that case as well. So for this point, we're recommending carrying forward the approach that was taken in the exposure draft, meaning that we are not recommending carrying forward or retaining the guidance that was in Statement 56. And that will bring us to our second board question. Does the board believe that a final statement should include requirements regarding subsequent events and financial statements that have been reissued? In other words, should the requirements of Statement 56 regarding reissuance be brought forward? And we are not recommending including guidance specific to reissuance or bringing that guidance in 56 forward.
Thanks, Emily. Board member responses to question 2. Diane?
I agree with staff recommendation. I think if the financial statements are reissued, the guidance in the ED could be followed without bringing the language forward from 56.
Thanks, Diane. Jackie?
I also agree with the staff recommendation not to carry forward the requirements of 56. I think that the approach the board has taken with this statement regarding the time period helps clarify, and I think that it will do, as we intended, a better job probably of identifying what should be included and what time period should be covered.
Thanks, Jackie. Chris?
I also agree with the staff recommendation, and to piggyback off of what Jackie said, I think that what's been proposed by the team and agreed upon and tentative decisions from the board really provides the appropriate framework, and that it's confusing when you layer on 56 on top of it. So to remove that, I think is most clear and easier to follow.
Thanks, Chris. Robert?
I agree with the staff recommendation agreeing with the comments of my fellow board members that the clarification on when the statements are available to be issued, I think is important and helpful in this instance.
Thanks, Robert. Jeff?
I agree, because I think to go down another path, we have to get into what is reissuance. And like the commenter said, reissuance because of not a revision, like, is it a reissuance when it's put in an OS, as opposed to is it a reissuance when they actually have to reissue it for some change that occurred? Not worth it to go down that path, especially in light of what Jackie said, where the actual date now is going to be in there. So there's no chance that I am looking at an OS and I'm confused as to what date the subsequent events have been looked at through. It's clear because it's in there. So I think that alleviates a lot of the concern and or possibility that it could somehow be misinterpreted. And because of that, I don't think it's worth going down these other roads of better defining reissuance or issuance.
Thanks, Jeff. Carolyn?
And I agree with the staff recommendation.
Thanks, Carolyn. I agree as well. I probably had comments back when we deliberated this the first time, but like my fellow board members, I think the way we've approached it can be applied when you issue financials again for some reason at a later date. You can apply the language that we have in there to that issuance of those statements. And reissuances can be caused by many different scenarios, whether it might be related to an offering document or a debt issuance or finding an error or whatever it is. But in particular, the auditing literature, I guess in particular, addresses what to do and how auditors are supposed to think about those situations. And I think if we were to try to define reissuance, it creates more confusion, or the potential, at least, for more confusion and conflict or inconsistencies. And we just avoid that, I think, we avoid it by not unnecessarily including reissuance in here, if I said the not uns the correct way. But I agree with the recommendation.
Okay, we will move into our third topic, which is the scope and applicability provisions. And maybe different than other projects, scope and applicability is often addressed first. We saved it towards the later part of the redeliberations because of the approach that's taken in this statement, which the approach that was taken in the exposure draft was that the guidance in a final statement would be applied in the absence of more specific provisions that address subsequent events relative to a particular topic or transaction. So it's helpful to have discussions on what the requirements are to then determine and reevaluate whether the scope and applicability provisions remain appropriate. Generally, how we believe that this will work is that if there's more specific guidance elsewhere related to subsequent events, whether that be in terms of recognition or disclosure, those more specific provisions apply in lieu of the broader guidance that would be included in a final statement. This is generally consistent with how Statement 56 has been applied in practice, but including the language in the statement is more explicit. So Statement 56 didn't explicitly note that the provisions should be applied in absence of other more specific provisions. Respondent feedback on these points. Some respondents agreed with this approach. Other feedback, I would say, falls into two buckets. So there were requests to clarify how information should be presented if the subsequent events information is duplicative of information required by other statements. And then there was a request to clarify how the proposed requirements interact with the post-employment benefit standards. So when we think about the first bucket, which is the duplicative information bucket, at a high level, because of the scope approach, the project staff doesn't believe that generally there will be duplicative information. In other words, if there are more specific requirements that address how to report, how to address a topic or transaction, how that should be accounted for when it occurs during the subsequent events timeframe, that more specific guidance applies. So in that way, the result is that there's not duplicative requirements that result in duplicative information. We do recognize that some respondents specifically pointed out certain items that are explicitly identified in paragraph 7A paragraph 7, that are covered by other statements, such as statement 69 or statement 100. But on this point, we'll note that those other statements, statement 69 or statement 100, apply when those transactions or events occur during the fiscal year. And so in that way, we don't believe that the information that results from the requirements of those statements are duplicative because they're related to different timeframes. Respondents also specifically highlighted statements 102 and the existing going concern disclosure requirements. With respect to statement 102, that statement already identifies the information required by that statement as potentially supplementing information required by others' statements. And so if the event that results in a risk disclosure is a subsequent event, that statement, statement 102, directs the preparer to combine the information in a manner that avoids unnecessary information. So it's framed as that information supplementing this information. The requirement in statement 102 is codified in multiple places, including the subsequent events subsection, and that's not proposed to be removed. So in the project staff's view, the relationship with 102 is covered through the statement 102 requirements and how those are codified. With respect to the going concern disclosure requirements, first, the project staff notes that the prevalence of those disclosures as a result of the application of the existing literature in statement 56 is uncommon. And so we believe that the potential for duplication is minimized by merely prevalence to start. We believe that governments can apply professional judgment on how to present information if a subsequent event affects a government's assessment of whether there's substantial doubt to continue as a going concern. We'll also note that the board has an ongoing project related to going concern disclosures, and so we believe that any potential relationships between a final statement resulting from this project and any requirements developed as part of that project would need to be considered as part of that project at that time that those requirements are developed. Taken as a whole, the project staff is not convinced that a broad general directive to combine information in a manner that avoids unnecessary duplication would be helpful. And we believe it may even raise more questions about whether and what circumstances could potentially result in duplicative information. And we believe that those circumstances are few. The board also already tentatively decided that it was not necessary to provide specific guidance on how subsequent events information should be combined with other related topics. So in a prior board meeting, this was really related to the format of the notes, and the board determined that professional judgment could be applied to determine whether the subsequent events information, let's say about debt, should be in a separate note or should it be part of the debt note. The board decided that professional judgment was appropriate there. And we believe that same type of notion would be applied, for example, in comparative statements, meaning that if the subsequent events information for a prior year were repeated, that could be presented along with the relevant information for that year. So when we're thinking about that statement 69 example, those pieces of information could be combined however the government best sees fit. So that's the first bucket. The second bucket related to scope and applicability is the relationship with the post-employment benefit standards. So on this point, some respondent feedback recommended that the board and the final standard provides specific guidance on whether a subsequent event that may be indicative of conditions existing as of the financial statement date, whether that type of subsequent event requires updates to the measure of the post-employment benefits liability. So first, the project staff notes that the pension and OPEB standards have specific measurement provisions and specific provisions related to the timing of that measurement, including the timing of the actuarial valuation, as well as the timing of the measurement of the net liability, and allows for the use of a measurement date, which is different from the government's fiscal year end. So to that end, you're kind of already in that there's other specific provisions bucket that this statement allows for. In addition to those specific provisions, there's also existing implementation guidance. Some of the implementation guidance, and it's produced in the paper, presents an example of a change of benefit terms that occurs during the subsequent events timeframe. And that implementation guidance explicitly indicates that that type of change is not a recognized event, and that it should be evaluated as to whether it constitutes a non-recognized event. And then if so, the subsequent event standards would apply. The respondent feedback also highlights a different circumstance than a change of benefit terms. One of the examples highlighted in the respondent feedback focused on new data becoming available during the subsequent events timeframe. For this point, the project staff believes that those specific timing and measurement provisions that are included in the post-employment benefit standards and the implementation guidance that was cited by the respondent constitute the specific provisions that would be applied instead of the subsequent event standards. So on balance, the project staff is not recommending and does not believe that explicit guidance or clarification on these points is needed at this time. And that'll bring us to board discussion question 3. Does the board believe the proposed scope and applicability provision should be carried forward to a final statement? And we are recommending carrying forward those proposed provisions.
Thanks, Emily. Board responses? Jeff?
So I guess in regards to the first point, the duplication, I guess I had to think this through. I think I understand the point that the disclosures for purposes of those other standards, right, are through a different time period than the disclosures for this standard, right? They could be about the same subject, right? So part of me initially was like, well, could there be some overlap there because they're about the same? Now, when you look at how we described this before, we talk about unnecessary duplication, right? So I guess I agree. It's not strictly speaking duplication, right? But there could be some interplay, I guess I'll call it, between something happened under 69 and then some subsequent event that's related to that continues. And so it's talking about the same thing, but it shouldn't be duplicative. So if we have some language here, avoid unnecessary duplication, I guess I got to a point like, what's it adding, right? It shouldn't be duplication. It's something else, and they can figure out how to make that interplay work. As it relates to the post-employment benefits, I thought about this one and I went back to those standards. And so here, if you interpret it, so the way the commenter is interpreting it, like, okay, I think you can get to where we want them to be for recognized events. So it's the non-recognized events that I sort of thought about some more. And when you go and look at what the disclosures under the pension standards, and I'm no expert on the pension standards, but I tried to go back and look at what those disclosures say, and they seem to suggest that the disclosure includes an amount if known. And it uses the term if known. And here we say, if you have it, if you have what you consider to be a non-recognized event, you have to make an estimate, or you have to make an explanation of why you can't make the estimate. So I sort of thought, like, are those the same thing? I sort of interpret, and this is where I'm interested in others, I interpret if known as if I have it, I disclose it, right? Versus here, I view it as if I have to make an estimate, I got to make an estimate. And I think that commenter alluded to that. The focus of their thing was more on recognized than the unrecognized. But I think they alluded to, hey, do we have to make an estimate of this amount? Whereas I don't think the current pension standards would suggest you do that because you only do it if known. Here, we're not doing if known. We're saying you got to make the estimate or you got to explain why you can't make the estimate. I suppose you could take the route of not making the estimate because it's not known or whatever. But I'm just interested, how do people view, am I viewing it right, that interplay? And do people have a view about that interplay?
Thanks, Jeff. Anybody have thoughts on that? Robert?
Well, I think the key is what you're talking about is if known. I mean, if it's known, then you look at the proposed language in the edits to the implementation guide, you would say you would have to evaluate it as a non-recognized event. So I think that's if there's a dollar amount that's known and they make the assessment on whether it's material, then we'd go to the guidance and say you'd have to evaluate that as to whether you should disclose it as a non-recognized event. I thought, I mean, I'm reading, I mean, I'm looking at the implementation guidance update. So
Yeah, I mean, because I'm thinking, and I don't know, Emily, but I'm thinking you're pretty well versed on the pension guide. So, but I'm just thinking that to me, it's coming across as stronger here than in the pension guidance. In the pension guidance, you would have a disclosure that would disclose the amount if known. And here we're saying to me, no. Even if you don't know it, you have to estimate it. You have to estimate it here or explain why you can't estimate it. That's a stronger imperative than under the existing pension, pension OPEB guidance. And so is that what we intend? If that's what we intend, okay, that's fine. If that's not what we intend, should we contemplate some sort of carve out and say what we really mean is what's in the pension guidance and that you only have to do it if known. You don't have to battle your way through an estimate under this standard or not. It depends on how I think, to interpret what we want to have here as it relates to non-recognized events for involving pension OPEB.
I guess I would say that maybe broadly, I agree that the words if known and the words that we have in the subsequent event standard, so disclose an estimate or the reason why an estimate cannot be made, are different things. But I think when you think about the specific context of post-employment benefits, I'm not sure that in practice that will make a difference, because being able to make an estimate in the specific post-employment benefits context hinges on the availability of that information, having the valuation. And so I'm not sure that while there may be a distinction in this specific context, it's almost a distinction without a difference is how I would approach the wording. I don't think that what we have in a final state, what we would have or what's proposed suggests that they have to go get an actuarial valuation. There's an ability to say why an estimate can't be made. I also will note relative to the respondent specific comments, which were talking about the availability of data, the passage of time, the experience gains and losses. I'm not sure that is really going to constitute a subsequent event that has a significant effect on the financial statements. So this point that is being raised about the difference would apply more specifically to things like a change in benefit terms, which I would suspect if benefit terms are being changed, there is some type of information available as to the effect of that.
So Emily, what you're saying is, in effect, you're going to end up in the same place because how these, at least the majority of what we're talking about, if not all of what we're talking about, you're either going to have to get a new valuation and you're going to have it or not going to have it. Or you've got a benefit term. You probably had some actuarial consultant tell you how much it's going to cost you by changing your benefit in that way. Even if it's not a full valuation, you've got some amount. And so if you have one of those two things, it would be known and you would disclose it under either place. And if you don't have one of those two things, then in either place, you're going to not disclose it and just either say why or maybe not say why, but it's just not distinction without a difference, as you pointed out, right? Jackie.
And thinking about it, I haven't read those, so I don't have context for it, but just off the top of my head, I kind of went where Emily went was you can't really make an estimate unless you have something that's known. So there has to be a known before you can make an estimate is kind of where I went. Now, that may not be clear to people, but it's kind of what Emily's saying. You have to have had an actuarial or you have to have some basis for making an estimate before you can make an estimate. So there would be something that would be known in both cases, it seems to me. But like I said, I haven't read these, so I haven't got the full context of it. But that's just kind of what struck me.
And any solution, as if you were talking about like a carve out, would be kind of making this somehow more complicated than if in substance you kind of end up in the same place. It maybe needs to be, even though we acknowledge the words are different. And I guess if we get a lot of questions about these words being different, then maybe we could issue an implementation guide or something that would help people understand what to apply. But
Because I think the question that you would, I don't want to put words in your mouth, Jeff, but that you would be concerned about us getting is like, do we have to do, is this suggesting that we have to do an actuarial valuation, right? And
Because it's not
I'm-
if known, right? So I
yeah,
interpret an if known.
I'm not
one way.
confident, or I'm not convinced we will get that question. I think, you know, the primary focus here was on the measure that's reported as of the fiscal year end. So the actual measure of the liability, rather than maybe the disclosure piece. But I think that if we got that question, it could be addressed through implementation guidance.
anybody
I mean,
else
we-
have thoughts for Jeff? Or-
Yeah, I mean, we did get the question through the comment letter. I mean, they did suggest, do we have to make the estimate? Right, so that's why I'm just saying, okay, it seems like, and it's from an entity
But
that sort
that's
of
in the
knows.
context of the experience gains and losses. So that's kind of a different, that is a little bit of a different nuance, where you would have to be evaluating that to be a subsequent event in the first place. Which I'm not sure that would meet the definition of a subsequent event.
But isn't that what that changed?
Like new data
Changed
becoming available.
question would suggests you have to evaluate it as a. whether
That's
it's-
in the
whether-
context of a change of benefit terms. So that is an event related to your pensions or OPEB. But the passage of time,
Mhm.
the which is what, you know, the changes in something like covered population, you know, we're getting a little specific here, but those are the types of things that that result in experience gains and losses, demographic or economic changes. Are those things events? You know, we could get down a path here.
maybe I'm not thinking about this right. But Jeff, I get your point. What you're basically saying is you would not want this project to create a bar that's essentially higher than what's in the pension standards. Or if we do, that we're consciously making that choice. I guess my thought would also be though, I don't think this standard would overwrite what's in those pension standards. Those pension standards just say do it if known. So I would look at that and say, well, I'm not sure what we say here would overwrite that. And all we have to do in that scenario, and then in the scenario she's talking about in the paper, is you have to disclose it if known. Because that's really what, I mean, Jeff, that's really what you're getting at, right?
But that's the
It's
interplay.
like that said if known, but this says estimate, if you can't estimate, tell why. It's like you don't want somebody to apply this criteria to that and therefore say, well, even if you don't know it, you still got to do it because this said you got to do it.
Well, that's it. That depends on the interplay between the two. And then
That's what-
I would interpret that because I'm a strict interpreter, right? I would say, wow, those guys are making me do the if known under 68 and they're making me do the estimate under statement, whatever, 105 or whatever, right? They're making me do both because they're not acknowledging the interplay between the two, right? Like, so what choice do I have? I have to do both.
Well, it wouldn't be both, right? Because 68 covers a different time and the related pension standards. So it's
Standards.
We're talking about two different things occurring at different times, right? They would have to be, we're not talking about the same thing.
Yeah, but it's the threshold or whatever, the standard, the level of what you need to disclose. Under 68, it would be, hey, I only just need to disclose if I know it. I don't have to go and figure it out. Here, I have to go figure it out to estimate it. That to me is different.
Yeah, I question. There's the other components, right? It has to have a significant for it to be a like there's several filters that you have to get to before you're even evaluating whether there is a disclosure. And I think that is relevant in determining whether we try to pursue or believe that there's a need for clarification.
And we also didn't put if practicable. We didn't raise the bar really high for the estimate. We gave them create an estimate or tell me why you can't. And so I think that back to if they don't have evaluation, if they don't have this other thing, they're not gonna, I don't believe they're gonna feel like they have to do it because we didn't raise the bar to practicable. So they would just then add why they didn't do it, I guess, because we gave them that out in the subsequent events, if they even get to that point.
Presumably that might be the answer we would give to somebody who called us up and asked that question, right? And maybe they don't want to, they view it as, I don't know, they don't want to, I can't do an estimate, but maybe they wouldn't have a problem with that. Just say, I'll take that.
I mean, I think
I'll take that lifeline and just explain that I couldn't do it because it's not known. I don't have the updated actuarial information, whatever.
But the whole premise of this comment is that it is known. The data is there, right? That's the whole premise. We have the information now. Do we have to incorporate it into the measurement? So
yeah, but you can extend that to other types of situations like you're talking about. Like, yeah, the commenter focused on but you could take it as to a change in benefit terms, right? The same principle would be at work. Right?
that is specifically addressed in the implementation guidance, the benefit changes.
I just think these post-employment benefits are so kind of unique and we have such specific guidance about timing and measurement dates and they're all dates. And so they kind of will live in their own world of that guidance and apply it. And this really doesn't affect them, but to the extent they kind of get worked up into it affecting them, I think we have an answer that says it isn't really requiring them to do anything different than they probably were considering under the existing pension or OPEB guidance.
I mean, I could feel satisfied with that conclusion, right? But I wanted to air out the difference, right? Because like, is it a conscious difference? And if we feel comfortable that, yeah, there's a mechanism that they could just say, and that's an acceptable outcome, perfectly acceptable outcome, then okay, fine. Then better than maybe the complexity of trying to.
I would worry
something
about
to
the
address.
complexity specific to those kinds of transactions layering into subsequent events. Rather than just, they kind of have a lot of very specific guidance And if they happen to have any questions, we'll deal with them. I don't think we have anybody's real response to this. We just talked about Jackie.
So I support the staff recommendation on this. Thinking about what Jeff has been saying, I'm always like, okay, let's clarify anything we can, but I really truly believe that if they're going to make an estimate, they have to have a basis, a known basis for making an estimate. If they don't have a known basis for making an estimate, then they're going to default to, I can't make an estimate because I have no basis, no information, nothing known on which to base an estimate. So I support the staff recommendation.
It's Jackie. Diane.
I agree with staff recommendation. I think Emily did a really good job of introducing all of the little details that were in comment letters and providing explanations as to why the existing scope and applicability applies and not having to worry about doing any carve outs. And Jeff's question, I think it gets really complicated. And I appreciate Joel's response because it does live in its own world. And, you know, you have those different dates going on with the actuaries and when you pull it into which financial statement. And I would hate to even try and roll any of that into this. So if we can resolve that with a implementation guide question, if it comes up, I think that's the way to go. But I think everything else, you did a nice job of explaining all of that and resolving that. I'm good with the scope and applicability provisions as they exist.
Thanks, Diane. Carolyn.
I agree with the staff recommendation. Also, a lot of what Diane said, as far as, Emily going through, well, this will be covered in this specific guidance. So there's no issues with being duplicative. As far as the issue that Jeff brought up, I do agree. If there's any hint of confusion as we roll this out and there's questions, I think it could be addressed in an implementation guide. So I agree with the staff recommendation.
Thanks, Carolyn. Chris.
I also agree with the what the staff recommended.
Thanks, Chris. Robert.
I agree with the staff recommendation as well. I appreciate the commenters' concern in bringing this issue up, but I quite frankly think it's not going to be raised in practice greatly. And as other board members indicated, if necessary, we can deal with it in a implementation guidance.
Thanks, Robert. Do you have overall, because you only count?
Yeah, I mean,
Talk about one.
I guess on the whole, I won't disagree with the recommendation. I guess I understand because when I was talking to staff, I was asked, well, how would you fix it? And it's not an easy fix, right? So, so acknowledging that, but at least we had an opportunity to discuss. I think having it not, I can't make an estimate be the outcome. That's an acceptable outcome. And, we'll see if we get questions and we can deal with it if we do in implementation guidance.
Thanks, Jeff. So I kind of said my piece on the pension and OPEB part, but on the broader or other kind of avoiding duplication, I almost feel like in some ways, like, isn't it at this point an overarching principle to not duplicate note disclosures instead of having to repeat them? Or have we created our own monster by, like in 102, by putting it in there? And now every standard we're going to have to say that. It just feels a little, I don't know. I get that some ways we created that monster, but it feels like this one in particular kind of says, hey, go look at other standards. So you're kind of constantly looking at other standards. And if those other standards talk about overlap, then I feel like we would be covered and we wouldn't need to have, well, don't overlap here, don't overlap there. I think this one as kind of a base for subsequent events that kind of fall through, consistent with kind of the description or the discussion we had last time about Train of thought just left. What did we talk about? The format, yeah, where because you could put it wherever. So if I issue debt, so I don't want to put it in the debt footnote, or I want to put it its own, kind of consistent with that. Just don't duplicate. Just put it where it makes sense to go. So that consistent with that thinking, I don't think we need to say that here either.
Okay, thank you. We'll move into our final topic for this paper, which is a follow-up discussion related to debt-related transactions. So the exposure draft proposed in paragraph 7A to explicitly identify debt-related transactions as non-recognized events, provided that they are significant and occur during the subsequent events timeframe. The board, relative to this, discussed broadly that should remain a non-recognized event. That was the tentative decision at a prior meeting during redeliberations. And as part of those redeliberations, the board also tentatively decided to clarify that phrase excludes or is not intended to include scheduled debt service payments. So that's one of the board's tentative decisions already. That is still anticipated to be incorporated into a draft clarification that the phrase debt-related transactions does not include scheduled debt service payments. In addition to that, though, the board met with GASB in July, and some member feedback that we received then included questions about whether that 7A debt-related transactions phrase should be broadened to include long-term financing activity, and another question whether it includes both short-term and long-term debt. So we wanted to bring that back to the board, make sure that we know what the board's intent is with respect to this phrase, so that assuming we move into a draft, that we can make the words say what the intent is. So the project staff's view with respect to broadening the debt-related transactions to include long-term financing activity, that would pick up things like leases, P3s, SPIDA. The project staff generally does not believe that broader category was the original intent when the exposure draft was developed. We'll note that the debt-related transactions items, so in leading up to the ED, the board had several conversations about what should be explicitly identified, what should constitute a non-recognized event, and that debt-related transactions item was in part prompted by the Crane Grant research. And that Crane Grant research was focused on, which was based on and focused on the continuing disclosures activity for municipal bonds. So it was a more narrow research that really prompted that recommendation, at least from the staff, to have that in the explicitly identified non-recognized events list. We do point out that even if paragraph 7A remains the more narrow debt-related transactions focus, other long-term financing activity, even if not explicitly identified, could still be a non-recognized event. So things like leases or SPIDAs or P3 we would still expect to be evaluated in accordance with what was proposed in the exposure draft as paragraph 7E, right? So anything that the government determines to be essential to a user's analysis for making decisions or assessing accountability. It just wouldn't be explicitly identified, or it's not currently proposed to be explicitly identified in that list. Ultimately, this would allow for some professional judgment in determining which of those long-term financing activities are essential, rather than saying that they always have to be disclosed if you have them during the time frame. And then with respect to the question of whether 7A was intended to cover short-term and long-term debt, the project staff believes that both were intended to be included, and that's hence why neither one was specified. So we are recommending that is the intent, that it's short-term and long-term debt. So like I said, today we're wanting to get the board's feedback on what's intended to be covered by paragraph 7A and whether it should be modified to either address long-term financing activity or exclude short-term debt transactions. And then from there, we'll be able to craft the words. But I do want to reiterate that we are still intending to, affect the board's prior tentative decision related to the scheduled debt service payments. And that will bring us to board question 4. Does the board believe that paragraph 7A should be modified to either 1, address long-term financing activity, or 2, exclude short-term debt transactions? And we are recommending that it not be broadened and that it include both short-term and long-term debt.
Thanks, Emily. Robert.
I agree with the staff recommendation. Initially, when I thought about this, I was going, some of the long-term financing activities could be very significant, perhaps material. And I understand the comments that we received from the GASB on this. And then I thought about a little further. I'm going, I would, in many instances, I would think debt issuances subsequent in the period that we're evaluating subsequent events likely would be far more significant than potentially individual leases or SPIDAs. When you look at the universe of a government, their existing leases and SPIDA obligations, that when they implemented the standards, it's changes since then. And yeah, there could be a circumstance where there's something that's material, and then 7E would take care of that, and they'd have to make that. So, but I think limiting it to the original debt related transactions as defined is applicable, and then a government can exercise judgment if they feel that there are other long-term financing activities that should be disclosed as non-recognized events.
Robert, what about the short-term, long-term? You think we
No
encompass-
distinction. No,
we encompass both?
we encompass both. Yes.
Thank you. Chris.
I agree with the staff recommendation. The short-term, long-term makes a lot of sense. I think that if you opened it up to all of the different types of financing activities, it's just a lot. And whether it's from a preparer's perspective and the wild goose chase hunt that you have to perform throughout your organization to really understand all of them, to get comfortable and representing to an auditor that, yes, I looked at everything and I'm good there, or from an auditor standpoint, looking the other way and trying to get comfortable. Hey, the universe is this big, broad universe, and I need to make sure that you covered it all. It just adds a lot of work for not a lot of value. And as you pointed out in the paper, we do have thresholds around materiality. So if in that universe, if it really is that big, that pervasive, that much of an event, then it could be captured otherwise. So the catch-all for the financings, I thought probably would do more harm than good and might impact financial reporting and our timeline, et cetera. So I agree with the staff recommendation.
Thanks, Chris. Jeff.
So I'll sort of provide a little bit of a counterpoint. So when I thought through this, I was sort of kicking myself about, when we got the comment from GASAC, I'm like, darn it, I should have thought of that myself, right? Sooner than this. But in thinking about it, 2 things come to mind. One, we know users care about this stuff. We know they care about, because some of these long-term financing activities can be significant. We know they care about it. I would argue that some of the research that we've done, if we'd been explicit in asking them, because we know we've heard from users, they treat leases like debt, right? That's how they do it. They think of them as the same thing, a lot of them. So I think it's important to users. And then we have 103, which acknowledges their importance to users, because we say in 103, give us a description of long-term financing activities. So by doing that, I think the board is acknowledging these things are important to users. And so to me, it would be a little bit of a disconnect to say, over here in 103, we want you to describe your long-term financing activities. And over here in subsequent events,
We don't. So I understand there is the catch-all of 7E. So I get that that exists. And I get that there's some backhanded mechanism that we can try to get comfortable with that sort of says we can go in the basis and sort of tell you in the basis that we talked about this and you really should do it under 7E. But to me, I think we should contemplate being more direct and saying, if we think they're important, I think we do, because what we said in 103, why wouldn't we think they're important here as a disclosure of a subsequent event that involves one of these things that we think is important.
All right. So as I think about, I appreciate the comment. It's a good comment from the GASB. Appreciate the discussion about it. Appreciate everybody's perspectives. I don't, I hope their governments are only reporting material leases and speedas and things like that. So I, it's not that it's not material. And I hope they have good processes for identifying all the appropriate subsequent events that are material or significant, I should say, maybe significant. So not explicitly including them to me is more back to when we started the project. We started the project with some research that showed debt that had been issued wasn't included as subsequent events. And even in 103, I acknowledge these other financings are important too, but in 103, we say debt, leases, speedas, like we separate, like debt is not the same thing. It's similar to these other financing activities, but it's not the same thing. Typically is the kind of highest priority over maybe some of these others, although I guess it depends on your arrangement. And to me, the 7E or what will be 7D or whatever, the other thing would catch these if they are significant. And I would kind of rather stick to our original objective and what the research showed us was missing with debt. And I don't think that in some way it makes 103, which lists debt, leases, and speedas different or separate as I don't know, conflicting with that in any way or saying that these other financings aren't important. Clearly they are. Anything that gets caught with 7E or 7D is important. That's why we have that specific reference. And so I wouldn't expand it for those reasons, not necessarily for materiality or hardship or whatever. That's why I would keep it focused. But I then, to answer the other question, also agree that it includes short-term and long-term debt. So that's where I am and why I am where I am on that. Carolyn.
I agree with the staff recommendation. When I also listened to GASB, I kept coming back to the conclusions that, it's not excluding, it's just not being called out like the debt is. So similar to what I think I heard Joe say, it's not saying because it's not called out that it's still not, evaluated. It's just, it's not explicit like, the debt. And I agree with also extending it to both short-term and long-term.
Thanks, Carolyn. Alan?
It's just a question that's rolling around in my mind right now. But if a government has a very obviously significant lease, new lease, it's not borderline. This is it's a brand new thing, and it's big. And it's clearly a big number. Is there a way our government could say that that's not essential user and therefore a subsequent event? Since we have a lease standard, could you rationalize you have a very large lease and under 7D, I think it's not essential, therefore I didn't disclose it? Or would it automatically end up being there and you're going to disclose it? Because I get 7A takes away the judgment. It's like, do it. There's no decision. But are we basically saying we don't need it in 7A because you're going to get to 7D, you're going to end up getting to the idea you have to disclose it anyways, just under 7D. And I say that because we have a lease standard. So that would kind of me default you to it's important. And so even if it's not in 7A, if it's a lease and it's a very large lease, you should always get to the judgment that's essential to the user and therefore disclose it. Now, maybe I'm just asking that question out loud. And if that's true, then what's the harm of changing debt to financing?
Right, because I seem to hear the argument that, well, they'll disclose it anyway. If they disclose it anyway, why don't you put it
I
7A?
don't know that that's the argument, though. I mean, I think I would say perhaps, Alan, in practice, that's how it could end up, but there is still professional judgment involved. And so if you're relying on 7E as proposed in the exposure draft, that would be, they should be evaluating those things in accordance with 7E. And I think that's similar to what we said, for example, about the natural disasters, right? We would expect them to evaluate the effects of those types of things. And if it's essential to the user's analyses for making decisions or assessing accountability, that's their professional judgment that would be applied. So I don't think, and I think we talked, as we did with natural disasters, we talked about clarifying, refining the basis discussion, because it did sound like in the basis we were saying this is the outcome that they'll always get to. I don't think that that's the appropriate rationale, because that's kind of against professional judgment. I think in practice they might get there, and that may, be a consideration, but the requirement relies on a determination by the preparer of if it's essential. One other thing I'll say is that I don't want to inappropriately conflate this with 103, because first of all, that again is a different communication method. So the purpose of MD&A is different, and specifically relative to note disclosures broadly, and then specifically to subsequent events. I think that those are distinct information items.
I understand what you're saying, Emily. I appreciate what you're saying. Just in my mind, determining whether information about a natural disaster is essential in my mind is different than determining whether or not a very large lease is essential. In one case, I have a standard related to leases. I guess if we're all sitting here thinking that if somebody had a very,
We
I
also
guess
have standards related to
we do. I'm just wondering, would we sit here and say that if someone had in my hypothetical scenario, if someone had a very large lease, would we think there's a scenario whereby they shouldn't end up disclosing it?
I mean, this is the danger of kind of the method of how we've chosen to craft the standard, was that there's some explicit and then there's some just use your judgment. Like, do we need that? Like at that point, if you kept doing that, you could do any significant event and develop the longest list possible, or we just revert back to what we did in 56 and just say, hey, just do it all. The point was, we kind of said there's some things that are just, for whatever reason, important enough. We want to explicitly identify them. And so it's, what items do you want on that list? So it gets back to, are financings important enough to be in there or not?
I get that and I understand that. I guess I'm leaning back a little bit on when you talk to a user, they don't distinguish a lease being a financing from debt. They're all debt. And so the limit's all debt.
I don't think that's true. I think they're all liabilities. I don't know if they're all debt. I think they say, well, debt and leases and their financings, they might be collateralized by certain things and certain things like that. But I think if it was all, I think debt and a geo bond means something different to them than a conduit debt or a lease or a certificate of participation. I think they're all obligations and they matter, but I don't know they all have the same priority.
I mean, I think for many users, when we're talking about SPIDAs and P3s and the way they're treating the information being provided to them now by this newer guidance, it's being treated like that. They put it into their debt metrics. They calculate their debt ratios, inclusive of bonds plus leases plus SPIDAs plus P3s. That's how my debt metrics get generated. Their criteria says that, So a lot of cases, I can't say obviously uniformly for every user, but for a lot of users, that is the way they treat it as debt.
Diane.
So Jeff, you've convinced me. So I agreed with staff recommendation, but after listening to what Jeff has to say and Alan too, I think expanding it to long-term financing activity, it doesn't hurt if we expect them to look at that anyway. So I would expand that. I would just leave the other debt activity, and not exclude the short-term debt transactions. Because I think the users in the pre-agenda research have indicated that they wanted that.
Is the board concerned at all that we don't have any feedback from preparers or auditors relative to disclosing, having this in the explicitly identified list? I would say that I don't think that that's how preparers and auditors interpreted the exposure draft.
Yeah, and I would have an extreme, I mean, just the same way when there was a misinterpretation or there was a perceived misinterpretation by a community, in that case, it was the user community with a separate project, we re-exposed, right? Because we thought there was a misunderstanding there. In this case, we're talking about the preparer and the audit community, which in some cases, based on this topic, I think would be even more significant. And I think that's what we will be talking about there, is a re-exposure for this issue, because I personally think it is that important. And financings and debt, I don't want to get into the tail wagging the dog for how people choose to use the information that's presented, but I think it's tough to, because somebody chooses to use something a certain way, then that means that our disclosures now need to be, or the requirements for disclosure need to be upped to a level that they weren't necessarily at before. And I don't see them as apples to apples when we're talking about financing activities versus debt activities and the things that would be captured in other standards because of significance or materiality. I think there are two underlying different processes, and I think that this is a lot more of a heavy lift. And to Joel's point, not just because it's a heavy lift, not just because it's a burden, but more importantly, because to quote Jeff, I don't think the juice is worth the squeeze. And that's the whole community's juice that they're getting out of it for the squeeze of the entire community there. So I don't see it as worthy.
And sort of to, I don't want to say backtrack on what I said, but the information is in MD&A, right? So if they're using it for other purposes, there will be significant long-term financing activity is presented in MD&A.
That wouldn't be subsequent.
It's through it's current known, right?
Using currently known facts.
Currently known facts, which would be through the available to be issued date after the issuance of.
Then I could also hit you on the hierarchy argument there, Emily. So
Well,
you're
it's for
saying
a different purpose, right? So this is for economic,
Yeah, I
historical,
mean, I
or
was-
operational context.
Right. I was gonna disagree with you before, because I agree that, the information is different. In other words, what's being communicated in MD&A is different than the information that would be communicated here. So I agree that that distinction has validity between those two communication methods. But what is being communicated, I think, should be the same. Right. So that's where I'm seeing it.
Robert.
Yeah. I agree with what the points that Chris was making, and on Alan's point, I mean, what popped in my mind immediately, I don't know why, but they had a stadium lease. Is that infrastructure or not? But if that was so significant, I would hope that the preparer and their auditors would say that falls under paragraph 7E. I mean, it has to. I'm just real concerned about the grind and the search through all the needles in a haystack on other things, particularly in the content when I look at, the issue in the pre-agenda research and the feedback that was received, I mean, that's pretty recent. And the issues seem to be debt. I mean, it's really debt where a 29% error rate comparing subsequent event disclosures to continuing disclosures and offering documents. I think we need to get debt, and the other stuff should come along if it's so significant under 7E. I would hope people aren't trying to hide this, hide these things from the users of their financial statements. But again, I can see the point. I mean, because I agree. I think users and analysts are equating other long-term financing activities to debt, but I'm still not there to include it.
And sorry, just to correct. So the significant capital asset and long-term financing activity and MD&A is for activity during the year, but under currently known facts, decisions, or conditions, lessee activity, actions taken by the government related to lessee activity is through the available to be issued date. So through the subsequent events timeframe, just to clarify.
Jeff?
Just a couple of points and then I'll be quiet. One is, I think I'm in agreement with Robert, but I don't think it's the case that it's, looking for a needle in a haystack. I think the lead into 7 is talking about these things that have a significant effect on the basic financial statements. So I'm not viewing it as the copy or lease is going to be disclosed as a subsequent event. This is going to be major activity that you're doing under your long-term financing activities. And then second, again, it depends on how you view debt. So careful to cite if you ask a lot of users, if you're asking me about debt, you're asking me about leases. You have to tell me, I'm not asking you about leases. I'm not asking you, do you care about leases as much as you do bonds? Then you'll get an answer that you can do something with. But if we just ask them about debt, a lot of them will think that it's inclusive of all the other stuff.
Just a quick question along the lines of the copier lease. When we're dealing with debt, it's kind of in and of itself within a bubble, right? Like you got your major debt and your issuances and reissuances that you do every year, and so it's in a bubble. But when you're dealing with leases across a large government, you have so many different types of leases that are occurring. Jeff, are you talking about a specific type of lease, so an equipment lease, or are we looking for this community to bundle together the different types of leases that might be across different transactions, different performance obligations, and to say in the subsequent year, there were these 3 that together are significant, but individually maybe are not from a lease standpoint?
I mean,
Because it's one line item, right? It's just leases.
Yeah, I mean, I think it's going to be subject to the interpretation of the government as to how they think about it having a significant effect or not. I don't think, I mean, if you were to ask users, in my opinion, you get answers that were all over the map, right? Some would say, I don't care about individual ones. And then you start bundling them and then it gets, yeah, sure. If you bundle at some size, it gets to be important, but I don't think that's.
But that matters though, right? We're talking about a line item here. That matters, and that really matters to, again, the level of work effort that we're talking about putting in. And so to leave it to the government's discretion, that's a key point that any government or any preparer really needs to understand. Are you talking about across my total organization that we're looking at me pulling together all of them because they're all one line item, or when you're talking about debt, it's fundamentally different when you're talking about bigger governments. I'm just trying to just understand what is the value in knowing that there's been a significant obligation of new leases or a significant transaction that is a finance related transaction above a certain dollar amount.
But if I'm thinking about this guidance appropriately, it shouldn't be bundling, right? These are events. It should be a happening, something that happens. So it should be the individual leases. I would hope governments wouldn't think they have to bundle all their leases that they've entered into that individually are a material or may not be material, but collectively they are material. So they're going to have to record them in the financial statements.
I mean, material, but maybe not significant.
Okay. I mean, that's splitting hairs, but sure. Yeah. But so I would hope that, but I still, I've been mulling. I certainly believe you. I've heard it too. I agree. If we didn't think users use lease information and speed information and they didn't think about it kind of like that, then maybe, we wouldn't have issued those standards. So I agree with you. They use it, but I went and looked at a couple of official statements, and in official statements, they really talk about bonds. They're talking about debt. They don't kind of bring in the leases and the speed is. It's in there. It's in the financial statements. It's kind of in the official statement somehow. But I think, I don't know, in my view, because of that, there is some hierarchy of bonds and debt being at least somewhat different than these other things, even though those other things are important to them too, and they factor them into the ratios or whatever. I mean, at least for these couple I looked at, they didn't, the official statement, they're highlighting bonds and debt service for bonds and those annual requirements and not these other things.
Well, those are more specific, right? When you're looking at a bond, right? You're looking at a particular source of revenue. You're looking at a particular thing. So you're looking at liens and looking at,
These
all
were
that.
geo bonds though, but.
Right. So I just think they're looking at it as a different exercise than they're looking at it when they're looking at, something like a financial statement, right? They have to understand how much debt is outstanding, how many other bondholders are there, this kind of stuff. So,
but I guess that's how I'm still distinguishing debt separate from these other financings in order to call it out. And why I get that they're similar and they're important. And that's why 103 does what 103 does, but they were different enough that I'm still okay with the separation. And but that's part of my thinking. Have we heard from Jackie? I don't think we've heard from Jackie at all. I don't remember where Jackie.
No, you haven't, because I've been listening and reading. And I'm glad there was so much talking because it allowed me to read and think about it a little bit more, because I agree with Jeff. I agree that these are important and they should be included. However, Emily's full stop on, do we have to re-expose this, that caused me to do some additional reading and some additional thinking. I agree that they're important, and I agree with Jeff that they should be included. However, I have a concern that they would be something that might be looked at a little different by the community if they had been exposed. We should have thought of this earlier if we wanted to do it, I think, rather than waiting until now, because we were developing both of these documents at the same time up until 103 was issued. 103 came out before this one. We had an opportunity to say maybe we should look at 103 and include it here in this. I'm looking at what has to be included in the note disclosures and things like that. And while I agree with Jeff, I'm going to stick with my original and say, let's go with the staff recommendation on this and debt transactions, short and long term, because that was our intent all along, that it'd be short and long term. It pains me to do this, but I think that it's the best way to do it right now, since it wasn't exposed and we didn't think of this until now. And I think, well, it's something that we can address in the basis maybe, or talk about in the basis, that if this is significant, it really needs to be included in E, and they need to consider that. I don't think that at this time it can be, I feel comfortable changing it.
Thanks, Jackie. You fully said your piece at this point?
Well, I guess not as it relates to the short-term debt part.
Okay.
And I agree that the short-term debt includes, so I disagree with the recommendation, but I agree with part of the recommendation.
Very good. I think we ended up at 5-2 on that part of it. Diane, you were with Jeff, and that was it, right? Everybody's fully fleshed out. All right. Thanks, Jeff.
And just to reiterate, that doesn't mean these things won't be disclosed, right? They will be considered, we would expect them to be considered as to whether they're essential.
And I would expect there to be a robust discussion in the basis for conclusions about the discussion we had and, you know, the consideration of long-term financing activities and where the board, you know, sort of how I understand we can't make guidance, right? But we can discuss what we discussed and how the board concluded that whatever words we use, many of these, the big, whatever important ones, whatever words we use would be considered for inclusion under 7E.
Yes, Chris.
So, just, and maybe this is Emily for you, how do we incorporate that into the basis in such a way in the communication when, again, it hadn't been exposed? And like,
Well, I think, you know, the basis is non-authoritative. And
Right.
so I think similar to probably the discussion I'm envisioning with respect to natural disasters, right? That was a conversation about should this be added to the explicitly identified items, and where the board landed on that was that no, it's not in this list, but it could still be disclosed if it's evaluated to be essential, and that would kind of be the same, I think, the same outcome in this
under that
case.
same kind of, even though
Yeah.
one was a before and one was a after, we could still kind of frame it in that same, okay.
Sure. Yeah. I mean, I think this can be, you know, based on stakeholder feedback. The board considered broadening whether debt-related transactions should be broadened, and determined instead that they would be evaluated under 70, something to that extent. Maybe a little more artful than that.
Yeah, I mean, it is a little bit of a tricky line to walk. We don't want to somehow say they're not important, right? Or that they're, you know, not financings and that all financings are important, but
And I think that's maybe key in talking about the approach, right? Like, we aren't saying that only the explicitly identified items are important. What the basis says right now in the ED was that, you know, part of the objective in developing the explicitly identified items were looking at things that apply to a broad and diverse, wide group of governments. Looking at, like, one of the objectives was to keeping the list concise, right? And probably we didn't talk about this as part of this discussion, and not trying to extend it longer, but, you know, when the board discussed removing the tax rates explicitly identified item, a lot of that was due to the variability in circumstances. And I mean, that also could be a factor with leases and SPIDAs and P3s. Sure, most governments have some of those things, but the variability in the types of those things, similar to the tax rates, may be a relevant consideration too. So I do think emphasizing that what's in the list, or rather what's not in the list, doesn't mean that it's not important.
not necessarily a prioritization. There was just specific reasons to call those out. All things are important that should be considered, right?
Yeah, I mean, my way of thinking about it, Emily, makes me feel better. Is like it's a subset of what's important. It's not the extent of what's important, right? We had to make some choices for these various reasons to why we focused on a subset of what is important, right? But that doesn't mean that is what is important, right?
I think it's that Emily. I always kind of think about Emily saying 7E or now D isn't really a catch-all. It's a fourth item, right? It's another item to be considered. It's just not a very explicit item. It's a broad item, right? It's not any less important or less prioritized than the other three. It's just broader in description.
Right. And I think with respect to some of the items that are explicitly identified, some of the reasoning behind that was a consistency across governments,
Part
or
of
I guess
7,
comparability.
7A, B, and C is real about taking away some of the discretion of deciding whether to do it or not because of the Crane Grant research and saying, nope, when you have these in their material, you do it. And 7E just says, oh, but by the way, it's not an exhaustive list, so therefore there's other things that belong in it. I mean, that's the way I've always thought about it.
But we can look at bolstering that discussion, what we're just talking about, sort of the premise behind the approach, right? And what the approach means or doesn't mean. Okay, that concludes paper 1. And I will turn it over to Brett for paper 2.
Great. Thank you, Emily, and good morning, everyone. The next topic we received feedback on is the effective date and transition provisions proposed in the exposure draft. Overall, respondents generally agreed with both the proposed effective date and the transition approach. Respondents noted that the effective date of fiscal years beginning after June 15, 2026 and all reporting periods thereafter provides governments with sufficient time to prepare for implementation. Feedback received related to the proposals was generally for clarification in the language used to describe the requirements. No specific concerns were raised about the proposed date and the requirements that would be effective or the transition methods themselves. As shown by the table in Appendix A, the proposed effective date of fiscal years beginning after June 15, 2026 and all reporting periods thereafter would not coincide with any other pronouncements. The project staff continues to believe the proposed effective date provides sufficient time for governments to prepare for implementation. Regarding the transition provisions, the project staff continues to believe that the benefits of requiring governments to assess whether they reported the subsequent events of prior periods consistently with the new requirements would not justify the cost. The project staff also continues to believe that applying the requirements prospectively at transition alleviates the need to evaluate any potential effects on beginning balances, thereby lessening potential implementation costs. Finally, the project staff believes that encouraging earlier application remains appropriate and that potential impacts to comparability as a result of earlier application would be minimal. Therefore, the project staff continues to believe that the proposed requirements should be applied prospectively. With that, I will pose board discussion question number 1. Does the board believe that the proposed effective date and transition provisions should be carried forward to a final statement? And the project staff recommends that the proposed effective date of fiscal years beginning after June 15, 2026 and all reporting periods thereafter, with or earlier application encouraged, and the proposed transition provisions that the requirements be applied prospectively be carried forward to a final statement.
Thanks, Brett. Board member responses? Jackie.
I support the staff recommendation of carrying forward the proposed effective date and transition positions.
Thanks, Jackie. Carolyn.
I agree with the staff recommendation, carry these dates forward.
Thanks, Carolyn. Chris.
I agree with the recommendation.
Thanks, Chris. Robert.
I agree with the staff recommendation.
Thanks, Robert. Diane.
I agree with staff recommendation.
Thanks, Diane. Jeff.
I agree as well.
I agree as well. It's all the same reasons we included them in the ED, and we didn't really hear much pushback on any of these provisions or that governments wouldn't have enough time. Highlighting that if you implement this early in 26, actually no standards to implement in 27. And for a lot of governments, this should be an easy lift to implement, right? So.
Okay, continuing with respondent feedback, some respondents requested clarifying language for the effective date and transition provisions. In regard to the effective date, some suggested removing the phrase subsequent events associated with from the proposed wording in paragraph 11 of the exposure draft. The respondents indicated that this phrase may create ambiguity about the first period to which the requirements apply. The project staff notes, consistent with other GASB statements, the requirements of the proposed statement would result in recognition or inclusion of note disclosures for financial statements of a particular fiscal year, and therefore believes that the typical effective date language may be more appropriate. Further, the project staff notes that the proposed statement would amend other areas of GASB literature that may not directly refer to subsequent events, but rather address the subsequent events timeframe. So upon further consideration, the project staff believes the effective date language should be structured similarly to other GASB pronouncements. Regarding the language for the transition provisions, one respondent recommended clarifying that Statement 100 does not apply. The requirements of Statement 100 for changes in accounting principles apply in the absence of more specific provisions. The project staff notes that paragraph B25 of the basis for conclusions of the exposure draft explains the board's consideration of whether the change in accounting principle provisions should apply at transition, as well as the board's rationale for instead establishing specific transition provisions. The project staff believes that the rationale provided in the exposure draft is appropriate and sufficient, and additional language is not necessary in a final statement. That brings us to board discussion question number 2, the final one for the project of the day. What modifications, if any, does the board believe should be made to the language used in paragraph 11 of the exposure draft? And the project staff recommends modifying the language in paragraph 11 to remove the phrase subsequent events associated with, as shown in the paper.
Thanks, Brett. Diane.
I agree with staff recommendation. If this was confusing for people, let's just go back to the standard language. They understand that, and we'll go with that.
Thanks, Diane. Robert.
I second Diane's motion.
Thanks, Robert. Jackie.
I support the modification that changed the wording. Makes good sense to me to be consistent. I also agree with the staff recommendation that we not provide a specific reference to 100, since 100 indicates that it's actually effective if there isn't some other requirement. So I support the staff recommendation on that too.
Thanks, Jackie. Carolyn.
I also support the staff recommendation for the reasons that my colleagues have expressed.
Thanks, Carolyn. Chris.
I agree with the staff recommendation.
Thanks, Chris. Jeff.
Yeah, I agree. I agree with the revision, and I agree that the interaction with 100 is working the way it's supposed to work. So we don't need to articulate anything further other than in the basis.
Yeah, I agree with the staff recommendation as well. I think we were trying to actually be helpful with the, tweaked guidance to deal with subsequent events. It did seem to create more confusion than it helped solve. So reverting back to the standard seems to work well, and I agree on the comments that others have made about 100. So agree with the recommendation.
Okay, so that concludes the papers that we have for the board today. Our next, according to the tech plan, our next meeting would be a pre-ballot draft. So Alan, I'll turn it over to you.
Thank you. Yes, so obviously that would require the board voting to allow the staff to move to produce that pre-ballot draft. That's okay, we can do that.
Yeah, please proceed.
Jeff?
Well, I go first now. I agree.
You do go first now. I'm gonna mess this up. Chris?
I agree.
Carolyn?
I agree.
Diane?
I agree.
Jackie?
I agree.
Robert?
I agree.
Mr. Chair?
I agree.
I think I got that order right, by the way.
Except for you, chair goes last.
Yeah, chair goes last.
Yeah, you got promoted. Jeff. That's
Okay,
impressive.
so in October, we will bring a pre-ballot draft of a final statement. I will just note that we've gotten through the majority of the respondent feedback, but there are some aspects of respondent feedback that focused on items that we plan to address as part of drafting. Some of the feedback is either related to specific language or terminology that we feel as the project staff will be easier if we have it in front of us to talk about those items. So anything that has not been addressed up to this point in terms of respondent feedback will be covered at the next meeting. Thank you.
Great. Thanks, Emily and team. Look forward to that. Good progress. And we will see you in October. With that, I think we could take a break as we transition to the next team and project, which will be infrastructure assets. So let's come back at 10:45. See everybody then. Okay, welcome back. Hope everybody had a good break, is re-energized. We're excited for our next project, which is infrastructure assets. Scott, I will turn it to you for our papers today.
Okay, thank you, Mr. Chair. We have several papers before you today. The first one is kind of a revisit again, just like last meeting, of the board's definition for infrastructure assets. A very short paper, just like it was last time. We tried to incorporate the ideas the board talked about last month, most notably which was, have a separate paragraph talking about, bringing in the footnote that infrastructure items can be, one asset or more than one asset, and then talking about the definition of component, as well as some changes in the first paragraph to the definition or the sentence talking about buildings that should be included with a network of infrastructure assets. So with that, I'll turn it over to the board for their comments if they have additional items they would like to talk about in the definition.
Thanks, Scott. How are we on the definition? Thoughts? Diane?
I like it. I went back and I looked at all of our notes from the last time, and I thought staff did a nice job of incorporating all of our changes, and I appreciate the editorial changes, so I was good with it.
You staying? Jeff?
So I had a couple of points. One, I did think staff captured a lot of what we discussed because I know we discussed it a lot. I think, to me, a couple of points. One was this concept of primary purpose. We talked a lot about primary purpose as well as integral.
For buildings, right?
For buildings, yeah. So, yeah, I'm mainly focused on the last sentence of the first paragraph, the whole building discussion. So, and I thought from our discussions that primary purpose, so I'm thinking, okay, primary purpose comes out, integral stays in, maybe they think integral. To me, integral and primary purpose is serving two different things. Integral is from the perspective of the asset, and primary purpose is from the perspective of the building. And so you're achieving two different things by having both concepts in there. So I'd like to discuss whether we think, primary purpose should or should not be in there. And I'm thinking about things, and I think some of the commenters talked about it, like a thing like a control room. Like if a control room's in a building and it's integral to the to the operation of the asset, but the control room is one floor out of 12 in the building that the government owns. Does that mean the whole building comes in as an infrastructure asset? If I have primary purpose in there and I think about primary purpose of the building, is the primary purpose of the building to be the control room for the asset? No, I got other stuff in there. So maybe that narrows the conception of what we think buildings should be. I had some other considerations about this concept that was in that last sentence of integral to the services provided by the network of other assets was a little bit confusing to me. I wasn't quite sure what that was getting at. I had suggested to Scott some notion that last sentence being something like buildings that have a primary purpose that is integral to the network of assets, but are only an ancillary part of that network should be included. So I'm throwing the only later on because I think there's a thing here, integral and ancillary are sort of a little bit opposite to me. So we need to create a contrast between those two notions. And I think throwing that only in there later on, but bringing in primary purpose, I think is important for us to get to the buildings that we think ought to be actually included in this definition. I have one other comment, but I'll stop at that one because the other one's much more minor.
Jeff, could you say what your change is once more?
Okay.
Where it is?
Yeah, sorry. So buildings that have a primary purpose that is integral to the network of assets, but are only an ancillary part of that network should be included. The main change in there is sort of, aside from the words, is the introduction of primary
Jeff,
purpose.
Can you say that one more time? I didn't key in on where you said ancillary.
Oh, okay. Buildings that have a primary purpose that is integral to the network of assets, but are only an ancillary part of that network should be included.
Very minor. Do you think you need network of assets, or could you say to the network?
I'm willing to, you probably could, right? Because I was like, should it be network of assets? Should it be network of infrastructure assets? Or can it just be network? Because you've sort of talked, how much do you need to relate it to the earlier part of the definition? I'd probably be okay with just the network.
So I like that. I didn't have a problem with what we said before, but I think your version is even more clear and straightforward. And then just my feedback on the definition, I completely understand and appreciate that the staff had incorporated every single one of those many edits and iterations that we had last time around. And overall, I think it's okay. I think the biggest thing I struggle with is the third sentence, like the crux, the middle of this definition starts throwing out examples. And I think we absolutely need the examples to get to the understanding of the underlying definition of what an infrastructure asset is. But I just struggle in my head sometimes with we're providing an example to give a definition, right? And then there's just, to me, something inherently a little off about, in order for you to define something, you have to put a definition in it. And it's so far, like it's in the, I don't think it should move anywhere. I think it's right where it needs to be, right in the middle, because I think that's how it flows. But that's my only issue. It's not a poison pill. I'm still okay with the definition, but that's what I was struggling with in my reading of the definition. But I do like Jeff's piece at the end. I think that clarifies all of those many conversations that we were having around those buildings and how they fit in and when they fit in. And I think that's good.
I mean, I think, Chris, you raised a good point about the examples being, so I'm sympathetic. I think we could contemplate maybe even at least after to the end of the first paragraph, right? Because does it help to throw in the examples there or not? I sort of, I struggle with that one.
Robert?
I'm a little dense here. Can you read one more time what you're suggesting?
Good, I worked hard at it. So,
Okay.
buildings that have a primary purpose that is integral to the network of assets, but are only an ancillary part of that network should be included.
Okay, good. Because you're getting rid of this of other, which was confusing too.
I didn't understand what other
Okay,
assets,
okay.
like what other
Okay.
asset are you talking about? I'm
Right.
trying to figure out the
Right.
asset.
Okay, you just said network. Okay, I'm fine. And then the two paragraphs are in the paper are separated by a footnote. I'm assuming that's just a formatting thing. I mean, they're intended to be grouped together. The two paragraphs are the definition as a whole. Okay. All right.
The footnote would be at the bottom of
Sure.
whatever
Yeah.
page it's
It
on.
was just, my
Yes.
brain kind of was like,
That
wait a
was just
minute.
formatting.
Yeah. Okay. All right. I'm comfortable with the revised definition.
Carolyn?
I was fine with the original proposal from the staff. I put down that it covered all the items that we discussed in previous meetings. I also like Jeff's edit with including the primary purpose, hitting on that. I'm still thinking about what Chris brought up, but overall, I agree with the staff recommendations, and I like the additional edit that Jeff is proposing.
Jeff, why I'm struggling. Overall, I agree with applauding the staff. They condensed all that long discussion and I think it's really good. And I was kind of okay with it. I'm contemplating yours and I like parts of yours, but why did you take the services out that are integral to the services provided by the network? I can't decide whether I think that's important or not. Like the idea is that what we want are buildings that are integral to the infrastructure doing what it was supposed to do, but not be so broad as to it be all about operating that item. In other words, I've got, the Whitestone Bridge in New York, or whichever one that is, the one that goes to LaGuardia, and I've got this whole building right next to it. I do. I'm on that bridge a lot. And it has this whole building next to it that houses, I assume maybe it used to be the toll workers and everything and maintenance people or whatever. I would not, to me, the bridge would still perform its service of getting me from one side of the sound to the other without that thing being there. But some might view it as integral. And so the service to me kind of brought in this notion of it's doing what the infrastructure was intended to do. Maybe it doesn't help. Maybe the problem exists either way, but that's what I'm worried about. Yours loses when you take services
Yeah, but
out.
I'm focusing on it, which I think was what Chris was talking about before, the focus on the footnote. Then the network of assets is comprised of all assets that provide a particular type of service. So I'm relying on, you got to get that, what we're talking about with network, and you look at that and the network gets the services in there. So do I need to repeat the services or provided by a network when I just told you I'm referring to the network? So that network means services provided, because we told you that in the footnote. That's how I'm trying to strike a brevity versus, getting the right points across. So that's where I think it can cover.
Okay. I follow that. I'm gonna mull for a minute though.
It's not committing.
Yeah. So Robert liked the amendment. Diane, you liked the amendment. Yeah, Carolyn did. Jackie.
Agree with what everybody has said about the fact that the staff did a good job of incorporating all of our ideas and suggestions and comments and yet another definition revision. But I like Jeff's amendment too on the buildings part. I had a problem with the word other assets. I was going, what the network of other assets? What a network of other assets, so I didn't get that either. So this eliminates that altogether. I think it does a good job of getting to what we're trying to get to with buildings, being included or not included. So I support the definition with the revision that Jeff has suggested. I also wouldn't have a problem with moving the examples to the end. I think that works for me too. And as has been pointed out, it's unusual to have examples in a definition, but I understand why we've got it in here. So
I think. Does the team have a reaction to Jeff's proposal?
Yeah, before we get to agreeing to I thought we were getting around adding more list of items. Why it was a network of other assets was added. The board did that last month so that buildings could not be interpreted as a standalone infrastructure item based on the next sentence too. And that it had to be, with other assets, the roads and things of that nature. And that was the key that kicked the stadiums out that were discussed last month. And that's why the board added that part. As far as the primary purpose, I don't object to it.
Because there might be an overall network, but there's a difference between the network of infrastructure assets and then this additional or other assets that, okay. I think you guys did a great job. I still like the revisions from Jeff.
Yeah, because I still think through the connection to network, you can't make a building somehow not be part of the network. That's not what we would be saying, right? It would have to be part of the network to be able to be considered here. Then we get into whether is it primary purpose, is it ancillary, is it all those other things that were.
But the first sentence of the second paragraph says a network may be only one infrastructure asset, right? So a network doesn't necessarily, it can still be one thing, like the stadium.
But can it really be, Joel, if it's an ancillary part? If you say it's ancillary, then it can't be its own thing.
It can't be the main thing.
Right? A stadium can't be if it's ancillary, right?
This is all.
So that's kind of where I got to when I was looking at the stadium or terminal. It can't be ancillary if it's the only one.
Do we need network then? I mean, services provided by other assets, would that? Because you do have the network, as Jackie just said, coming back to the ancillary.
Sorry, I didn't get that, Scott. What do you?
You would only refer to network in the could you only refer to network in the second half as the ancillary?
Right. I think that's what I'm just saying primary purpose is integral to the network, but are only ancillary part of that network. Right? Like you're relying on the connection to network, what network provides the services, and then the fact that its primary purpose has to be integral, but it's only ancillary.
I mean, where we got to last time was based on that, what you just said. A stadium could be integral, but it's not ancillary. A terminal could be integral and ancillary, or not. Yeah, like the terminal's not integral, so therefore it's not. So stadium comes out because it's not ancillary. Terminal comes out because it's not integral. In other words, the airport can happen with or without the terminal. That's the conclusion we got to last time, and that's why we got to these words. The first part took out the terminal, the second part took out the stadium, and that's why we needed both of those phrases, and that's why we landed there.
And that's why I'm suggesting primary purpose also helps, Alan, in my one floor of many example of trying to get those assets that we might not want to bring in the whole asset as part of the thing because its primary purpose is not to do infrastructure.
Did you have anything else, Scott? I think I'm good with Jeff's revision too. So that's all of us on that. You said you had something else?
I had one other item. This is in the second paragraph, and I know this comes from current literature, and I thought about this. That first sentence, a network of infrastructure assets may be only one infrastructure asset that is composed. My thing is, should it be, and maybe I'm overthinking this, but may only be one infrastructure that is composed. I would maybe change that is to a may be composed of many components. Because I don't know that we should suggest that one asset always has many components, right? I think we're putting the first maybe in there saying maybe one asset and it may be composed of many components. We're just making the point that there could be many components, right? We don't want to forestall the existence of a single asset that has one component being an infrastructure asset. And by having that is there, one could potentially interpret it that way.
So I'm going to, for this and the examples, fall back to at some point at the last meeting, as we were thinking about a lot of things, we said, maybe we just keep whatever it is the same as the prior and only change the really important things to change so as not to signify too much change from existing. And the examples being where they are is an existing thing. And so maybe that the examples should stay where they are following that logic. And I'm thinking, Scott, that sentence that Jeff just talked about the network is in existing literature too, right? Or am I not remembering that correctly?
It's in existing literature as a footnote now, yes.
I would just, I guess for me, I'm falling back on both the examples being in the middle and your wording here. Let's just, those changes aren't as important as like the buildings change. That was a big change and that was important and there was particular reasons. These seem like more tweaks and I would rather revert back to just, let's just keep it the same as current language. That'd be my preference, so.
Joel, you're saying Just trying to follow. You're saying that the only buildings that are integral to the service, you want to go back to that first?
No.
Oh.
I'm saying we changed that one. I'm talking about Jeff's network thing he just did
Oh, what it is.
with the, yeah. And moving the examples to the end. Those two things, I would just leave that part as it is because of that. The buildings change that Jeff proposed, I think we all agreed with, so I'm good with that.
I agree with you. Like I want to push it out of the, but I feel like that's where it should be. Like it makes the most sense there, the examples
Okay.
piece. So I agree with you.
Anybody else on, I don't know where everybody was on examples or at that, and also Jeff's second proposal. Jackie.
On the examples, I think it makes more sense at the end, but I'm fine with it where the way it is. I'm indifferent to that. However, on the is, I think it should be me. I think that's a big difference. I think that's a significant difference.
Diane.
I agree with what Jackie said. When Jeff brought this up, it seemed like we're saying that they have to be composed of many components with an is, and I would change it to maybe. And we added the definition of the components, so I don't have a problem making this change.
Robert.
I'm fine with examples staying where it is, and I'm inclined to support Jeff's change. I'm going back to the Whitestone Bridge, although let's just say it's the Whitestone Bridge in the town of Nowhere, Vermont. If it says is composed of many components, there's no toll building, there's no maintenance building. If it says is many components, is someone going to say, well, is that an infrastructure asset? So may provides that flexibility, in my opinion.
Thanks, Robert. Carolyn.
I agree that in the first sentence, maybe is a better indicator versus saying that it is. And then with the second issue that we're discussing, kind of indifferent, so I agree with leaving it where it is.
Thanks, Carolyn. I think 1, 2, 3, 4, 5 people were good with your change on that one. So do you have that one too, Scott? Are you okay with that change?
That's what the board wants. I don't think it makes a difference
Okay.
personally, but that, yeah.
Okay. All right. So we'll make that change too. Yes, Alan.
Yeah, bring up one thing, and Scott and I have talked about this a lot, but it's just one minor change is we're going to pull the word system out of this definition. I've done a lot of research, and when you look at what a transportation system is, that's elements, processes, management, people, schedules. It's the bigger, broader thing of a transportation system. So it includes people, management, processes. The transportation network are the physical things, the roads, the bridges, the tunnels, the connection points. This whole definition is based on it's a network. And so when you throw the term system in there, when the system is actually something bigger than the network, I don't think we ever intend that. I don't think we mean that. We just essentially take the word system out of here. System's not in here anymore because it theoretically be a thing bigger than the network. Not changing the words other than that one word. We just.
What do you replace systems with?
Right.
Replace it with network?
Yeah.
So we have a drainage network, water and sewer networks?
Yeah. Because I don't think we want to imply that we're talking about the people that go along with the transportation system or the schedule that goes along with transportation, right? We're not talking about the MARTA. We're not talking about the MTA schedule itself, which will be part of the system.
I guess I would just play a little devil's advocate on a sewer system. I feel like that a sewer system is that network of underground pipes, et cetera, that deliver sewage from one place to another. So does that confuse when you say a sewer network and everybody knows what a sewer system is? And I don't think that people think of sewer systems as the people and all the other things.
I would, I guess, argue the opposite. I hear and refer to people talk about the system. They're talking about the whole, it could be the whole organization. Like I have a water and sewer authority or whatever, and they call that the system, and they're talking about the whole organization. So, I mean, I guess I kind of agree with Alan in that we kind of say network, we use network. This is going to come up a little bit later too. So I didn't know if we were going to come back to this or do it now, but I kind of like you changing system to network almost because system is one more thing, right? It's, you know, we've got networks, we've got subsystems, we've got components, got classes, that's where it'll come up again. And I don't know, I kind of like the idea of just using that same term, but other thoughts on that, Jackie?
I'm fine with changing it to networks because we are talking about networks, so being consistent through is okay. I'm kind of like Chris. When I think of a sewer system, I think of pipes and things like that. But if the definition includes something other than what we typically think of, then I think we should align with the definition because there'll be somebody out there that says, when I looked up system, this is what it meant. Is that what you meant?
Thanks, Jackie. Carolyn?
And I have been using them interchangeably, which is probably a problem. So if being consistent and using network is a more narrower focus of what we're talking about, then I'm fine with that.
Thanks, Carolyn. Robert?
I'm fine with the change.
Thanks, Robert. Diane?
I like working more of the network end so people get that in mind. So I'm good with that.
Thanks, Diane. Jeff?
I'm fine with that.
All right. Another change approved. And I think everybody, when they were talking about Jeff's, they kind of said, we like the whole thing. So I think we kind of got approval of the whole thing. And then all the kind of subsequent small, or I won't say small, subsequent edits were approved. We covered everything.
I'll add one
ahead.
if we have. Just something going back and looking at it, and I think probably some board members have alluded to it in their comments, that looking at this, and I think maybe this is what they meant when we started adding the second paragraph. But as we talked last time, following up with network, as we have in some literature, saying things like as discussed in that next paragraph, things like that. The footnote as the first sentence of the second paragraph might make sense if we do something like that.
Say that again.
That we would say something, the first paragraph, infrastructure, capital assets are part of a network. And as we've done in other literature, as discussed in whatever paragraph 4, if this is paragraph 3.
I got you. I follow you.
And then paragraph 4 starts with the footnote and then adds the, defining network, and then adds the caveats for a network, like the first paragraph defines infrastructure and then fine tunes it for the buildings.
I'm not sure.
The change would be that the footnote is not a footnote. It is the first sentence. It's the first sentence of the next paragraph.
Yes, Jackie.
I totally agree with that because I don't think something that's vital to understanding what we're talking about should be a footnote. A footnote is ancillary information that you either need or you don't need. It's up to you to make that call. And this is important. So I totally agree.
If you agree, Jackie, would you agree? My only hesitation is we drop it to the first sentence of we lose the footnote. It's all hinged on that first sentence of the definition where we first introduce network.
He's going to connect it to the second paragraph.
I would put that as the second sentence of the first paragraph. In other words, right after you say network, then you tell everybody what a network is. You don't have them read the remainder of the first paragraph, not knowing what a network is until you get to the next paragraph, right? I'd rather have that connectivity, which I have through the footnote now.
Jackie.
I'm supporting Scott on this one because I think his connector that are part of a footnote as described in the next paragraph works, because then you're connecting the network first sentence with the rest of that footnote. And I think that works much better. So I support staff's
Oh,
recommendation.
so I
on
missed
this.
that. So there will be a footnote, but the footnote will say,
First sentence, the first paragraph will say a network as defined in paragraph 4.
oh, as defined in paragraph
So
4.
that connects you. So that's still connecting you to the first sentence. So you haven't lost the connection.
Yeah, then I would be fine with that. I didn't realize that was there. Sorry.
Robert.
So we'd end up with basically the way it reads now in the paper.
With the footnote
With a
sentence
footnote, with the
Yeah.
footnote, no longer a footnote, which I'm
being the
fine with
first
that.
sentence of the
Yeah,
second
I-
paragraph.
I-
And instead of a footnote
Note.
where the one is,
Right.
you have as defined in.
then I'm fine with that clarification. I think it's important to describe what infrastructure assets are clearly. That's the first emphasis, and then the remainder is illustrative of other points that we're trying to include in the definition. So,
Robert.
Can I just ask one last question? Because I think it's right, but it was different. So in that former footnote, now first sentence of the second paragraph, we remember we talked a lot about particular type of service, and we took it out, and then we put it back, and I was like, okay, we took it out, and I think, is it the reasons why we took it out no longer exist, and that's why it goes back? Or
This was I didn't like it. I tried to put like specialized in nature and whatever that phrase was. And then we kind of had this whole discussion. We didn't like it. We kind of went back and forth and ended up saying, this is existing literature. We're going to just keep the words the same, even though I didn't love particular type. But my change didn't really work. So we just went to, people were getting all worked up over what does it mean? And we kind of said, what means the same thing it means now. You don't kind of have a problem with that part of it now. So we stuck with the existing wording. That's how we ended up with it now being back in there as it originally was. Scott, agree with your change. I kind of like the change. So, Diane, you looked like you were going to answer, and then
I'm good with change, yeah.
thanks, Diane. Carolyn's good. Chris,
Which,
the
this is still the network one?
yeah. The
Oh, yeah,
footnote.
I was
Okay, maybe you already
Oh,
answered.
yeah,
I didn't remember.
I thought,
He was already okay.
oh, yeah.
I
was good
didn't
with that.
remember, but
Yeah.
okay. All right.
And one more thing, and only because it's our last bite at the definition apple, right? At least until
We're
we
gonna
get to
see
the draft.
wording in a standard section.
Yeah. But
And-
I just want to make sure that this, because we also, I know we talked about this, but in that second paragraph, that second sentence, the component definition. And I know we talked about that last time, right? And there's still part of me that looks at that. A component is a separate distinguishable part that has a specific function. There's no suggestion of significant importance, which to me sort of could be, do those guys expect me to break down my assets into every specific function in order to make the components? Or are they just talking about the big things, the big parts of this asset? And I'm not getting the big parts from that
I
wording.
think the big I think we talked about this last time. too.
Yeah.
The big comes in whatever the recognition requirements are that will say significant in relation to and has substantially different useful life. You'll get the big on the, you're going to have components. There are going to be lots of components.
Yeah.
But accounting wise, what you're going to have to break out is going to come into later description.
So
of
for
that.
purposes of this, we have it, it's pretty detailed, right? But you
Could
don't have to
be.
do any accounting off of this
Correct.
definition. It's when
Unless
you
meet-
use
yes.
this notion
Right.
of component later on in the document that
Right.
we'll start to attach words like significant or whatever.
Substantial, different
Substantial.
useful life.
Okay.
Yes.
Got it. Thank you.
Did you have anything else, Scott? We hit all yours. Any last? Going once, twice. Sold. Definition of infrastructure. Thank you.
Okay,
for
thank you.
working with us on that.
Okay. Next, we'll move on to paper 2 about some of the proposed note disclosures, preliminary view, proposed to eliminate. And for that, I'll turn it over to Joe to lead us through the discussion.
Thank you, Scott. All right, so the preliminary views included proposals to no longer require certain existing note disclosure requirements or encourage reporting of certain supplementary information related to infrastructure assets. The first of that was a description of the modified approach. Paragraph 115E of Statement 34 requires disclosure of a description of the modified approach if a government has elected to use the modified approach to report infrastructure assets. Paragraph 9 of Chapter 6 of the PV proposes to no longer require governments to disclose this information. Paragraphs 10 and 11 provide the board's rationale in this regard that a description of the approach they believed is general or educational information not specific to the government, in line with paragraph 10C of Concept Statement 7, but noted that the use of the modified approach continues to be a significant accounting policy for paragraph 115E of Statement 34. Some respondents agreed with the board's preliminary view that a description of the approach is general or educational in nature, while some respondents expressed belief that a description is still necessary due to the limited use of the modified approach in practice. The project staff acknowledges that the use of the modified approach is limited and that some users may be less familiar with it. However, project staff also notes that the modified approach has been in place for about 25 years and agrees that a description of the approach is likely general or educational in nature. The project staff does believe that the use of the modified approach is a significant accounting policy to be disclosed, as it represents a selection of an accounting policy for an acceptable alternative that affects the determination of financial position or change in financial position per paragraph 93 of Statement 62. So that's going to bring us to board discussion question number 1, which is, should the next due process document continue to no longer require disclosure of a description of the modified approach in the summary of significant accounting policies as currently required by paragraph 115E of Statement 34 as amended? And the project staff recommends that governments no longer be required to disclose a description of the modified approach in the summary of significant accounting policies, but that the project staff also believes that governments that use the modified approach should disclose that fact and which classes of infrastructure assets are reported using the modified approach.
Thanks, Joe. Responses? Jackie.
I support the staff recommendation on this. Putting in a definition of the modified approach is educational in nature, and that's not what we are to be including in this area. As you pointed out, the modified approach has been around for a long time, which means that there is a definition readily available out there. Google it, you can find it. For those people that are new to government accounting and don't understand what that means. So I think pulling that out makes good sense at this point in time. And I do agree with the recommendation too, that if somebody is using the modified approach, that is a significant accounting policy and continues to need to be disclosed.
Thanks, Jackie. Robert.
I would agree with the staff recommendation. I think removing the description is consistent with Concept Statement 7. My editorial comment on reading one of the commenters, I'm not trying to be disparaging, is read GASB 34 if you want to understand the modified approach. I I also would agree with that they need to be retained for those that use the modified approach needs to disclose that fact as significant accounting policy.
Thanks, Robert. Diane?
I agree with the staff recommendation and agree with exactly what Jackie said and what Robert said about that it's educational but those using it should disclose that.
Thanks, Diane. Carolyn?
I agree with the staff recommendation, for all the reasons that we had discussed earlier. The description is more educational. However, the use of it is a significant accounting policy, so I do agree with the staff recommendation.
Thanks, Carolyn. Chris?
I agreed with the staff recommendation and the election of that we should include the election of the modified approach. I think initially I wondered how much detail we should really go into around assessment periods, et cetera, when we really dive into what should be included in that summary of significant accounting policies. But ultimately, I was able to get comfortable and looking at the level of detail that I generally included in our ACFR in Delaware. I was comfortable that, you could figure it out and balance it. And it is appropriate to have that level of detail in there. And there's somewhat a level of professional discretion in figuring out what that balance is.
Thanks, Chris. Jeff?
I agreed with the recommendation that, a description is not consistent with concept statement 7. I agree that the governments should disclose that they're using a modified approach. My question was, after reading the analysis and thinking about it, was we were to cite under which section they're making that disclosure. Is it statement 34, this paragraph 115E, which talks about policy for capitalizing assets, or is it, as the analysis talks about, paragraph 93 of 62, which says, you have existing alternatives. Part of me says it could be done under both places. So would we specify, even in a basis, like, hey, you need to disclose that you're using the modified approach under. And to me, it's like, is it a policy for capitalizing assets? Well, sort of. Is it a choice of existing alternatives? Yeah. Would we be indifferent as to where you disclose it? You could disclose it under either thing and it would be okay. Or do we want to say there's a right place to disclose it under or not?
Do you have a response, Scott? I mean, generally, we don't tell you where to disclose it. It's just, these are the disclosure requirements. Whichever one a person kind of hit and said, this is what causes me to disclose it.
And I wasn't thinking necessarily for the standard, but even for the basis, as we talked about this issue, here's why we got rid of it, but we think it's important that they disclose. For basis purposes, I think we should say that disclosure exists under this standard, right? Help people out. But which standard would you pick?
I think it would be under statement 62 because it's not capitalizing, it's actually recognition of depreciation that it affects.
I mean, because you could take that interpretation, right? It's not a policy for capitalizing because I'm not capitalizing as a result of doing the modified approach. So that would make more sense to me, I think, to do it under 62, right? Okay.
I agree with the staff recommendation for the reasons Diane, Robert, Jackie, Carolyn, everybody said.
All right. Moving on to the second item, which is a policy for not retroactively recognizing infrastructure assets. Question 7.85.5 of Implementation Guide 2015-1 provides clarification related to the disclosure of the selection of accounting policies and methods from existing acceptable alternatives as required by paragraph 93 of statement 62, that a policy for not electing to report infrastructure assets retroactively, which statement 34 permitted for phase 3 governments, is a policy that should be disclosed. Paragraph 12 of chapter 6 of the PV proposes to no longer require governments to disclose that information. Paragraph 13 provides the board's rationale in that regard in its consideration of the time that has elapsed since governments would have had to have made this policy election. Some respondents agreed with the board's preliminary view due to the passage of time since statement 34 became effective. Some respondents, however, disagreed on the basis that infrastructure assets are long-lived assets and that some of those infrastructure assets not retroactively recognized are likely still in use. Project staff notes that this policy election pertains, again, to phase 3 governments, those with revenues under 10 million at the point of amending statement 34, which would have implemented statement 34 for periods beginning after June 15, 2003, meaning that those assets would be at a minimum 22 years old. We would note that while it's likely that some infrastructure assets not retroactively recognized are no longer in service, it's also likely that some are still in use due to the long-lived nature of infrastructure assets, and believe that for infrastructure projects completed, immediately prior to the effective date of statement 34, the effect on financial position or change in financial position could be significant. As such, project staff recommends that this policy election continue to be considered an application of the policy for capitalizing assets that is required to be disclosed as discussed in paragraph 115E of statement 34. Which brings us to board discussion question number 2. Should the next due process document continue to no longer require disclosure of a policy for not electing to report infrastructure assets retroactively at the implementation of statement 34 as required to be disclosed by question 7.85.5 of Implementation Guide 2015-1, and the project staff does not recommend that phase 3 governments that elected to not report major infrastructure assets with the implementation of statement 34 no longer disclose that fact as a significant accounting policy if those infrastructure assets are significant and still in use.
Thanks, Joe. Board member responses. Robert?
On this one, I do not agree with the staff recommendation. I'd support the preliminary views language to no longer require the disclosure that this provision of statement 34 only applied to very small governments, which likely have relatively low amounts of infrastructure assets. I think the rationale that was included in paragraph 12 of the preliminary views was very relevant relative to time elapsed since the governments would have had to make that election. And further, by the time a statement is issued, it will be at least 25 years since they had to implement statement 34. My question kind of, which is into the universe or the air, is sense on how prevalent these disclosures are in practice. Because if they're relying on the infrastructure assets are significant and still in use, it's hard to say. I mean, undoubtedly there are. But I also think it's a very small subset of phase 3 governments that might have fallen into that category where they made significant infrastructure assets just prior to implementing statement 34. So the circle of influence here is shrinking by the year, in my opinion. So I would support continuing the preliminary views language being carried forward.
Thanks, Robert. Diane?
So I do not agree with this either, and I recognize that this may be only a 1 or 2 sentence disclosure, but I do not believe this is essential. I went back and looked at the July 2024 paper with the staff survey of users, and the users weighted the average weight of importance for this particular item at 10%. And I also noted that there were no users responding to the PV who disagreed with eliminating this disclosure. So I do not believe it's essential, and I think it should still be eliminated.
Thanks, Diane. Jeff?
Might as well complete the one side of the room here because our views are unanimous. I disagreed with the staff recommendation. I was very much along the lines of what Robert was talking about. The other The other issue too is that I think Robert alluded to this disclosure will get increasingly stale over time. There is no mechanism that I'm aware of to sunset a disclosure. So we'd be putting in this thing until the next, until the next time, or, that we look at a statement, because we probably won't look at the statement for concept statement 7 purposes. So this will be out there for a long time. And if you look at the disclosure, it doesn't say the assets are if their assets are no longer outstanding, you don't have to do the disclosure. You have to just continue to do this disclosure in perpetuity because you made this choice 30, 40, 50 years ago, potentially. And so I just didn't think that it was, but what the users are talking about, didn't think it was valuable now. It would only get less valuable over time. So I disagree with the recommendation.
Thanks, Jeff. Chris?
So I appreciate the baton handoff from Jeff, and I'll just carry it forward another leg. And also disagree. I mean, I think Robert said it so well that I don't have much to add, but I echo Robert's comments. I just think it's stale, and it's such a small population. It's not relevant.
Thanks, Chris. Carolyn?
Because I wrote a big paragraph, I'll go ahead and read it. I disagree with the staff recommendation. Nothing discussed is new information that was not discussed when we agreed that this disclosure does not meet Con 7. The further we get away from implementation for phase 3 governments, the less likely this disclosure provides decision useful information. Not a statistical sample, but one of the field testers commented that most of their average lifespan of infrastructure is 30 years. Considering they are probably not a phase 3, I have a hard time with the premises that phase 3s are widely outside of the norm of that population. So because of all that and everything that my colleagues have said, I disagree with the staff recommendation.
Thanks, Carolyn. Jackie?
So continuing the round, I also disagreed with the staff recommendation for many of the comments that have been made. Plus, just knowing that you got old infrastructure asset that hasn't been disclosed isn't all that helpful when you don't know what value it is, how much life is left. You've got nothing really. It's just, yeah, they didn't disclose information. That's all you got. So I didn't see that as helpful at all, especially given the age of it has been pointed out and how it probably isn't that significant anyway at this point. So I disagreed with the staff recommendation.
Thanks, Jackie. So last time around, I took my one person, either a no bucket or in this case, it's a yes bucket, I guess, because I agree with the staff recommendation. I wouldn't take this out, but I will stay here in my yes bucket. I think, these assets, as the staff pointed out, I mean, these could be 50, 60, 70 years. I think the value is if one phase 3 government included them and one didn't, if you're comparing government to government, you at least know that. And maybe that's why the infrastructure numbers might be different or historical costs might be different. I acknowledge that the users wasn't very essential in the information we received, and that we didn't really hear much in the comment letters that changed that perception, at least from users. Although we did have a couple of commenters that kind of agreed with the staff's position and my position, but I will take my yes bucket and move along.
Okay, moving on to the third item, which is the carrying amount of impaired idle infrastructure assets. Paragraph 20 of Statement 42 requires disclosure of the carrying amount of impaired capital assets, including infrastructure assets, that are idle at year end. Paragraph 14 of Chapter 6 of the PV proposes to no longer require governments to disclose this information for infrastructure assets. Paragraph 15 of Chapter 6 of the PV notes that the board's rationale in this regard is it does not believe that the carrying amount of impaired infrastructure assets idle at year end is essential information. Some respondents agreed with the board's preliminary view for similar reasons, with some noting that they did not believe it adds value or provides decision useful information. Some respondents, however, disagreed with the board's preliminary view as they believed that the impairment and idling of infrastructure is something that users would want to know about. Project staff notes that paragraph 20 of statement 42 is for all capital assets that are impaired and idle at year end. Preliminary review is limited to infrastructure assets, meaning that that requirement will continue for other capital assets. The project staff is concerned as to the rationale to provide that idle impaired infrastructure assets do not need to be disclosed, while other idle impaired capital assets should be disclosed, as infrastructure assets generally have a more significant effect on financial position and changes in financial position. As such, project staff does not believe that the disclosure should be eliminated only for infrastructure assets. And that brings us to board discussion question number 3. Should the next due process document continue to no longer require disclosure of the carrying amount of idle impaired infrastructure assets as currently required for all capital assets by paragraph 20 of statement 42 as amended, and the project staff does not recommend that governments no longer be required to disclose idle impaired infrastructure assets?
Thanks, Joe. Before I feel like I can answer this, I'd like to, if the board will indulge me, have a little bit of a conversation or get board views on how to approach this and to kind of go back and think about where we've been with these things. When I went back and listened to the whole July 2024 discussion, when we went through all the potential note disclosures and we went through all the kind of essentiality information, the use information from the users that we'd accumulated, there were 4 really that for infrastructure, and that was all we dealt with in July 2024 was infrastructure. There were 4 that were kind of borderline, and the board even talked about borderline, and 3 of the 4 kind of came to this conclusion that the team did that, yeah, it might not be, it might not be essential, but would we really want it to be different than the other capital assets? And they weren't comfortable with that, so they left them in. And this 4th one, we kind of tipped over into enough of us said, let's just make it different. And we were just okay with it, right? And then in March of 2025, if you'll remember, the team while we were in the comment period, brought the rest of the capital asset concept statement research to us, because July 24, it was just infrastructure. March 25, it was everything. And we didn't make any decisions. It was like, let's kind of revisit this when we kind of come to this point of the project. So I'm asking, maybe there's 2 approaches to that, right? We could, and to me, it affects my vote here. We could, if we wanted to as a board, vote to expand the scope of this project for this small amount of capital assets to contemplate for these 4 disclosures, whether or not to take them out for all capital assets, including infrastructure, or we could take the votes the way we have, park these 4 on some list for another Con 7 project, maybe when we're done with the pension and OPEB research. If that results in a standard setting project, maybe we bring those in at that point in time, or an omnibus or some future project. We kind of park these 4 as kind of flagged for, they were pretty iffy, and the board kind of didn't take them out for infrastructure mainly because they didn't want it to be different from capital assets, and the scope of this project didn't include the non-infrastructure assets. So I guess I'm interested in the board's thoughts on which path or a different path to take to deal with these things that seemed like even a majority of the board felt like the Con 7 analysis showed they probably weren't essential for any capital assets, but capital assets aren't in the scope of the project except for infrastructure. Robert.
When you say the 4 are the subject of this paper, or
No,
that's
I should have mentioned them. This is one of the 4.
okay.
The other 3 were the financial statement classification of an impairment loss, the financial statement classification of insurance recoveries in an impairment situation, and the 4th one was not impairment related, but was the overall requirement to disclose the amount of depreciation charged to each of the functions in the statement of activities. Those are the 4. And at the time, back in July of 24, the board for those other three said, we don't really want them to be different between capital assets and infrastructure, so we just left them in. But it did not, if you go back and listen to the discussion, it was like, I'm not sure it's essential, but I don't want it to be different, so I'm not going to vote to take it out. This one tipped over, and I was one of the people that didn't on those three, but I voted differently on this one. So I was the maybe less logical one because I didn't follow the total logic. There was a point. I had a reason for that, but Jeff.
I did express in my comments to staff, and maybe Joel, you're going to catch me too, because you looked at what the prior board discussions were. To me, as I sit here today and I think about this, I'm like, hey, if we've made the determination it's not essential, we take it out. If there's a capital asset determination to be made, that'll be made in a future Con 7 project, right? So I think I've expressed before, I don't want to expand the scope here into capital assets, because then where do you stop the scope? And I don't want to have to deal with that. So I'm avoiding, but rather than wait and have these, what we consider non-essential disclosures continue to be made, we take them out for infrastructure. We note this somewhere like, hey, we're going to be looking at the rest of those capital asset disclosures for purposes of Con 7. We will deal with, the board will deal with the essentiality of those disclosures at that point.
Thanks, Jeff. So you're kind of answering the question too, plus my question. You essentially disagree with the staff recommendation. You would take them out.
Correct.
For infrastructure only and park the.
Recognizing that there is a inconsistency there, that's a Con 7 future thing.
Got it.
To deal with.
So you're saying you would remove, the preliminary reviews would stay. Okay. Without trying to prolong the conversation, is there a 30-second version of why this disclosure was considered not essential relative to infrastructure assets?
That was the feedback we got, right?
All that was kind of, we had this
Driven
on
by
paper. It was feedback from
feedback.
users
Okay.
on all the potential things we were considering. Those four in particular all did not score very well, did not have good rationales for how they would use it.
Okay.
And that feedback was against capital assets, not infrastructure assets specifically.
It was capital, if I'm remembering right, we did it for capital assets and that was in March, but then you also said, is it any different for
Exactly.
infrastructure?
That's-
And in July, you kind of brought that for infrastructure, although their responses weren't really inconsistent or different between the two, but we did make sure we broke them out as we asked, right?
Yes, they did not provide reason. Yeah, that was different for infrastructure
Right.
assets. Correct.
Jackie.
So I've got an issue with the fact that we are ending up with differences between capital assets and infrastructure. Just in June, we had the useful lives thing and whether people should go back and reevaluate useful lives. And we only did that for infrastructure because we didn't want to expand the scope for capital assets, even though it applies to capital assets too. So kind of at the point where I'm going, we're either doing it or we're not doing it. And if we're not doing it, then I'm going to vote for consistency on this kind of a thing because I don't like the inconsistency that's developing between different types of capital assets, of which infrastructure is one. So if we've got a project, I could consider maybe it, but otherwise I'm going to stick with the staff recommendation.
Thanks, Jackie. Chris.
I'm where Jackie is. In listening to your proposal, Joel, there's, there was something appealing about just waiting and handling it in a project, but the conflict of we could, to Diane's point, if we don't really believe that it's essential, why not just take it out right now? And so it's like hey, where do I stand? Trying to figure out which side I stand on. But I think ultimately I land where Jackie is. And I understand the conflict, and I have conflict on both sides. So it's like, just weighing the two conflicts. And in this case, the conflict that wins out is just go ahead and agree with the staff recommendation. And then we can work on a future Con 7 or whatever kind of future project to look at those disclosures as they relate to all capital assets and really figure out how to clean it up. And I do understand that it could be argued that, is this really essential that we're putting in right now? But to Jackie's point of the inconsistency that we're creating within an asset class is concerning to me.
Thanks, Chris. Carolyn.
Without having dates is when we would be able to come and look at the four items that we're talking about. I land where I believe I heard Jeff land, because this project was limited to infrastructure. We always knew that there could be some changes made to infrastructure accounting disclosures that will be beneficial in other capital assets, but because of the scope limitations, we wouldn't be covering those. So my response to staff was I wasn't sure if I agree with the recommendation. Hearing more of this conversation, I do not agree with the staff recommendation. I believe they're not essential, and why, if they don't meet our criteria, let's just go ahead and remove those disclosures.
Thanks, Carolyn. Robert.
Initially, I think I was in that camp and carrying forward without the background, which I probably should have gotten prior to today. But the inconsistency, if I've got to go between the two, the essentiality aspect, but the inconsistency noted by the staff, if we eliminated infrastructure from the statement 42 disclosures, particularly since the assets would be, I would think, potentially more significant than other capital assets that fall into that category, leads me to support the staff recommendation.
Thanks, Robert. Diane.
So I'm really torn because I went back and looked at the March data, and this particular one was like 12% that users were their average weight of using that disclosure. However, I don't like bifurcating this. I think it's confusing to stakeholders. And so I'm going to end up on the side of supporting the staff recommendation and not taking this out.
Where?
You are, there's 4 to leave it there. There's 4 to not take it out.
4 to not take it out. Okay.
Yeah, there's 4 people saying, do not take it out, leave it there and do it later when you can do it consistently.
And I did not hear much of an appetite to expand the scope of this project to deal with them. So I didn't. People didn't necessarily say that, but they also didn't say it. So so it sounds like it's a parking lot for later consideration. And I guess given that, I really, even though I voted maybe a different way last time, I kind of end up where like Chris is, right? I'm torn between. They kind of, and Diane, they told us this wasn't essential. It's kind of a scope thing, which is kind of an us thing, which bothers me. But in the end, it's probably, this is not a huge disclosure. It probably will make more sense to our stakeholders for it to remain consistent and then put it on this parking lot and deal with it more collectively at whatever future time we can on a Con 7 project. So I will agree with the staff as well. Thank you. We hit noon. So this is probably a decent.
You can use.
Oh, sorry. Okay, never mind. I thought we were in the long one yet. We're not to the long one yet. So let's finish this one out.
One day.
I mean, it might take a little bit, but I don't think it's gonna take too long. We'll finish it up. It's not gonna be a slam dunk, but I think we could do it in 10, 15 minutes.
All right. That brings us to our fourth item for this paper, which is the encouragement of supplementary information. Footnote 58 of Statement 34 encourages that governments reporting infrastructure assets using historical cost net of accumulated depreciation should present the information, or they're encouraged to present the information as supplementary information that governments using the modified approach to report infrastructure assets are required to present as required supplementary information, as long as they have the means to do so. Paragraph 18 of Chapter 7 of the PV proposes to no longer encourage governments to voluntarily provide this information as supplementary information. Paragraph 19 of Chapter 7 of the PV notes that the board's rationale in this regard is it is not aware of many governments providing this as supplementary information. Some respondents agreed with the board's preliminary view, with the rationale similar to the board's that not many governments do it. Project staff is also not aware of governments voluntarily presenting this information as supplementary information. Based on feedback received during the pre-agenda research, some governments also generally do not have complete condition assessments performed and documented to meet the requirements of paragraph 132 and 133 of Statement 34. The project staff is concerned, however, the message that would be sent to stakeholders, specifically users, in no longer encouraging governments to provide this information. The feedback received during the pre-agenda research indicated that the information presented as required supplementary information for governments using the modified approach was considered highly relevant for making decisions or assessing the accountability of those governments. And so the project staff is concerned that removing this encouragement may signal that the information is not as relevant. Project staff therefore recommends the board continue to encourage presenting this information as supplementary information, noting that regardless of whether the board chooses to do so, governments may still present that information voluntarily. Which brings us to board discussion question number 4. Should the next due process document continue to no longer encourage governments that do not use the modified approach to report infrastructure assets to present as supplementary information the same information related to infrastructure assets that governments that report infrastructure assets using the modified approach present as required supplementary information, as currently encouraged by footnote 58 of 34. And the project staff recommends continuing to encourage those governments to present such information as supplementary information.
Thanks, Joe. Jeff.
So I think this is a case where, as far as I could tell, everybody agreed with us. There wasn't a single commenter that disagreed with us, including users. So to me, there's no new information here that we're contemplating. We would just be coming to a different decision. And I don't necessarily like being in that position, right? We came out with a view and then all of a sudden we say, never mind, here's another. Based on what? Everybody agreed with us. We didn't get a single bit of information that was different. I do agree. That being said, I agree. Modified approach information important, and users like it. As far as we can tell, users aren't getting any of it because of this encouragement that we're making. So they're not losing anything as far as we're aware. And I think it sends a message that I don't like to necessarily have standards that are routinely ignored. I think that sends a message that sort of weakens us, in my view, because we are asking for you to do something that nobody does. So rather than have, this encouragement routinely ignored, I would rather not have the encouragement.
We encourage early adoption of most every one of our standards, and that's rarely done. I won't say rarely. It's not done very often either, but that's true. Diane.
I'm where Jeff is. The governments have way too much to do to go, oh, yeah, let's voluntarily dig out all of this information. I love the information with the modified approach. But nobody's doing it. So I don't know why we keep this language in there. So I definitely am on the side of removing this language.
Thanks, Diane. Jackie? Chris? Chris, you all raised your hand. Chris?
I also disagree. I just thought that it was a very thoughtful reduction and the burden that's going to be applied to some governments. I also think that there's somewhat of an arbitrary nature to it. So it doesn't push consistency. And while I understand, Joel, your point about when we recommend or encourage early adoption, maybe that doesn't completely too, because you have some years that are, but I just feel like in this case, it's burdening a group that just happens to have fit a certain fact set circumstance in that they have a system. And so they have more information. So now you have to report more just because you fall into this bucket. And so there's a couple of reasons why I just don't
There's no
agree.
have to here. It's just an
Well,
encourage.
recommend it still. Yeah, it's the encouraged. I get that, but it just doesn't make sense to me to pick on that group. Hey, because you already have your stuff together a little bit more, I'm gonna push you more. I don't know. I just don't.
I don't think we're picking on anybody. Like to me. So I mean, I didn't win this last time. My view hasn't changed. I think this is better information. Everybody kind of acknowledges better information, and then beyond that, I think as the staff point out, what message does it send for us to take it out? Almost, even though we know nobody's doing it. Okay, they're still not going to do it because it didn't change anything, except now the message is, we don't think it's that. It could be. We don't think it's that important, and so we just took it out. We're no longer going to encourage it. I mean, I see the other side. I do understand, but I would vote to agree with the staff. But I'll keep
That
my
can be
yes
discussed
bucket,
in the
but-
basis, right? I mean, you can discuss the importance of the information, but just the recognition that encouragement isn't the way to get it into the hands of users. So therefore, it's not proven. And I would say also there you could also make an argument there's inconsistency because we proposed it, got no feedback against it, and now we're pulling it back. That there's an inconsistency there.
I didn't agree with this in the first place, so I'm being consistent. Yeah, Jackie.
So I voted with you, Joel. I supported the staff recommendation. One, it's voluntary. As long as it's voluntary, we all know it provides better information. Will we get any more pickers? No, probably not anybody more that's disclosing. But one of the whole things we did with infrastructure when we tried to, make it easier for people to use modified approach, there may be people out there now that we're asking for more classes and more components that have some of this information that would like to disclose it because they think it has value. And I think we're giving them a way to do that if they want to. So as long as it's voluntary, I don't have an issue with it.
Thanks, Jackie. Carolyn.
I still disagree with the staff recommendation. No new information was presented and stakeholders agree with the preliminary views. So I'm still on the no bucket, which might be a yes bucket.
Jackie and I are in the yes bucket.
I will say in fairness of staff, I know it's not going to change the vote, but the staff's in the same place the staff was originally on this topic too. So like it's to the same point, you're
They're
where you
being
were.
consistent too.
Staff is being consistent too, that they would have left this too. And I kind of pushed that a little bit too, because I'm in that same boat if I would have left this too. So just to be fair to them, and maybe what new information, but they're being consistent where they were originally.
Change anybody's mind. Robert.
I haven't said anything.
Oh, I'm sorry,
I'm not gonna
Robert.
swing the vote either way.
I'm
Just gonna pile on.
sorry.
I'm ambivalent on it because I agree if someone wants to do it voluntarily, great, but I don't think our encouragement is doing much to encourage that. So I would carry forward the provisions of the preliminary views, which means I disagree with the recommendation.
Thanks, Robert. I'm sorry. It's close to lunchtime. I need a break, I think. I apologize for that. Could have made it 4:30 if I'd swayed you, but anyway. Everybody's final on that choice? Okay. Now, I think we can break for lunch. Let's come back at 1 o'clock, 50 minutes for lunch, and see everybody then. All right, welcome back. Hope everybody had a good lunch. We are continuing on our infrastructure discussion with the next paper. Scott, I'll turn it to you and whoever is going to be doing the next paper.
Okay, thank you. The next paper is a discussion only paper. There are no board questions. And it's a summary of field test staff performed on the note disclosure proposals, the new note disclosure proposals and the preliminary views document. Field test goes through, tries to understand what issues, if any, governments had in applying the provisions, the costs and hours that it took them to complete those provisions, things of that nature. And so we ended up with only 12 completed field tests, although we had 22 governments that submitted the field test questionnaire back to us. We actually didn't just split it as we normally do and provide information or comments from the incomplete field test. We actually split the incomplete field test into a second subgroup because there were half of those 10 that submitted but didn't complete the field test. 5 of them did everything but the maintenance note disclosure. And that one, those governments said they were not able to complete, but they did provide feedback on those and the others. So as you go through that document, when we provided comments on each of the proposed disclosures, we separated it into those 3 categories. First, from the governments that completed the field test. Second, comments from the governments that completed all but the maintenance expense. So for all but the maintenance expense disclosure, they would have completed that document. And then we also included, if they were provided, comments from governments that did not provide numerical information on the field test, but did, answer some of the questions. And then, as I alluded to before, at the end, there's some charts for those governments that did complete field test, how much time they spend now on their capital asset footnotes, how much time would it take them, or did it take them, to complete the field test for the change in the note disclosures, and what they anticipated the ongoing time they would need in the future. As with most proposals, some of the proposals are mostly ongoing costs. So generally the future is equal to or less than the initial implementation year. And then also, in addition to time and effort by the government itself, we also ask what additional outside costs they expect to incur, if any, and that information was provided as well, what they thought initial plus ongoing. That's all I have. I'm happy to answer any questions the board may have.
Scott, first, thanks to you and the team for doing it. I think it certainly kind of helped inform some of my thinking. It validated some of my thinking. It helped me kind of corroborate or not maybe some of the comment letters. So it was certainly an additional beneficial part of our input. I know it took you guys some time. Appreciate you taking the time to do that, and appreciate the governments that participated. It was very helpful and nice of them to do. So any questions for Scott on the field tests? Kind of the results get incorporated in a way to feedback on some of the next paper, but it does not look like we have any questions on that, Scott.
Okay. We'll move on to the next paper, which discusses those proposed new disclosures that the board had in the preliminary views and the feedback from respondents during the due process timeframe. We're basically going to go through 6 different sections. The first 2 are going to be general requirements that were at the beginning of the chapter on note disclosures in chapter 6 that apply to all or more, prior, and then all disclosures related to infrastructure assets. And then the last four sections basically are the four new note disclosures. As we go through them, obviously, the consideration or I should say threshold that the board has established for inclusion is that they are essential to users in their decision-making process and assessments of accountability. As I go through and talk about each one of them, I will, be highlighting the, lack of a better term, the pushback or the commenters that disagreed with the board's view or proposed or asked or proposed additional items. But there was general feedback overall related to agreeing with the proposals, as well as each individual proposal. There was feedback from respondents that agreed with the individual proposals, and those agreements generally almost always listed the reasons the board cited in the preliminary views. So for our discussion today, we're not going to concentrate on those. So going to the first preliminary view in that chapter, and it's related to carrying forward, the current requirements, with the exception of what we talked about earlier, right before lunch, of the ones, to no longer require that, if it was a capital asset specific note disclosure, that you would still apply infrastructure, if that note disclosure would still apply for infrastructure assets. Those note disclosures generally come from Statement 34. They're the main one is the schedule of changes in long-term liability, or schedule of capital assets, of which infrastructure assets was part of that. And other than general feedback, there was no, in support of the provision, there was no feedback specifically disagreeing with this specific disclosure. And so for those reasons, and for the reasons cited in the preliminary views, that to continue carrying forward those disclosures, project staff recommends those go forward to the next due process document.
Thanks, Scott. And you mentioned this, but I'll highlight it as well. It is important to note we went through all of these individually back in July of 2024 based on research and outreach you guys had done. And we had all this investor input that led to the board saying all of these that move forward, or the new ones that we'll talk about later in the paper, all met the essentiality criteria in the board's judgment in July of 24. That's why we brought them forward. And then, we consider all the due process, which includes that outreach that we did. And so we did get a lot of user comment letters here. We don't always necessarily, but it's important to always remember that that outreach is part of our due process and the input into the projects. It's not just the comment letters. And so, we think about all of that together, even if the focus, as you mentioned, of the paper is really just talking about the comment letters, but they're all here because we already said they were kind of essential. And now did we get something that changed our mind, or is there a cost benefit decision? That's kind of the choice of where we are now moving forward with these. But having said that preamble, board member responses to question 1. Jackie.
I support the staff recommendation. I continue to believe that we should include the required note disclosures that we've had before for infrastructure, except for those that we've already discussed before lunch.
Thanks, Jackie. Carolyn.
And I also agree with the staff recommendation for the reasons that they presented in the paper.
Thanks, Carolyn. Chris.
I agree with the recommendation.
I was all choked up about it. Thanks, Chris. Diane.
I agree with staff recommendation. The result of the pre-agenda research and user outreach indicates that the current disclosures are still meaningful and have an effect on users' analysis.
Thanks, Diane. Robert.
I agree with the staff recommendation.
Thanks, Robert. Jeff.
I agree. I think there's going to be, so in concept, right, these existing disclosures exist. Will infrastructure assets continue to be part of them? I agree. I guess we'll have some discussions later on, and I'm not sure quite where, like, or maybe later on, if we move forward with some of these disclosures, like how they get incorporated, like how because we got some questions from commenters, like, for example, the capital asset roll forward are you going to have infrastructure if it's by major class? How is that going to fit into the table as currently constructed? And we think about that, and those are more executional questions, right? I view this question as, should capital assets continue to be done the way they were done before in the roll forward table? My answer to that is I agree.
Thanks, Jeff. I agree with the staff recommendation as well here, based on our prior essentiality, with the exception of the things we talked about before lunch.
Okay. The next section's on the proposal, or I should say the preliminary view in paragraph 7 of chapter 6, which dealt with the note disclosures. And that was a preliminary view that infrastructure asset disclosures should be, I'm sorry, the disclosure should provide the information separated by major class related to infrastructure assets. As far as feedback that the board received related to that proposal, there were several governments that disagreed because they did not believe that governments necessarily had that information, or at least currently do not have it readily available, because when they implemented Statement 34, that was not specifically required. And infrastructure assets was, as the board has previously discussed, listed as an example of a major class of capital assets. There was also some feedback from respondents that requested examples of major classes of infrastructure assets, and what the board was looking for as far as what the preliminary view, what the board was expecting to see from that preliminary view. There was also feedback that said that, even though it said that, generically in the preliminary view should, all disclosures, they wanted to make sure that applied to all disclosures related to infrastructure assets. Because as you know, later on, there's 4 disclosures we'll talk about, and the 2 that are not in the summary of significant accounting policies specifically stated that the disclosure should be by major class. And then the other feedback was some wanted to make sure that the proposal was not going down in major class, was not considered to the level of what the board has talked about as a component unit, that they were not expecting these infrastructure asset disclosures to be by component unit. And then, as we'll have in some other, I think each of these, there were also respondents that requested the board specify this only applies to material amounts. As far as, having the information or not, the staff recognizes that some governments may currently not have that information, but the project staff believes that that information is attainable when the government capitalizes an asset. It should know the type of asset it is. Maybe currently they are using a bucket of infrastructure assets, and they would have to change their recording in some manner to, instead of have infrastructure assets, have multiple types of infrastructure assets. And so when they make that capitalization, break that out in that manner, but that information should be available, or at least available to the same extent it was when the government implemented Statement 34 and estimated what the amount of those amounts were at transition. As far as the respondents that talked about coming up with specific definitions or examples of major classes, project staff believes that examples could be provided. We would propose using the same ones that we've talked about this morning in the definition of infrastructure assets. And, probably even instead of saying examples of infrastructure assets, I guess we would propose potentially to say examples of major classes of infrastructure assets in that definition. So you don't really just list them that they're infrastructure assets that come down below, that they're major classes. As far as applying it to all infrastructure assets, the project staff believes that was the board's intent. And we'll make sure that, you know, in however this is worded in a due process document, that, you know, when it is worded in standards language, that should be understood. As far as going down to the component level, the project staff believes that, you know, the preliminary view said it was to major class level. We do not believe that goes down to the component level. And so we do not think that anything needs to be done on that unless the board changes its view at some point. And as far as materiality, project staff believes that same with all requirements, that they should currently only be applied to material items. We're not proposing that this is something to consider here, but you know, obviously the board sometimes uses the word significant when they want to highlight or remind preparers that you know, a proposal or requirement should only be done to material items. So with that being said, you know, project staff believes, as I said earlier, the information is available. Users showed during the pre-agenda research and the subsequent outreach, they found this information valuable to them. And so the project staff recommends that infrastructure assets disclosures be provided separated by major class of infrastructure assets as discussed in question 2 staff recommendation.
Thanks, Scott. I'll start. I'm going to tweak it a little bit, maybe, or at least propose to tweak it if people are interested. Generally here, I agree there are costs here. I think the field tests and the comments kind of showed that there's going to be some cost depending upon what your government has currently done. You may not group them this way because we didn't require it before, but I do continue to believe, and I think the users, you know, supported this, that this breakout, at least some breakout, is a significant improvement rather than just having one infrastructure number that could be all these things together. It could be a huge number. But I do think we heard from both commenters and field tests, part of the cost was it's not as easy to understand or figure out how detailed we as a board expected it to be, down to components or whatever. We said major classes. So I think examples is probably something that is worthwhile. I have, ever since this morning, struggled between, is it the same examples and how does that look in the standard? And maybe we just figure that out when we get it in the words of the standard, but because it seemed a little redundant, but it also would be seem weird to do something a little different. But the bigger tweak I would like to propose, and I alluded to this a little bit earlier, we have networks and we have subsystems and we have components and now we have classes, and what does this all mean? And I wonder if we keep major classes at the capital asset broad level, and when we get to infrastructure, we call it major networks. That way we're using this same component, as the examples as adjusted earlier were water and sewer network and communications network. And I don't know what roads and bridges were their own thing. I don't know what we exactly do with that, but you could call road network or bridge network or transportation network or something. But I think if we use the term major networks and then give examples, I think people will understand that this is a pretty high level. And yes, it still might require some breakout, but we won't have all the confusion and people trying to go down to a really low level that I think was part of the concern that we heard from people. And so generally, directionally, I agree with this breakout. I just would be interested if board members think major network or something like it might be better than major class. Jeff.
Just one one initial question for you, Joel. The way we are thinking about class, right? I think you can have more than one network in a class. I think you can have different types of roads, a network of roads that's my secondary roads, the network of roads that my highways. So if you agree, would it be something then, is it type of network? I'm just wondering like how, first of all, whether you agree that you could have more than one class doesn't equal network. And so would we have many more columns potentially because you have more networks than classes? And is that what you're envisioning, or are you sort of envisioning, no, it's really about combining the, whatever we want to think of a class as, transportation is the class of transportation? Is that what you're thinking of, or something more narrow?
I think I wasn't totally sure what class meant, although my vision was the larger thing. And when I say network, I mean it to mean that same thing. I'm just trying to be, to me, more specific. And so that's why I think the examples would be important, because the examples would stay at road network or transportation network. It wouldn't show an example of being drilled down to the different types of roads, because that's not what I envision when I say major networks. I mean the more broad, almost functional expense categories: transportation network, water and sewer. The examples we used in the definition. Diane.
So I had kind of the same thought because I think we need to pull in the term network and all of this. I am concerned that if we just change this major classes to major networks, that there are, like Jeff had said, that there's going to be multiple networks within a major class. And so like if you had a network of interstate highways and then a network of the feeders, the other major, thank you. And that's what I'm trying to say. That I would see those as separate networks, but it's all under the major classification of networks of roads. So I guess I would see a different umbrella, but the networks are all organized under those umbrellas of major classes. So I think we're saying something a little bit different, because I'm thinking the networks have to be all gathered together in similar networks, because you're going to have, well, you definitely could have multiple networks that are similar, but they're not all going to be like a network of all of the highways, because you could break it down into something smaller. So I don't know if that's making sense or not, but but I think using the word network is going to be really important.
It makes sense, Diane, except that, how you envision class might be different. Like you're envisioning network different than I'm envisioning network, in the same way we might be envisioning class different ways, or other stakeholders might be envisioning class different ways. Because I would argue those aren't all individual road networks. A network of interstates or a network of feeder systems, they're all one big transportation network. They're all connected to each other. And so I would argue that is one network, but you would argue it's multiple networks.
Right.
And so I guess my proposal was through the examples to show the higher level as kind of what we meant. And so it wouldn't go down to that level, but if we have a different word or phrase to use, I'm open to it. I just was trying to use network for the same reason you'd like to use network, but I don't want it to be lower. So,
and I think if we use it instead of major class, I think we need to go back and revisit the definition so that we're identifying that network as meaning major classes. So that's where, to me, there's kind of a disconnect about multiple networks within major classes.
I was going to say something, but I got a question. I think what Joel is saying is, in the concept of infrastructure, network is equal to class. Like the classes of network infrastructure assets are networks.
Then I think we need to put that in the definition, because we've got this term network that's really not defined out there in our definition.
Say that again.
So if you're saying that a network is the same as a major class, then I think that we need to indicate that in the definition where we explain that an infrastructure is part of a network.
That is in the definition.
I mean, it says a
The
network.
infrastructure is part of a
A
network.
network is a network of assets is composed of all assets that provide a particular type of service for a government. And I
Right.
would argue transportation and roads is all one service. It's not that the feeder roads are providing some different service than the interstates or the whatevers are. And if I have water treatment plants, just because they're not all connected to each
Mhm.
other necessarily, because one serves this part of town, one serves that part of town, they're all one network of water and sewer assets.
And I'm fine if we go down that road and we have networks mean the same as the major classes, but I think somehow we need to explain that, or are we removing the words major classes
I'm
entirely?
removing the words major classes entirely from infrastructure. There's
Right,
major
right.
classes of capital assets,
Right.
of which infrastructure is a
Right.
major class. Within infrastructure, no more major classes. It's we disclose by major networks.
It's only networks.
That was my proposal.
Okay.
So I'm
and-
not taking, I'm not using class anymore.
And
And then we'd have
I'm good with
examples.
that. I just am wondering if we need to somehow amend that in the definition so that people understand that it's that broad. It's not just a group of infrastructure assets that are similar, and they could be, they're like my example, that they could be several different types of road systems.
Well,
Instead, it's all roads.
it gets tricky, right? Because, and I didn't say this earlier, but it's going to come now. I might as well say it. Remember, we talked about systems are bigger than networks. Folks would say it's a transportation network, which includes all roads, all bridges, all tunnels, all airports, all railroads, all everything. Components would then be roads, bridges, tunnels. But I just used a word in a different way we've been using the word. Because people would say the components are not actually the surface and the substructure. Components are actually take the network and break the network into pieces now, and the pieces are now components. And a road's a component, a tunnel's a component, a bridge is a component. But that opens a whole different can of worms on wording now that I wouldn't.
Except, I mean, we've defined component and defined it differently than what you just did.
But what I'm saying about that is the network thing becomes that bigger thing, like a transportation network, a water network, a sewer network. It's the bigger thing that can have a lot of other things within it. Not trying to go to the next level, breaking it down to the next level, but it is that bigger idea.
And that's where in my head, my definition of the network was something intermediate between major class and component. So it's, if we're going to change that network is similar to major class, I'm okay. I just want to make sure that stakeholders understand that. And especially if we're just going to take those words out entirely.
And my way to do that is through the example, and the example would be at that broad level. But if there's a better way to do it or describe it, I'm open to it. Robert?
Well, from a hierarchy standpoint, the capital assets are defined as X, Y, Z. Major class includes infrastructure. So we've been talking about major classes of infrastructure, which maybe might be sub-major because they're not a major class of capital assets. So as long as we eliminate a reference to class in the definition of infrastructure, I think we're getting to the same point by calling it network. Because and then you have components of a network as you're talking about. So I think it makes sense. I think that clarifies it actually in my mind.
Thanks, Robert. Other thoughts, Jackie?
So I don't like major class. I don't like the word class. I don't like the word major, either one of them. So there you go. So networks to me is better because if we're elevating it to the same level as what we put it in the definition, we're getting it to a higher, more aggregate level. And I think we got to move in that direction because breaking it down so far is difficult for many governments. And I think giving classes class information or network information, I think is important. We can't just have one infrastructure asset. I don't like the word major because major connotates size of some type, you know, why is this major compared to something else? And then we go down that road and I'm going, yeah, I don't like that. If we've got major, then what happens to the non-majors? Because it's got to go into some kind of a grouping, because we've got an infrastructure total. Everything's got to add up to the infrastructure total. So it goes into a network. If it doesn't go into a network, does it go into aggregate networks information to get to that total infrastructure number that we've got? So yeah, there's some issues with how we break it down, no matter how we look at it. But I'm more in favor of network than I am in favor of major class, because I think that's just too confusing on what we mean by that.
Jackie, do you worry? I mean, the major, non-major thing, in a way, I get it. When you think about funds, we deal with that way. But when you think about capital assets and major classes of capital assets, we're kind of used to that language and we don't worry about it. And then
But there's not too many things that you can't fit into one of those major classes of capital assets. What do you capitalize other than buildings, equipment, machinery, infrastructure? With if you have a major infrastructure asset, well, what does that mean? I got to shove everything into one of these classes, even if it doesn't really fit. I would
say one of the networks. But I guess the other point of major to me is I wonder if it helps with Diane's concern, right? Of we're at high level, right? We're trying to stay at a high level, and the examples can still do that. So, maybe I'm not totally against taking major out, but I do think it kind of helps with Diane's concern that it keeps the idea at a higher level when you deal with major networks instead of just network, or I won't say just networks. When you deal with networks, you might get more of the Diane's concern, but maybe the examples will solve both of them, because who knows what major is anyway. But
yeah, well, I think if the examples are for here on how we're breaking down the networks is the same as it is in the definition, I don't see how there's a disagreement or an argument on what they mean.
Robert?
I don't have a problem with major. And I'm just going to give you a granular example looking at our infrastructure audit work paper I'm looking at here. Okay. There are items on here that we have broken out and account for separately in the city of Brookfield that in infrastructure, within the infrastructure category, are less on a gross book value basis or more on a gross book value basis than other things we disclose in the notes. Arguably, both of them are probably immaterial and we over disclose. Okay, I'll give you that. But if you don't say major, then is a government going to say, oh, I'm going to put all those in, when it's kind of ridiculous to include $500,000 worth of traffic signals when I have $283 million worth of book value of gross book value of infrastructure. So if you don't qualify by major, and concentrate on the big stuff, the roads, the drainage systems, getting back to the drainage networks, sorry. So I like major.
So I'm okay with major if we do it the way Robert says, but he's got to put those other little things that didn't count into some place in an other or a non-major or something like that. In fact, that's kind of the way I talked about it in my comments to the staff, was if we use the word major, then we've got to have a catch-all category.
Well, and also we have not, in our definition, we've only defined networks. And if that's the equivalent of where we want to put everything in these big high-level buckets, does major throw that off? It's, well, the definition says network, but what's a major network now? So I'm kind of where Jackie is with the major, that, maybe networks is just, it's consistent with that definition. And so we just call these all networks.
Chris?
Yeah, I want to stick to network. I thought idea that you guys impressed upon me when we were just going through right before lunch, that sewer networks and what it means needs to resonate and kind of echo through in the financial statement. So I think it is the sewer network, the transportation network. And maybe there's some kind of way where there's a breakout of if you had signal lights or what, I don't know. But I think at its core, it should be network and not major classification, because that's what we're trying to carry through.
Chris, do you feel a certain way about major networks versus networks?
To use a young people term, I think that's kind of weird.
Which one is weird?
Major networks.
Okay,
I think
gotcha.
it's just your networks, right? I mean,
Okay.
I would think by the basic nature of a network and how we described it, it's going to be significant to that government.
I would think so. I think the examples are the what save it for me. Like I think I would worry if you didn't have major that they would be going down to what Diane was talking about earlier. But with the examples, I mean, I can be okay just saying network by network, not major network. But Jackie.
So I have a question for Robert. If we just did major networks or networks and forget the word major, where would your traffic signals go? Do you put them in your transportation network then?
I would put them in the road network.
Or in the road
That's
network?
where they belong,
Okay.
quite frankly.
That would work
Because, I mean, right now, because there is no requirement in GAP to disclose by major class, it just is all buried infrastructure. If we end up going forward with this provision in the disclosures in a final statement, there will be a lot more combining of things. I would hope for most governments to get to a transportation network rather than this granularity that everybody seems to like to default to.
Carolyn.
My comments to the staff, and this conversation is definitely addressing my concern. I agree with one of the stakeholders that requested more structured guidance. Without guidance, we have introduced variability when it could be decreased. I wasn't sure if examples would get us there, but with this conversation, as far as, tying networks to our definition, removing the variability that just classes could introduce, I am comfortable with the network concept, and I've always agreed with moving this forward. I just wasn't sure with moving it forward as it was previously stated, would have provided enough information. So I think with this additional guidance that we're talking about will get us there.
Thanks, Carolyn. Jeff?
So I'm undecided. And I think because I'm undecided, one of the reasons I'm undecided is I'm unclear what we think a network is. I heard Alan say it's a transportation network. I heard Robert say it's a road network. So when we think about our examples that I think we had a call to give even when it was major classes, I think how we decide to characterize networks is going to be very important, because if you look at the list of examples we have in the definition, transportation network means roads, bridges, and tunnels, to me, altogether. Probably lighting systems. If they're lighting my transportation network, I think we mean streetlights. That's all part of, lighting is part of the service of providing roads to people, right? The traffic lights don't exist or the street lights don't exist outside of the service of people being able to traverse your roads. So then I start to worry, because I remember this is for a disclosure purpose, and the more aggregation that goes on here, the less value the disclosure has. It'll still be better than the one number, I agree. But to me, how we provide this guidance about what we think networks are, the more aggregated they are, the more concerned I'll be about them, the less aggregated they are. And I think people are going to take those examples just like they did in 34. Those are going to be the groups. Nobody's going to, we can call them suggestions or whatever. Those are going to be the groups. And so those are going to be the disclosures that users are going to get. So I think, and whether, how drainage systems, how is that different than water and sewers? And drainage part of, or is drainage part of the road network? I got to have drains on my roads to provide roads, right? Like, so how much aggregation are we going to get when we get to this thing of, because when I was initially thinking of the question, I said to Scott, yeah, let's just use the examples. I agreed the examples should be the same. Let's just call those examples in the definition major classes. And so I was thinking in my own head, I was going to get roads as a major class. I was going to get bridges as a major class. I was going to get tunnels as a major class. Now it's like, okay, it's network. And maybe it's right also to say, yeah, those things, is it different? So a bridge and a road, they're the same service. Unless you say, no, a bridge gets me over a body of water. That's different than a road that gets me over land. We would have left governments to make those decisions, right, before. And now, if we go to networks, do we really think there's a tunnel network or a bridges network? I don't know. And so how we hash through that, I think will be important to me.
All infrastructure has to be part of a network. So if it were up to me, I would say transportation network, and then in parentheses, I would put roads, bridges, and tunnels. And then everything else, we've got drainage networks, water and sewer networks. I don't know about dams, we'll just like dams, lighting networks, and communication networks. If we change system to network everywhere else, I would just combine roads, bridges, and tunnels and call it a transportation network and put those words in parentheses behind transportation network. That's what I would do, but I'm open to if people think, well, road network or bridge network, I see them as a connected transportation system. And when you go to your functional expense categories in your statement of activities, you've got transportation, and that's where all that stuff goes. You've got water and sewer, and that's where water and sewer goes. Drainage might be stormwater or whatever, depends on what you do with drainage, I guess, but Jackie.
So I don't have quite the concern that Jeff does, because it says infrastructure assets are part of a network. And that means that roads is a network, bridges is a network, tunnels is a network, drainage systems is a network. Now, you can have an individual that is a network on its own. So I can have a bridge that still would be considered a network. I don't really necessarily see, I think transportation is putting three things together that could be viewed as very different by a government. Their bridges could be viewed very different from their roads. And so I don't think I would put them all in a transportation network. I kind of would leave it the way we've got our examples, if it was me, and say that one can be a network, but it still has to be part of a network. So I've got bridges that are a network or tunnels that are a network. That could be different kinds, but.
So Jackie, because our definition right now says example of infrastructure assets, would you be okay simply changing that to example of infrastructure networks includes?
Probably, but it's probably redundant because it says in the first one that infrastructure assets are part of a network.
As examples of those networks, right?
Jeff, is your concern based in that governments are going to aggregate these networks and then the information is going to be less useful because there is not going to be the disaggregation?
I guess when I hear, my concern isn't that the government, because I think what the governments are going to do and what they're asking us for is follow what we tell them the level of aggregation needs to be, right? So my concern is that really the board would aggregate too much when we work on examples. Now, listening to Jackie, I get a little bit less concerned because I'm like, okay, she's telling me I'm really keeping them the way I did in the definition. I'm not going to aggregate up from there. Makes me feel a little bit better, right? Versus somebody else who would say, no, we don't, wait a minute, what's a drainage network? Why can't we fold that in with that? And why can't we fold lighting in with transportation, like I was talking about before, and really start concentrating these networks so that really you have relatively few networks, right, of stuff as examples. And that's like, oh, I'm government. They are really high level. I'm going to high level my my networks, right, for purposes of disclosure.
Jeff has made his, I guess Jeff was kind of going last, because everybody had kind of agreed with network. But
I mean, I guess what it comes down to, Joy, is are we all, or is the board sort of where Jackie is? Like, I view the list effectively replace assets with networks there. And I'm giving you my example networks. And if you do that, then I'm like, okay, I'm sort of in the same place. How can I argue I'm in a different place than I was when I was thinking about major classes? I'm not really in a different place. So then the effectiveness of disclosure is going to be the same. So and I sort of say, okay, maybe there's some benefit getting rid of the word major classes to sort of distinguish it from what's happening in capital assets. I think that marginal benefit, I'm not losing anything. There's no marginal loss from that switch, or marginal loss that exceeds the marginal gain, right? So that's why I would be okay with it. But unless there's others who think, no, I think a network is much more aggregated, then I'd like to hear that, right? Because then that could affect how I think about it.
And I guess I'm kind of where Jackie is. I mean, for the most part, all of these things are going to say network with them, except roads, bridges, tunnels, and dams. I think this is essentially what people are going to use. If I were an auditor and my client combined roads, bridges, and tunnels and called it a transportation network, because these are examples, I probably couldn't argue against it. But as a board member, I kind of am okay with that. If I got a breakout of infrastructure for transportation, water and sewer, communications, drainage, I mean, I get that more detail is better, but if a government did that, I think most are probably going to, depending upon what they have now, are going to probably do something like what we have listed, because it's probably what they've done in the past anyway, in some way.
Would it be the same, Joel, just because I don't know these things? If the term of art was major class? In other words, if we said example of major classes are this, would you as an auditor say, no, you got to go, versus changing it to network and you're likely, yeah, you can combine those networks? Would you say, yeah, you can combine those major classes?
Because major classes is more nebulous to me than network. I don't know what it means outside of, they gave me some examples, but again, those are examples, so you could use the same logic.
You could consider combining them and say that's a reasonable thing to combine the major classes.
Yeah, I mean, there's no mathematical formula to say, well, if you're 40% of the assets, it's major, and so you got to break those out or whatever. Because then again, I don't know how to. Is it arterial roads and interstates, or is it I don't know where to put it, so I don't know where to start my unit of account type thing, and so I don't think that would help, and in fact I think probably makes it harder. So it seemed like most board members were good changing it to disclose by network, to give examples of network that were going to correspond to the examples that are in the infrastructure definition, however that works in the statement.
I guess that's my only question. Is transportation a network, or roads, bridges, and tunnels in separate networks?
Transportation's not used in any of our.
That's why I'm asking. But if you look outside of the document right now, most documents say it's a transportation network. Roads, bridges, tunnels are inside of that network. We don't have to do that. I'm not suggesting we have to do that. I'm just saying, are we doing it at the level right? Are we doing it kind of that level below? And our networks are bridges a separate network from a road, separate network from a tunnel? We're saying transportation's a network. Or are we going to prescribe that?
We're leaving it up to the government, not prescribing it, Jackie.
I was just going to say, I think that depends on the government, because the one small government that I talked to said, we've got a ton of bridges. We put all of our bridges in one. So they're not going to combine their bridges and roads, because they deal with their bridges totally separate from their roads. So Jeff's going to get roads and bridges in that government.
Yeah, but if one government has roads separate from bridges, another government has roads and bridges as one line, do we care?
My guess is if it's and Robert can probably respond to this better than I, but based on the few interactions I've had, my guess is that if they consider bridges to be major for them, they're going to have it separated. If they got one dinky bridge in the city, it's going to go in with their roads probably.
And if we characterize them as examples, in other words, if you're that government, you track them separately. You really can do all this stuff because you track them separately. You can do that, right? And if you're the government that treats them together, are we going to force you to break them apart for this purpose? Maybe that doesn't make sense, right? So we say by not characterizing it as, these are the established networks, you have to break it apart. We're going to say these are examples of, and I don't know, maybe somewhere, I don't know, the roads, bridges thing seems to be a big one, right? So I don't know if we go with transportation, parenthetical roads, bridges, or roads, bridges, tunnels, parenthetical transportation network, some way, or we include a discussion somewhere in the basis that, that's your judgment to make as to what the appropriate, level of disclosure is, depending on how you run your government.
I mean, we talk about roads and bridges, but you can go energy and say our power lines, the same as wind farms, which is the same as solar farms, which is the same as power grids. Are those all 4 different networks, or is that just all energy? And we like to talk roads and bridges because we're familiar with it, but or is water network a network, but which includes water supply and sewer, or is water a network and sewer is a network? It's a little bit of a unit account thing, and I appreciate where Joel's going with that. Like a little bit it is, or is it discretion, or is it just discretion? Break it down to the level you want to break it down.
Yeah, I mean it's a fair point, right? Like I can I don't know power generation, right? Or I don't know all these other things where we're not going to give them any guidance, right? Like, so what do we do with that? Are we okay with that? Or do we have to wait for the questions to roll in and then decide what we think are networks within the power space? Or do we try to figure out some way to describe it that here's the concept? Or are we just relying on that definition of service? And if your service is to get utility power into the homes of customers, all these things that you described, Alan, are there to get power in the homes of customers. I got one network, right?
It is a particular type of service.
And depending on how you interpret that
network is, it is.
Right? Like, is generating the power different than transmitting it along the lines, right? Like,
Water treatment different than water distribution, or is it all water? Is water and sewer combined? Leave it up to the government, Jackie.
I don't think we can get much finer than what we are, because what we were talking about are general purpose governments right now. We go to special purpose governments. There are a lot of networks that we haven't defined by a special purpose government here. And I think that, there's only so far we can go before we've got to leave it up to them how they break it out.
the C word comes in, comparability, right? Comes into my thinking, right? Like if we're saying all power utilities, up to you guys. So I could have one that breaks it out. Here are 5 networks, and I have a guy who does the same service, one network. So the user now, hey, I know these guys, their power lines need replacing. This guy, I don't know. Right? Because he didn't choose to do it that way, and GASB let him do it that way. So
But that comes down to, like that's principle versus specific that we come down to all the time, right? We have functional statements of expenses on the statement of activities. We don't tell you, no, it must be public safety, transportation, whatever. So users are used to having to deal with that. So it's always a balance of, well, do we need to get that prescriptive? And if you get that prescriptive, you very quickly get to Jackie's problem of, we've got all these different types of governments, and that gets really hard to do, right? So we tend to default and end up in this, we're going to have some discretion, and as a result, you're going to have some some lack of comparability and some levels of detail that are different. My hope here was that we at least acknowledge to people that our minimum is some pretty high level. If you want to get more detailed, that's kind of up to you. And that through the examples, I think we will have done that. So I guess I'll put out again. It seemed like where we were was disclosures will be provided for infrastructure by network, and we would have examples of networks that essentially correspond to the examples that are in the definition of infrastructure. Do people agree with that or want a different, did I miss a part of it that somebody wants? I mean, Jeff might want more description, but Jackie.
I agree with what you just said.
Okay, thanks, Jackie. Caroline?
I agree with what you just explained.
Thanks, Caroline. Chris?
Also
Chris
on
is
board.
Good.
I agree.
Thanks, Robert.
I agree.
Thanks, Diane.
How would I do the double negative? I think I can not disagree, right? And I think I can, you've given me enough, Joel, to where I think I can, because I have roughly what I had before in terms of the example networks, that I'm going to get what I think I had before, but just characterized as a network. And like I said, I think there's a marginal benefit there. So I think I can support that.
Great.
Just
Is that,
yeah,
yes,
just one
Robert?
more. So I don't know if we really ever got to saying whether we agreed with the recommendation. This,
I morphed the
in-
recommendation
yeah,
to
yeah.
be that,
yeah.
but
So,
Go
yeah,
ahead.
I still agree in principle, but I do have concerns that governments, as expressed by the respondents and in the field tests, that they're going to have the information to do this in some cases. I mean, if you go back and you look at a government, and again, let's say they were phase 2 government. Could that be? You go back and look at the records that they have when they initially implemented Statement 34. If they were taking a real shortcut approach and they were just working with their auditors, I'm not certain. And depending on what useful lives they chose for depreciating their infrastructure, I mean, I'm not certain they're going to have the info to really break it out without a lot more work than we might think. Now, again, I think it's the right thing to do, but I have that concern. And I mean, we have a limited number of respondents in the field test. I have no idea whether that's a typical number, response, but just on that very non-statistically valid sample, plus the comment letters, I think they raise legitimate concerns about being able to do this.
Robert, I agree. There's some of that there are some governments that this is going to be an effort to do. I think some of the commenters, though, were addressing their effort because they thought we wanted a much more detailed level. They didn't quite get, and that's why I think it's important that we better articulate we're at a high level. So I don't know that it's as bad as some of them made it sound, but I agree there will be some that experience what you're describing.
Well, and I think that there are some who are responding because they just don't want to do it.
Well, that too. And I also think when you're at that small government level, they probably generally only have like roads and bridges. Like they may not have all these different types of infrastructure, or if they have water and sewer, it's in an enterprise fund. So it already is kind of broken out. And so I think those smaller governments may be okay anyway, because we kept it at an aggregate enough level. But Jackie.
I also expressed that same concern to the staff about it might be more difficult and costly than we anticipate for some governments. And that's why I am still and continue to be opposed to breaking it down any finer as into component units or component parts. I think that providing the information by class is something that we need to do, even though it's going to be difficult.
By network. You said class. By network. Thanks, Jackie.
I do think those two things are getting conflated a little bit, maybe by the respondents. I don't mean that to disparage them, but showing the assets in the capital asset roll forward the note by what we're now calling network, and having to break it down to what we would call components of componentization, like two different things potentially. And
one probably a much bigger lift than maybe the other. Because I think even those lowest governments might just have things in this higher network level, right? All roads and bridges are one thing, right? Water treatment's one thing. Well, that becomes a problem when you get to componentization, maybe, potentially.
Scott, do you feel like you,
I was just going to say, my takeaway was a little bit different. I sort of felt like both in the comments and the field test that what people were seeking was clarity on what major classes is, rather than saying major classes is too hard, burdensome, et cetera. So I viewed that as they're not saying out of hand, I can't do this. They're just saying, you just got to tell me.
I think there was some,
how
of,
to.
I took it, there was some of both. I think there were some that are a little bit what Robert's talking about. And I think there were some that are what you were talking
True,
about, where
but
they
I
just,
think it was
they
more-
weren't sure what level of detail and so it was hard for them because they didn't know the level of detail. And
Right.
so I think we've gotten better at that. So I think all of that was in there.
Yeah.
And I was where Jeff was at. I thought they were asking for more clarity, not that they couldn't do it. It's just like they just didn't know what the expectation was.
Scott, do you feel like you have clarity on the decision and what we're doing? Okay. I think we can then move to the next one. Thank you.
Okay. The next section deals with the first of the four proposed new disclosures that were in the preliminary view. Paragraph 16 of Chapter 6 of the preliminary view proposed a disclosure that showed or that would require governments that change their either capitalization policy for infrastructure assets or the estimated useful lives of infrastructure assets to be disclosed, to disclose that in their summary of significant accounting policies. Some of the users that disagreed with that preliminary view provided feedback that a change in the estimated useful life would be considered a change in estimate, and statement 100 already requires, if significant, if that change is significant, that's an input, and if the result is result of changing that input on the final number shown for depreciation expense, or the effect it has on accumulated depreciation and the carrying value of the infrastructure asset is significant, it would be required to be disclosed already. Some other respondents noted that a change in capitalization policy is an application materiality. So theoretically, any change in your capitalization policy has an immaterial effect on financial statements. And so therefore it would not, if it's an immaterial effect on the financial statements, telling users that there was such an immaterial change would not be necessary. Some other respondents noted that or requested that the disclosure only be applied in the year of the change. They interpreted as a government would have to continue providing that disclosure in future years. And some other respondents requested that this requirement only be for infrastructure assets and not to apply it to other capital assets. The project staff agrees with those respondents that believe that statement 100 already covers this theoretically. If there's a significant change, that it should be disclosed somewhere in the financial statements, and that if there's a change in the capitalization policy, that theoretically it should have an immaterial effect, and so therefore should not need to be communicated to the users of the financial statement. And as a result, the project staff does not recommend carrying forward this disclosure to the next due process document. And if the board does disagree, we'll come back and discuss some of the other requests that respondents had if the board does decide to carry this forward.
Thanks, Scott. Board member responses to question 3. Diane.
Sure. I agree with the staff recommendation. I think that we should not carry this forward and that it would not have a significant effect on the financial statements and would not be material. And if there's a change in the policy estimating the useful lives of the infrastructure, that would be disclosed if it's material once all that change takes place. So I think the changes, once it happens to impact the basic financial statements, those would be disclosed, but I don't think this qualifies at all. So I agree with the staff.
Thanks, Diane.
Can I ask a question?
Sure.
The current, I think it's 34 requirement, right, is to disclose changes in the policy for capitalizing assets, right? I think it's how it's phrased. I think.
Changes?
No,
The policy.
the policy,
Yes.
right? It's policy for capital. Is the only thing in that policy the capitalization threshold? Is that what the board considers the only thing that would ever be in a policy for capitalizing assets? Nothing else. Because to me, the analysis seems to suggest that's the only thing that would ever be in a policy for capitalizing assets. And I think when users, and we thought users looked at this, that is important. And when I, as a user, look at the policy for capitalizing assets, I have lots of things in my head about how these very big assets are going to be reflected on the books. And so I have a lot, I think, yes, I need to know that. If now we're saying, well, no, the only thing a government's ever going to give you under that is the capitalization threshold. And by virtue of the capitalization threshold, it's not even going to be material in your financial statements. So do you still want that? Now, maybe we'd get a different answer, but I'm not, but that goes back to my question. Is the only thing a government would disclose, generally, I understand we can't be specific, but would be that the capitalization threshold, my capitalization threshold is $5,000. That's my policy.
I thought the paper was saying that 100 would cover any of them except that one. And that one is then an application of materiality, and that's why 100 doesn't cover it. But otherwise, 100 covers any other change. I thought
I
what the
was reading
paper
it as
said.
100 covers estimated useful lives. That's what I was reading it as. That's how I read what we were talking about. And we talked about that. That's in the PV, right? We say in the PV, changes in estimated useful life would be covered by 100. We didn't say other changes in the policy for capitalizing assets would be covered in 100.
What other capitalization policies?
That's what I'm asking.
Okay.
Right? I'm asking the folks in this room, like, is it only the only thing we've ever seen in our experience, or you guys have ever seen in your existence of my policy for capitalizing assets is the capitalization threshold?
I mean, if you take depreciation out, I mean, it's just, if you're just talking about capitalizing assets, that's the only thing apart from historical cost versus modified approach, I guess, that and that's also depreciation, I guess, but
I would, because as I broke this down, I would get that, or I feel I can get that elsewhere, right? Because I would get that from the RSI. And I know RSI, I know it's not the same. I know the theory, but from a user perspective, so I break it apart. I say I get the estimated useful lives from 100. I get the modified approach from the RSI. So I'm sitting here making my decision based on this thing called the policy for capitalizing infrastructure assets, policy for capitalizing assets. And is the only thing is capitalization threshold. I still think there might be some users who care about it, but I think I'm on less steady ground because now it's sort of, as staff points out, it's not material to the financial statements. And so my changing from one to the other, and comparing governments on that, okay, I can't say for sure that I would, users would want that. So then I have a less steady grip on, possibly retaining this.
Jackie.
I think my thought is that some policies would also include the kinds or types of things that get capitalized. So giving their people an understanding of what types of purchases meet the capitalization requirements to get the asset into a place and condition of use. So some policies might include that, but I'm not sure you'd get any kind of information out of that that would be all that helpful. On the other hand, I do believe capitalization thresholds do make a difference. If I raise my capitalization threshold from $1,000 to $100,000, that's going to have a pretty significant impact on what gets capitalized and reported. So.
Oh, aren't we saying though that has no, if it's, you argue it's an application of materiality, Jackie, then you'd say that there's no impact from that on the financial statements.
I'm saying that I don't necessarily agree with that.
You're causing me to hold on more tightly here, Jackie.
I mean, as our literature has described capitalization thresholds, it should be immaterial.
It should be, but it doesn't necessarily mean it is immaterial when they start going through and looking at some of these changes that haven't been made for 40 or 50 years, and they all of a sudden they start looking at changing them. It could be pretty material.
I mean, I guess if I'm an auditor and you change your capitalization policy so much that it creates a material adjustment, I have to question whether that's an appropriate capitalization threshold. It sounds like it might be too high. You might be changing to something that's too high.
If it hasn't been changed in 40 or 50 years, maybe I should have changed it a long time ago and somebody should call me on it.
Theoretically, all the things under it should be immaterial, right? I mean, that's the way, or, yeah. I guess the one thing that,
But the other thing, Joe, just to be clear, right, is I think you're making a good point here, Jackie, is type. I capitalize this, I don't capitalize that. That's not a capitalization threshold. It's just, I'm telling you, I capitalize these types of assets, I don't capitalize those types of assets. And now if I change my policy, I didn't used to capitalize that type of asset. Now I do, or I did used to capitalize it, now I don't. That's not going to be disclosed if we get rid of this disclosure.
I would argue that's either generally educational in nature or it's very unique and specific to the library books at the library, and maybe the library views them as not having estimated useful lives because they get rid of them so quickly of 2 years, and maybe they have a unique thing, but otherwise it's pretty educational and not telling you a lot.
I think if you change your capitalization threshold, you can get rid of a lot of equipment too. That's not covered under this, but I'm just saying that those kinds of policies could cause lots of those types of things to fall off the asset.
But if you use the implementation guide question from 2021 or whatever, where we said you shouldn't have a capitalization if you have enough of items underneath your capitalization threshold that when you aggregate them together, it would be significant, you should capitalize them. That's like, if you have a lot of that equipment stuff, you can't just leave it off because they're individually under a capitalization threshold. If when you aggregate them together, they would be material if they're appropriately applying our gap in the implementation guides. But
So just the one thing I add to that, the one wrinkle is sometimes you just don't know. So, you take a state government, for instance, and we say that, just making it for argument's sake, that these certain tablets are below the threshold, or these certain widgets or whatever are below the threshold. And so all of the agencies across the board are purchasing these on these different contracts, et cetera. And they're not categorizing them as such. So there's no way for you, I guess the point is there's no way for you to aggregate to figure out what that other balance is that's below sometimes, or for you to create a complete population.
You're arguing against the implementation guide question, which we're gotten strained way off. I think the
I was just answering your question about this argument that you should be able to look at whatever that other population is and make a decision. My point was just sometimes you cannot
supposed to
get to that.
Yeah, that implementation guide question, which has caused a lot of controversy, says you should already know what you just said you don't know.
Yeah.
Yeah. Anyway. Where were we again? This is question 3. I would say, I don't remember who all this said what, but I, leading up to this, I agreed this met the essentiality criteria. I have come to, to agree with the staff recommendation that 100 covers everything here, or it's something that's not material. And so even though I agreed with this on the PV based on the feedback, I agree with the staff that we should no longer bring that one forward. Which I think is where Diane was, and maybe the only one we've gotten an answer from at this point. Carolyn.
Originally, I said that I had tentatively agreed with the staff because I wanted to hear more dialogue, but I do agree that this would be covered under 100, so there's no sense in requiring this disclosure again.
Thanks, Carolyn. Chris.
So I agreed, but I just want to follow up. So we're saying that to Jeff's question, there's nothing else that we could, like that anybody, at least at this table, could really think of in the moment.
Yeah.
Types of assets. That's what I heard. So types of assets I capitalize.
Yeah, like
I
for instance, like
capitalize
works
this,
of art.
this, and this, and now I'm
Yeah, we
changing
don't-
it. I don't,
we
I'm
don't
not
capitalize
capitalizing
works of
this
art,
anymore. I'm not,
blah, blah, blah.
I'm changing what I capitalize, and that change now wouldn't be disclosed.
That would not be part of GAAP though, because a capital asset is specifically defined. You're talking about you have which major classes you have of capital assets are the types, unless you're going to a lower level than major classes. But the guidance for capital asset doesn't say, you know, equipment that is greater than, or equipment that does this. It is something that has, you know, an estimated useful life of more than 1 year. And
So-
I'm sure there's more words than that, but
Like to me, what Jackie was talking about, it was what I tried to say was it's either educational because it just describes what GAAP is, or you have some governments that have voluntarily said how their unique assets like a library and what it does with its books, how it applies GAAP. It's not that it's not GAAP. You might get somebody that tells
Mhm.
you what that is, but they generally shouldn't change that because the theory is they're saying, I've got kind of a unique circumstance and this is how I apply GAAP and I just want my readers to know. And that might be different than the way the library next to me looks at it. I know this because we had this deal with libraries, right? Where some don't depreciate their books because they apply GAAP a certain way and then others don't. And then their statements look different. And so they feel like a need to disclose how they apply GAAP and why that's okay for them. That's a version of what Jackie described. And I don't think you're going to get many changes of those along the way.
Mhm.
And I think they're, to me, pretty unique and specific in nature. And I don't see that often. That's just the one I could come up with. Robert?
Now that I've gotten over my confusion on why on the it gets back to the implementation guidance question. I would agree with the staff recommendation, but I'm curious. It's more a curiosity question about what led to the inclusion of this in the PV. Just the feedback from users, or how did it get there?
the board requested that it be asked as part of the supplemental research, and users gave it very high
It did.
value.
Okay.
And so, I guess that was my response is I continue to agree it's essential. To me, it's just covered by 100. And so they're getting it. It's just, we asked them kind of in a vacuum, here's capital asset disclosures. They said it would be valuable. We didn't, at the time, even when we asked, I don't know that, well, I mean, we had pre-100 guidance. I don't know, we had 100, but anyway. Do you agree, Robert?
Yes, I agree with the staff
I
recommendation.
think you said that.
Yeah,
I was making sure. Jackie.
So I still have some concerns about this, but I'm going to support the staff recommendation because I do think most of it is going to be covered under 100, and I hate repeating things that are already covered in another statement if we can avoid it. I do have some concerns about this whole concept of materiality, but I'm not sure that they're going to end up being as all that significant if everybody kept up their information the way they're supposed to.
Thanks, Jackie. So it's everybody,
I think I'm on the lone on the island here.
okay.
So I think I almost had, sounds like I almost had Jackie. And I would have stricken the or estimating useful lives part of the question because that is 100. I would have kept the policy for capitalizing information in infrastructure assets there as that thing that I don't think was covered elsewhere. And so that would have been my recommendation.
All right. So we agree with you there. We don't need question
Okay.
4 then.
Exactly. We don't need question 4, so we'll move to the next section, which is on the second proposed disclosure in the preliminary views, chapter 6, and that's in paragraph 19. I'm not going to read the whole thing, but it's, we've referred to it as the 80% disclosure and disclosure of infrastructure assets that have exceeded 80% of their estimated useful life, separating those that have fully exceeded their estimated useful life from the others that meet that threshold. The feedback from stakeholders that disagreed with this, preliminary view, where some respondents stated they didn't have that information, or governments may not have that information available. Some of those respondents noted, as we talked about a couple months ago, in relation to composite methods, that certain governments that use certain composite methods to depreciate may not necessarily track the date that assets were placed in service, and therefore may not track as well how much estimated useful life is left in those assets. Some other respondents disagreed because they believe 80% is an arbitrary amount. They don't understand why it's 80%. None of them gave a theoretical answer as to a number that would be greater or less than 80%. But most of those respondents, or I should say, some of those respondents agreed with the 100%, that obviously if it's fully depreciated, you should tell users about it. But they didn't believe that assets that weren't fully depreciated, users needed to know that information. Some respondents recommended that instead of this disclosure, that instead replacement costs instead of historical costs be provided for infrastructure assets that are fully depreciated, or at least fully depreciated. A few of those agreed with the 80% and just thought that all, either those over 80%, or actually some of them wanted all infrastructure assets, an 80 replacement cost disclosure to be provided. Kind of related to the arbitrary amount, some respondents, instead of talking about 80%, they thought that instead it should be a number of years until the number of years left in the estimated useful life. So it would be, some amount would be chosen, 1, 3, 5, 10, something like that, for this disclosure. And then, as we'll talk about the next disclosure as well, some governments or some respondents requested that this disclosure apply to not just infrastructure assets, that apply to all capital assets, and some requested that this disclosure be limited to material infrastructure assets. The project staff, right off the bat, recognizes that 80% was an arbitrary amount. The board talked about it at length leading to the preliminary views. We don't have a basis that a number, again, greater or lesser, would more appropriately provide information to users as to the infrastructure assets that meet the threshold the board wants to talk about. But the project staff does agree that, there was a lot of feedback from users during the supplemental outreach we did, that this information as to infrastructure assets that are close to their end of their estimated useful life provided information, most notably information about potential expected large outlays that were may be needed to continue the level of services that the government is currently providing. So the project staff believes, without having a different number, that, we believe that this information, if carried forward, 80% is as appropriate as any number that we heard. Some governments also in relation to those that thought that it should be a certain number of years, the project staff, I guess, would say that we don't know of a reason that the number of years would be, theoretically better, unless the board believes that number is there. We believe that you'd run into the same issue as to what the percentage is, as to, if you chose that, in that it would be what is the proper number of years that should be communicated as to the number of years that are left. As far as replacement cost, the project staff, notes that we talked about prior to the preliminary views as far as how to measure infrastructure assets, that we did not believe that replacement cost was an appropriate measurement in the financial statements. And, the board believed that the cost of providing a specific replacement cost as a note disclosure, when we talked about potential note disclosures, was a barrier to including as a note disclosure, and we continue to believe that. So we do not believe that would be an appropriate disclosure to provide. As far as applying it to all capital assets, we've talked about before that the scope of the project is currently just for infrastructure assets, and as long as that remains, the project staff believes that is just something that could be considered when the note disclosures on all capital assets are looked at, and limiting it to material. Again, the project staff notes that all standards, currently all authoritative literature is limited to material items, and so unless the board wants to say significant somewhere in there, we believe that as the proposal was providing the preliminary views, it should carry forward. And one more thing. There was also a request for additional, the percentage remaining estimated useful life of all infrastructure assets. One of the respondents I know requested that a weighted average of all your infrastructure assets, do you have 40% or something like that? The board talked about this leading up to the preliminary views, that potentially instead of just the greater, fully depreciated, the ones that are greater than 80, you could have provided a timeline for that, 0 to some number, et cetera, however many, where you want to do quartiles or things like that. And in fact, I believe the outreach we did actually asked it in quartiles, and the board decided not to do that. And so the project staff continues to believe there wasn't a lot of feedback in that nature as far as requests for that information. And because of the cost that the board talked about leading up to the preliminary views of providing that information, project staff still believes that would not be provided. But all in all, the project staff would recommend carrying forward the disclosure as it was written in the preliminary views. With that, I'll turn it over to the board to discuss question 5.
Thanks, Scott. So I like to give my views first, and this is an important disclosure to me. I think it's maybe the most significant improvement in this project. This, along with getting governments to actually periodically review their estimated useful lives. This might be a little long, and I apologize for that. I agree with inclusion of this disclosure. I might note a couple of areas where we could improve, but then I've got an additional proposal. But for maybe efficiency of the discussion's sake, I'm just going to go ahead and put them out. And then as your board members consider it, You can talk about this disclosure as it stands, plus my addition. My addition isn't a replacement. It's an in addition to, it's not a instead of. So I just want to go ahead and put it out there. But why this is important, and you guys have probably heard this story so many times, you may be sick of it, but I continue to think why this is so important of a disclosure is I've sat and talked to users with Jeff and heard what they do, and they just take those classes, they just take infrastructure and they have a number and they have accumulated depreciation, and they say the infrastructure is 40% depreciated, and they plug that in as if it's kind of their analysis. And we know these things are so long lived and have been accumulated over so many years that, you know, the water treatment plant is the most recent example because it actually happened in a town where there's 2 water treatment plants in this town. And one is, you know, 95% depreciated. The other is 5% depreciated, let's say. And then you look at the roll forward, it looks like their infrastructure, their water treatment plants are 50% depreciated. And in fact, probably though, if it's really that many years, it's probably that it probably looks like it's about only 30% depreciated in dollars, because the newer one is in much more recent dollars than the older one. And so this old one that's almost done is just masked, and a user who just uses this percentage and looks like the water treatment plants are 30% depreciated has no idea that this old one is about to need to be replaced. You could say the same thing with roads. There could be all the roads in downtown are, you know, needing to be replaced or really on their last legs, and we've got this whole section of town that's all new. It doesn't just apply to water treatment plants. And so that's why this information about things that are close to the end of their useful life or have exceeded the end of their useful lives, I think is really a significant improvement. And we heard that in my mind clearly that this was essential back when we did the user outreach, the comment letters, talking to people at GASB, meeting with users. That to me, this has only continued to be proven to be essential. It was good for me to see the field test. All the 12 that completed it said they kind of did this without real difficulty. 2 out of the 5 that completed all but maintenance said they did it without difficulty. So it didn't seem to be overly hard for them to do this. So I strongly agree that this should move forward. But a few things that I did glean from the comment letters, from public hearings, user forums, I always envisioned this, but I don't know that everybody did. And certainly it wasn't clear, but I think we need to be clear, at least in my vision of it, that this is kind of an in addition to disclosure, in addition to the roll forward. I noticed some people said, do I now break my roll forward out between roads and then roads that are between 80 and 100 or roads that are over 100? I always view this similar to the held for sale 104 criteria to be an addition. You don't mess with your roll forward. And then down below, you would say, hey, of the roads above, you know, this amount of historical cost has exceeded 80%, or this amount has exceeded 100%. So I think we need to be, clear about that, because we really only care about the year-end balance. Again, just like held for sale, we don't want transfers between categories to be mucking up the roll forward, right? And so I hopefully everybody agrees with that, but that's one thing I think we should be more clear about. I don't think it kind of said it here. I think our intent was that this was by, at the time, major class of infrastructure. Now it's by network, that this is that, because I think a lot of the feedback we heard that people were concerned about it thought that this had to be almost by individual asset. Do I have an individual asset that's at 80%? And we're just like, no, of your roads, just take all the line items that make up your roads. You've got a historical cost, you've got an acquisition date. You can do it's math to do the 80%, and then just take that total number of the ones that are between 80 and 100, plop that historical cost in here, which kind of leads me to my additional. We talked about historical cost. This is one tweak I would propose here if people are interested. For the ones that have exceeded their historical estimated useful life, it doesn't really matter. But for the between 80 and 100% category, in addition to historical cost, I would probably say let's give them accumulated depreciation so that a user then knows, is it 81%? Is it 99%? You know, where are we in the 80 to 100% range? If you can accumulate historical cost for that category, I think you can easily do the accumulated depreciation as well. That's my kind of one tweak, bring forward that one. Now my kind of add-on proposal. In my interactions with users, I've come to better understand that when they talk about maintenance, and one of our big drivers for this project was users told us they wanted more information about deferred maintenance. That was what they generally called it, right? And we've had a lot of deferred maintenance discussions, and we were trying to, with I think a number of the things we're doing here, but in particular the next disclosure, not necessarily and specifically this one, give them information about maintenance, things the government has done. But what I have kind of gleaned, and we even had one comment letter that kind of said this, hey, we think that maintenance disclosure is good. We think you should break it out between CapEx maintenance and regular maintenance. And we know that that maintenance thing was really all regular maintenance. There was none of that CapEx. And Jeff even talked about this when we were going through. He's like, we're missing this. And we kind of talked about, yeah, but those are additions. And Jeff wanted to break out all the additions in the roll forward between new assets and improvements. And we kind of voted Jeff down and all that. But I think it's all getting at, I think really maybe even the bigger part of what users want are, where's the ticking time bomb? Where's the thing I'm about to have to replace that's big? And this quote unquote regular maintenance, I think we'll talk about that more in the next disclosure. I think they want that too, but that's maybe the smaller part of what they want. And so my proposal here is we've talked about replacement cost, not going to give them replacement cost benefit, all the things we've talked about before. But I do think we had one commenter in particular that said, hey, I get replacement cost is a lot, but maybe as a proxy, you could give me enough information to inflation adjust those old capital assets from their historical cost to a more today dollar. And I kind of looked at that and said, you know, instead of trying to get all that information into a note disclosure so that somebody else could calculate it, why not have the government just go ahead and calculate an inflation adjusted amount of the historical cost in these categories, in the 80 to 100 and in the 100% based on the information they have. I'm open to, we could figure out the right inflation adjustment factor to use. When we look back, if you look back at statement 34 in the statement itself and the transition provisions, we kind of said, we actually used one. We said governments to determine historical cost. If you have actual records, go back and use those. If you don't have actual records, you need to estimate the historical cost by taking a replacement cost as of now and deflate it to its estimated acquisition year based on a price index. And it used some language about price indexes can be private or public sector. So we could either use that language, we could come up with our own. I'm open to whatever. But the point is, now in my disclosure, I have, like for 80 to 100%, I have historical cost by network. I have accumulated depreciation, and then I have another category, another column for those same costs that I'll label as inflation adjusted cost to today's dollars or whatever we want to call it. And now I think users really have, it's not replacement cost. I get that. There's different things that come into play with what you might replace that old asset with, but you at least have some better proxy for some of these things that could be 80 years old, 70 years old, really old. And even heard from some commenters, I get what you're trying to get at with this 80% and this, exceeded its estimated useful life thing, but it's so old dollars, it's not telling anybody anything. I'm like, well, okay, maybe you're right. So maybe we need to add this in to actually make that information that we were trying to get at. Here's the old stuff that's buried in this other numbers. We're breaking it out for you. Now we're giving you more context, and it's something that it's math. The government has acquisition year, it has the historical cost. It's math to inflation adjust it to today's amount. So sorry for the long-windedness. That's kind of my proposal. Again, that's a bolt-on top of the existing. So if you don't mind commenting on the existing disclosure and whatever tweaks you might have, or what you think about adding accumulated depreciation, but then also what about the addition of this inflation adjusted historical cost for these same kind of categories?
Joel.
Sorry, Scott.
No,
Yes.
I just, had my speaker on already. I guess it's been on the whole time. I just wanted to add a couple things to support what you said.
Okay.
The first one to support, we actually did get we don't generally provide what the statements look like in the note disclosures that we receive in the field test. We actually did get a field test submission that submitted it, like you said, they actually incorporated it into their changes table of the capital asset as part of that. And then just to note that it probably would rarely happen because we're talking about, all your infrastructure assets by a network, but theoretically your accumulated depreciation could be less than 80% if you've changed the estimated useful life along the way. That you've shortened it. And so maybe you've only taken, 50% of the depreciation, but you'd shorten it so much that over the next, 4 or 5 years, whatever it is, you're going to take a lot more of depreciation in the past than you did in the past. But theoretically, it probably would not show up that way because you're combining it with all your infrastructure assets.
Okay. Jeff.
So I figured I'd follow on to you, Joel, because probably not a surprise. This is a pretty important disclosure from my perspective as well. And we certainly got a lot of feedback about it. So when I was trying to break down the feedback, I put it roughly, I think, into buckets that Scott talked about. So I want to just go through what I perceive to be those buckets. The first was the arbitrariness of 80%, right? Which we heard a lot about. And I agree with staff that any threshold we set is going to could be criticized as arbitrary. You can't get away from that. I did consider, and I would consider for other board members who are interested, this notion of years until full depreciation. So instead of going with a percent, it would be like you disclose if it's 10 years from being fully depreciated, which some commenters sort of talked about. I think that has some weaknesses too, because of the precise reason that these assets are of varying lengths. So how would you set that year? 10 might be good on a 60-year asset, 10 might not be so good on a 30-year asset, right? So I think you come into some of those issues. I would also be open if I heard, because we got a lot of feedback to this point, like, oh, these are long assets, 60-year assets, right? So 80% or 50-year asset, 80% is 10 years from the end. If we felt, and I don't have a good sense of this, that the vast majority of these assets are in fact on government's books for 60-year useful lives, then I would potentially be like, okay, maybe we should have a discussion of 80%, not the right number, 90% or something like that would be a better number. I don't have the intelligence or optics to be able to come to that decision. We could talk about that. As it stands, I'm sitting on 80, but I'm open. 80 is the right number. I'm open to others' knowledge and saying, hey, these things really mostly are 50-year assets, right? In which case I'd be willing to yield off of that. The whole historical cost, replacement cost, I sort of got, this is directly to Joel's point, I sort of got a little bit to the same place Joel did. I said, even though I understand the weaknesses of historical cost, better than nothing, right? So I'm not saying, like just Joel's like saying it's additive. If I don't get this, I don't think the disclosure is useless. I still think the disclosure is very valuable because users are really interested in this information. I do agree, and we got some comment letters like, hey, so I thought, well, this replacement cost, sort of like the proxy Joel's talking about, we could have the disclosure provide the information for the users to make the calculation. But then when I thought that through, I'm like, that's complicated, right? They would have to give, other pieces of data like, when was the asset placed in service and when was, when did it reach its full depreciation figure for the user to be able to come to a reasonable assessment of, whereas the government should have this information, pretty readily available. And if we give them, and I would probably be on the side of giving them the inflation index to use, you give the government, use this inflation index, use the information you have, and come up with this calculation. It's not an estimate, it's a calculation of what replacement cost would be, or we come up with a different name if we don't like the term replacement cost. But it's in theory, it's what Joel's talking about, because that will provide users with just that much more improved information. Cost burden, we heard a lot about cost burden. I'm sensitive to it, but this to me is so important that the benefit bar is pretty high and the cost bar would have to be pretty high. And at least is where I sit, that cost bar is not up where the benefit bar is. So I can't, I would be open if there was a discussion, because we heard some about smaller governments, like, is there a smaller government way we could provide relief? I'm not sure about that, but if I heard a lot about that, I'm receptive to the, the constraints of smaller governments. Composite group depreciation, and I think Joel talked about this, I think a little bit, like, because I was worried that by virtue of a government heading through this composite or group depreciation thing, it can sort of negate some of what we're trying to get at here, right? So I think, have more trouble with composite depreciation than I do group. But the more you group, the bigger you aggregate. And I think Joel's talking about, I think I heard you say, Joel, like, even if you group, you have to pull out within the groups the things that are the individuals that are above 80, or would it be, hey, the group goes above 80 and it's only then that the group gets disclosed, but if the group doesn't go above 80, then nothing gets disclosed, right? That I struggle with because, again, I think this disclosure is important, that the more the government aggregates to try to escape this disclosure, I don't want them to necessarily be able to do that, because then it becomes not quite as bad as the situation we have today, but not nearly as helpful as it could possibly be. And then the last point I'll mention, this is sort of an aside, I do think, because there were some commenters, and I think this point was, maybe Scott was raising it, how to calculate. Like, we're not clear, like, how you calculate to get to 80%. And some of the commenters brought up this notion of, well, what if I change my useful life? You guys are asking me to change my useful life to get better. So supposedly there'll be more of that. And so I pulled out a piece of paper, did some calculations and said, yeah, if you change the useful life, it's not clear now on what basis are you calculating 80%. Is it, if you do it and you never change your useful life, if you do it based on, hey, I'm 80% through my years of useful life, right? So 30 years, 80%, 24, right? And if you never change that, if you do it and you do straight line depreciation, if you do it by dollars or years, you're going to come to the same conclusion. But if you change that 30-year asset in year 25, oops, it's not a 30-year asset, it's a 40-year asset. Now you have the whole thing. Do you want them to now say, oh, 80% of 40 years is 32 years? But wait a minute, you've already depreciated a big chunk of it. And if you do the math, you're going to reach 80% of accumulated depreciation well before year 32, right? So on what basis do we feel it's appropriate for them to calculate? That was something I sort of took out of the comments. So summary, I'm fully supportive of the staff recommendation, and I'm supportive of Joel's add-on, and I'm interested in board member thoughts on the other items that I raised.
Thanks, Jeff. Chris?
So just a quick question to help me frame this as we go through it. We had some really good discussions around networks and what a network is. And so as we talk about replacement costs, Joel, to your point, are we talking about replacement of the whole network, or what components of the network? How does that reconcile in digesting your solution?
To me, I'm not changing any unit of account a government may have, but if a government is depreciating those assets, they've got to have some portion of the network that was acquired in 1970, in 1975, in 1981. Like it might be all the roads I added in 1981, all the roads I added in 1982. At whatever unit of account they have, they should be applying the percentages and then therefore the inflation adjustment to each of those line items and then presenting the aggregate of it. So any of those line items they have, which should all have a year associated, year acquisition and a cost associated with it so that they can record depreciation on it in their capital asset spreadsheet or their ledger or whatever. So any of them that exceed 80% of the useful life, then you calculate the inflation adjusted cost based on that year acquired you have in that whatever line item it is, add those up, and that's what you present in the note disclosure.
Okay. So the easy ones, let's start there. The actual percentage above the 8. Well, one, I agree with the staff recommendation, so that's the super easy one. But then to the additional bolt-ons or add-ons, I agree with the exact percentage for the above 80% that you were talking about. I mean, if you could the actual accumulated depreciation number, so that's one thing. For the, I guess I just need a little bit more time with this with the application of the percentage rate that we're applying to these assets that are over 80% depreciated in order to come up with that. I don't even know what to call it, and that's my concern, because to me, I understand what it is by definition on your part, but to me, it's so skewed from, it has the potential to be so skewed from a number that actually adds value in a government. And what I mean by that is there's so many factors that add into when you're building something, when you're going about something, that equate to cost and what something is ultimately going to cost. I mean, we see it every day on a micro scale when we go to purchase a car and you want the stereo system and you want this and that, right? And that also equates to buildings and capital, and that also equates to infrastructure if you want the thing that's lined with titanium or not, or you want the 6-inch thick concrete pipes versus the 12-inch thick concrete pipes and all of those things. And so having a number that relates to, one, decisions that were made back in 1986 or 2 or whatever that might not be consistent with the types of decisions that we would want to make now, and we're just carrying that forward and expanding it, could end up on either side, too high or too low. And my concern is, while I understand that it might be a lot to give the users that information for them to calculate it, I lean more to that side, whether it's individual or through financial reporting. Probably not through financial reporting, but when you get the inquiries to give them the information, because as a preparer, representing that number, and I do understand that you're saying that you're only representing that this is the inflationary number, but we all understand that inflationary number is supposed to be a supplement, a kind of sort of gauge for what the cost is, right? That's the whole premise of this. So me as a preparer, I don't feel comfortable representing that based on all of these decisions that were made in the past and this inflationary adjustment, to do that. If you want to do that, that's fine. But my concern would be, I don't want to put it in my financial statements and essentially represent that, because I know that's what you're using it for. So that's the concern there. I get the proxy and the importance of it, but is it close enough to what it might kind of sort of actually be to really add value there? Or is it just a big number that's a placeholder for a big number that could be $40 million off either way, but hey, who's counting? So that's my concern there, but I want to think about that more and also hear from other board members.
Thanks, Chris. Everybody's eyeing each other. Jackie.
So on the tweaks, so let's start with the tweaks. Clarify that the roll forward is not affected. I think that's great. I'm fine with that. No problem there. By network, for those 800 to 100 or 80 to 100%, we should also give accumulated depreciation. Report by network level, the 80 to 100%, and then give the accumulated depreciation by network. I'm okay with that. I think that's okay. To Jeff's comments on, is 80% the right number? No, there's no right number. So I've been thinking about it, right? So we could raise it to 90%, but then if you've got an asset that doesn't have that long of a life, you might end up with like 2 years before it's dead. You could end up with something that's 10 years before it's dead. Most capital improvement plans go at least 5 years or longer, so maybe that's not such a bad deal. So I can live with 80%, I decided, because there's no good number. On the other concern that you had that was related to which useful life do they use if they've gone through and adjusted the useful life, not quite as concerned about that, because according to accounting standards, if you adjust your useful life, you've got to take what the net value is and depreciate the rest of it. So it's going to get back up to the 80% pretty quick. So that probably is not going to be that big of a deal, I don't think. But it is something that would need to be discussed probably in implementation guide or something like that. So those are the tweaks, I think. On the inflation adjusted, I can go either way on this, but I kind of agree with Chris that we'll give them the old information, we'll give them the old dollars, how long ago it was, and let them figure out how they want to adjust it inflation-wise rather than us adjusting it. Us meeting the preparers. I can see the value in doing it that way. And that was recommended actually by somebody in a user group or a forum that would be done that way. And I thought that was a great idea. I actually think your idea, Joel, gets far better to where the users would like if they have a risk concern, because I think it actually addresses the riskiness of the infrastructure assets better than what we're doing right now. So I can go either way on who does the inflation adjustment, but I like Chris's idea the most. So on the bolt-on, I'm good with the bolt-on, provided that there's no maintenance expense. My approval is conditional.
So,
Otherwise, it goes back to approving everything the staff recommended.
so Jackie, if I think about it correctly, and I've tried to think about this, what extra information would they need? I think the only way to do it without getting into really aggregate, like really detailed information, is to, of that group that's 80 to 100% of whatever that group is for the roads or whatever, is to take the average age, I guess, so that they know on average how much, kind of a weighted average, it would be a weighted average based on the historical cost and the acquisition date of how old it is. But in that case, the number they calculate using that is going to be less precise than the number the individual government can calculate doing the same math when it has all the individual pieces of information. And so you get pretty close to the same number probably, but now you're making the government, instead of adding the spreadsheet, now I've got to aggregate these and do a weighted average, estimated age, which I guess they could do maybe just as easily, but it almost actually sounds a little more complicated of a formula in Excel, but and I think it's a little bit of a less precise number, but I'm not totally, like, I wouldn't lose the bolt on because of that, but my preference I think you're getting a better number just having the government do it, but.
I'm fine with them doing everything but putting the inflation adjustment on it. So giving them all the numbers except the inflator. Let them figure out what kind of inflator they want to use.
Okay. Robert.
But what would you be, I mean, this is what I'm trying to understand. I mean, for the 80%, you'd be just, look, you got 3 buckets you're disclosing. What's in the roll forward, which is everything. 80% with the accumulated depreciation, just one number, not 80, 81, 82, 83, 84.
Right. Between 80 and 100, here's the roads that are
Okay.
at,
And
here's the
then,
historical
and then
costs.
you'll have 100% what's fully depreciated.
Yeah.
Okay. So on the inflation or the replacement cost estimate, how do you get that information unless you have 80, 81, 82, 83, if the government doesn't do the calculation? How would they know? How would the user know?
I'm just saying
Yeah.
that whatever you use as the inflator
Yeah.
is picked by the user, not by the government.
So-
So the data that would go into what gets inflated would all be provided by the government. But the inflator used, whatever they want to use, would be provided by the user if they want to inflation adjustment.
Robert, I think to do it Jackie's way, you have to give them one extra piece of information. It's something related to age. Because you gave them historical cost, you
Right.
gave them accumulated depreciation.
Right.
And that's where Joe was going. You have to give them some indication of weighted average age to then do what she's talking about doing.
Okay. So you're just giving them the weighted average age.
Or some, I'm using weighted average, but
Okay.
some element of age so they could do the math.
Okay.
Just like the government would have to do if they were going to give it to them in an inflated version.
Well, except they already have all the details. They wouldn't need to come up with a weighted average
Yeah, I mean,
age. They have the details. They just need to give me the inflation, adjust it, just boom, just put it in. So I think it's a little more complicated for the government to calculate that weighted average age, but I agree they should be able to do it.
Yeah, they're going to have to come up with so in their spreadsheet, they're either going to put all of the information and then put the inflation adjustment next to it in the next column and multiply that out, or they're going to take what they've got down the column and come up with an average and put that out there. So I don't see in their
It's
spreadsheet
not
it's all
just
that
an
much different.
average though, because you got to weight the average
By
to
year.
be somewhat precise by cost
By cost.
by year.
Right.
And so it's still
Three calculations then, sorry.
Right. But I feel a lot more comfortable giving that very factual information and then standing by it that I represent that versus.
An inflation rate is a fact.
But
Like,
again, it's
not-
what am I giving? What does that have to do with my government and giving you that inflationary rate that I'm applying? You pick the inflationary rate, credit agency number 1, and you pick a different inflationary rate, credit agency number 2, number 3, whatever, right? I don't want to get into that. That's your business, and I can just provide you with the documents in order to make that assessment.
Because that was part of my concern is what level of precision do you have? You could use, or I'm not going to use CPI, but is that an appropriate proxy for the cost of construction of a 50-year-old water main or an expressway that was built and has been resurfaced, 60 years ago and has been resurfaced 3 times in that time period? I think you're going to get a pretty imprecise number that I think having a government disclose that, I'd rather have the user make that own determination, their determination about what factor they're going to use. I mean, on a base level, I'm getting there in terms of the recommendation, the base recommendation. Okay, I see that there's value in that. My concern, as I've expressed on the previous question, is that are people going to actually have that information when they go back and they try and attempt, because they have just had this one lump sum that goes back, and you guys are going to hate me hearing this for however many years. When I go back and I look at what we did when we implemented Statement 34, I got a number that was all the roads. There was an inventory of roads. There was a discount back to, when they had the date that the state DOT had provided or whomever. We discounted back. I have that number. And in that, I mean, there's roads that were 2 years old at that point, and there's roads that were 20 years old at that point. And we picked a really short depreciation period, which in hindsight was really, really stupid because but that's neither here nor there. But I'm afraid that people are going to really struggle with coming up with that number when they do their calculations, because I'm not certain that that they have that information in their records, or they relied on outside parties and or their auditors to help them derive those amounts. And so to get to the level of detail on some of that, even if we're talking networks, they're going to struggle. That doesn't mean that information isn't valid and useful to get to this to as proposed. The accumulated depreciation, the 80%, I'm okay with that. I'm not there yet on the other, though, for some of the reasons Chris expressed. I think there's a lot of variables that would go into that. And is there a slippery slope between historical cost and what people are asserting that we are saying it would be replacement? They're going to say that's replacement cost, even though we're going, no, it's not really. It's just a calculation. So that's my concern on that.
Thanks, Robert. Diane.
Okay, let me try and get through this. So I agree with staff recommendation. The 80%, it's arbitrary. I don't know how to come up with a better number. So I'm okay with that. The roll forward, yes, I want clarity on that so that they're not putting that 80% in that roll forward. Doing the accumulated depreciation, I'm fine with that. Let me see. And then on the useful life adjusted, if it gets adjusted and it drops them below the 80%, I don't really have a problem with that. I don't see that happening real often, but if it does, it's not going to take them long to get back to that 80%. So I'm okay with that. And then the inflation adjusted, I had a couple thoughts and questions. First of all, in putting it, if we have the governments do the calculation, what are we calling that? Because a lot is going to depend upon what you call that table, that people are going to go, oh, wait, what do you mean this is our replacement cost? Or this is, and of course, we're not going to call it that. But I think it makes a difference on what we call it. And inflation adjusted, I mean, that works, but what does that mean? And so I'm trying to think, if I were explaining this to a legislator or to a council, that, so what am I telling them about this? And so that would be my concern about that. Also, I was trying to think of what we're aggregating. I mean, I've heard weighted averages and amounts and years, or are we expecting the government to break out everything that's 80% to 100% and do that individually and then provide one number in this? And I guess I need more about what the vision is. I like the idea and I'm with Jackie. We dump the maintenance costs and go with this. But I need to have a better feel on how much we're aggregating or not, because are we providing pages and pages of data to the users for them to do it? Because that's a lot. Or is there a way to aggregate it? And so that's where I'm at. I'm not opposed to the idea. I like the idea. I think it feels real simple to provide this information, but those are the questions that I have.
I'm just following on because I think it's an important point and I'm unclear about it. Following on Diane's point is two different things. How we expect the governments, on what basis we expect the governments to do this calculation. And I'm talking about the basic calculation. I'm not talking about the bolt-on. How we're expecting them to do it, at what level of granularity. This goes back to my group depreciation point. Like, are we expecting, I read this to say historical cost of assets. So I read, is that what we mean? Do it, provide this. Yes, the disclosure is by network, but if you have assets within that network that are above 80, they go into the network disclosure because those assets, in other words, you're doing it as opposed to, no, I just depreciate my network altogether. And I'm pretty sure my network will never get 80, right? So if I just group my depreciation, lump them all together and do it by network, I'll never get to 80. So I'm done, right? Because I'm pretty sure I'm going to have, and then Joel's and Alan's water sewer plant, the 5% depreciated and the 90 will never be disclosed because I'm just going to depreciate the two of them together, get 50% and disclose it that way. And user will never be the wiser, right? So I think we need to discuss and talk about at what level are we going to make users do this calculation.
That conversation is related to the 80 and 100% just as much as it is to the inflation adjusted amount there, right?
Oh yeah, I'm saying forget
that
about
question's related to this entire.
Right. This is not about
the
the
whole thing.
bolt-on, right? This is at the core of this disclosure. Like if I can get away from, because we've used that example of the two water sewer plants, right? If we allow them to do that because it's all the same network, and we're saying really you can depreciate by network, and all you need to disclose here is the networks that exceed 80%, then that'll never be disclosed. I view it as the assets that make up that. You have to do it by asset, and you have two plants, two different assets in that network. You got to do it by asset, and you got to disclose the asset that's above 80, because that's what users really care about, right? Like that's the problem for users because that asset's a big number for that government, right? And if we don't do that and we leave it vague, then I think governments will just go to the highest level they possibly can.
Want to jump in here?
Carol.
As far as the original question, I did agree with the staff recommendation. As far as the add-ons, I had a question mark by the maintenance. I'm kind of where I believe Jackie and Diane are at, but I'll leave that for later. As far as all the other things, I think they sound good. They will give the users more beneficial information. The 80% I was fine with when we came up with it. I know it was arbitrary. Somebody's going to want 70, somebody's going to want 90, somebody's going to want years. This is a good proxy, in my opinion. As far as the inflation adjusted, I am more supportive of the government doing that because I wouldn't want different whoever, bondholders, citizen groups, whoever, coming up with that information. If it can be more consistent and uniform if my government gives them that information. So I know we're still having robust conversations, but that's where I am currently.
Thanks, Carolyn. Chris?
Hey, Carol, I just had a question to Diane's point of, so when that government though, is that government official is talking to that legislator or whoever, right? And they have to represent what it is that they disclosed. And that disclosure was specifically for everybody else, right? It's not the government wanting to represent something. It's the fact that these outside parties are saying, we need some sort of proxy. Do you think that's appropriate for that government to determine that proxy on the part of everybody around the table and then stand by it that that's our number?
I would rather have us giving that information versus the different, citizen groups, whoever, union groups, whoever coming up with their proxy. I would prefer to be able to give that number myself and be able to defend it.
Jeff, to your point, the unit of account issue comes up in this project a fair amount, and that's what you're talking about, right? And we've given governments the ability to aggregate at a pretty high level, but at some point, if you're depreciating your assets, you have to, the depreciation formula kind of only works when I know cost and I know estimated useful life and I know when I acquired it. And so at whatever level I aggregate that within my accounting system, if I have every individual road and I know when I acquired it, I can get to the same number as if I have the roads, all the roads that I added each year for the last 20 years are their own one line item. It doesn't matter if it's aggregated or not, I should get to the same number. The composite thing's a little bit weirder, but if you weighted average your composite, you should essentially, there's a portion of that composite that is that depreciated if you've used a weighted average for its depreciation.
But I think what I hear is you're getting the calculation of the depreciation confused with the disclosure of that. So I agree that if you want to depreciate by network, you have to have all these pieces of information. You can weight average and you will know those individual pieces. But if we say, and you lump it all together by network, so you can come up with a percent depreciated for your network. And if we say, or we leave it vague, that you can, ultimately what you need to disclose are the things that are above 80% by network, and my network isn't 80% depreciated, even though some of my assets in that network are 80% depreciated, then I have nothing to disclose. But if we say it has to be by asset within networks, then I have to disclose those assets, and I get to the one water sewer plant.
I see what you're saying a bit, but we have to be careful on both sides. One is it's of your total, of the total assets you have in the network, the aggregate amount of them that exceed 80% of the useful life is what we're requiring. So we're not requiring individual assets, but it's also not, you can't just look at the asset class and if it's 60, then 0 are. I mean, I agree. So it's kind of those, you present it in the aggregate. And in
Right.
some way, we've got to save that.
Right. So if I'm hearing right, so it's like, okay, I got 10 assets. I do my aggregate at 60% depreciated. So if it was by network, there's nothing to disclose. 2 of those assets, 10 million apiece, are over 80%. My historical costs, we'll just leave it at that, forget about the bolt-on. So what we were saying is, government, you have $20 million to disclose because you got 2 $10 million historic cost assets that are in this pot that are above 80. That's what
Disclosure would be 20
million.
20 million. It wouldn't be 2 individual 10s. It would be 20.
Right. I would be, oh, that's,
the words hopefully will get us to that's what we're trying to do, but it doesn't mean that those 10 millions were individual assets. Those 10 millions could have been the aggregate of that type of asset that was added in a particular year, which is actually the most common way I see governments do it. Some governments are more detailed than that with their infrastructure, but a lot of them are, I'm going to just, in 2021, here's the amount of roads I added. And that's okay too. I know 2021 roads, this amount depreciated. I know when it reaches the 80%, and now I can take that whole amount and put it in this number.
I mean, I think interested in other board members, but the way I think about it, that's what's important, right? It's because it's within the assets aggregated. I don't need them broken out, but aggregated, I need to, or think users need to know what are those infrastructure, the total of those infrastructure assets within that network.
I think if we didn't do that, I would almost like, why are we even bothering?
Right, because
I
it's,
mean,
because then it's like I'm saying, I said to staff, it's almost not quite as bad as what we have today as infrastructure as one number, but now it's just going to be network as 5 numbers, and now my water sewer plant that's underneath there, because my water sewer network is 50% depreciated, I got nothing to disclose. So we have to make it, the words, I agree, like it's the aggregate of the assets within the network that have exceeded 80% of their useful life.
Did you have something, Robert, or no?
Jeff just,
He got to it?
it's got to be made very clear that is what is expected, because
I agree.
otherwise people are going to just say, they're going to just do a straight calculation and it won't get at your 95%
Okay, I agree.
depreciated water plant.
That was I think our intent the whole time. We need to be sure the words say that, but Chris.
All right, so if we're all on the same page there, then when we look at that population and we look at the piece that's above the 80%, and we start looking at them individually by assets and the year that they were added, we would essentially need to say, okay, 94 roads, 93 roads, 92 roads, 91 roads, 90 roads, in order for someone to apply the appropriate inflationary percentage to them to get them to the number. I'm asking, I'm just trying to put it
in my head, I think the government, it feels like a more esoteric number to give users, but it is what it is. If that's what a majority of the board wants, I'd rather have it than nothing. But I think within that 91, 92, 93, I don't think you have to put that in the disclosure. In my world, you would have all that in your spreadsheet. You'd have another column for all those 91, 92, whatever. You would inflation adjust each of those line items based on the year it was acquired and the cost related to it. I would add those numbers up. And that's just one more number on the spreadsheet next to the cost and the accumulated depreciation. And that kind of easy peasy, that's what it is.
So in the disclosure, you don't have the
No.
lines, you just have a lump sum number.
Have a lump sum number
makes me
that's
feel more
associated with the
comfortable.
cost. Right.
Yeah.
So I have roads that are between 80 and 100% depreciated. They're the aggregate of these whatevers. Here's the historical cost of that number. Here's the accumulated depreciation of that number. Here's the inflation adjusted, whatever we want to call it, inflation adjusted price index of cost, price index adjusted historical cost. It's those 3 numbers.
But I'm just trying to think through, but they like a user or a reader of those financials can't get back to that historical cost number because they don't have enough detail, right? Because of the way we aggregated it for presentation purposes,
Yeah,
they could
yeah.
never recreate that number
No.
without going to us and getting our underlying
Correct.
spreadsheets. Yeah.
Well, because it's aggregated, right, Chris? And again, understanding here that we can't let the perfect be the enemy of the good here in the sense that what I think the user's trying to find out are where are those potential big problems. And so I see those relative numbers. I'm on the phone to you saying, you got some big numbers in your, this network. What are you doing about them, right? What's the replacement cycle? Send me some information about age of those assets. When are you intending on replacing them? How are you going to fund that? Because I have relative senses of those numbers as opposed to line items. In a perfect world, maybe line items, but line items gets more difficult, right? For the governments and consumes more territory in the notes. There are drawbacks to doing that. So that's why I'm like, okay, I'm content with the aggregate amount, because the aggregate amount is I can use that. I can look at what it was last year. I can look at it compared to others. I can make assessments of, does this government have problems in this realm? Do they have big costs coming? And then I got to follow up and get information about those costs. That's the way I see it.
So the question I have is, and I like that approach, and I like it being aggregated by networks, and it seems easy enough, but you've got this. Right, it's going to be calculated by assets, but it's going to be aggregated by networks.
By assets within it, right?
It's going to be aggregated.
Aggr-
It's going to be an aggregate number in the note disclosure.
And yes, by networks. Yes, it'll be calculated by asset, but aggregated and disclosed by network. Okay, so great for the users, but I'm thinking, how are we presenting this? Because the press sees this huge number out there, and how are we explaining that? I mean, what are we calling this? How are we, because that's what I see happening, is that the users get great benefit out of this. But do you, as the government official, want to be going, yeah, that's the number that we're going to be owing in the next 20 years. That's, I mean, I could be up at night thinking about that. So I just want to put that out there as, how is this presented?
That's why.
That's my concern, because it's not a real number. And I don't mean that in a negative way, but it's not a real number. But yet we have to get behind it, and we have to put this really, really big number on our financial statements. And it's different than putting the underlying pieces that make it up, which we absolutely, we bought this back in 86 and it cost us this much, et cetera. But when you start applying that, the rates and determining the rates and picking out which rate, I mean, I don't think we're going to pick out the rate for them. They're going to have to pick out their own inflationary rate that they want to use based on, or index that they want to use. I would not.
I don't think
own
that's.
it.
I mean, I think to me that'd be up for debate. If we want to pick the index and tell them what the index is, and then they go back and use it, I'm open for considering that. We do it with the pension liability on the crossover amount. We tell them to use we may not give them the exact one, but we give them a pretty narrow parameter of AA, whatever. Yeah, so we can be pretty specific if we want to be, or we can, like 34 did, give them a generic description of price index. I'm open to either one of those, but we can be. I don't think there's anything that says we can't pick the inflation. And then what we call it, I always envisioned that you tied it to historical costs. So price index adjusted historical cost, inflation adjusted historical cost. So I mean, if there's something else you like that sounds better, but you tie it to the historical cost, but you identify that you've inflation adjusted it, price index adjusted it. And I don't know, that seems pretty straightforward. And
And I agree with you. And I don't think it matters so much what the index is, because it's going to be a really big number. But that's my concern, having been on the other side and getting the phone call from the press going, what is this number? And I'm not saying that we as GASB have to provide the talking points for the governments, but we better be clear on how we want this to be interpreted if we're going to put it out there. I like the whole concept and the way we can approach this, But I've been in that position and having to explain those things, and it makes me a little nervous because it is such a big number.
To be clear, Diane, I guess we can talk about it. If it's a big number, that's the precise reason users need it, right? That's the precise reason users need it, is if it's a big number. So if that makes that government have to explain it, I don't really have a problem with that, because they ought to have their explanation for what the condition is of their infrastructure assets and what their plan is to do with those Now, I get the fact that it's not a perfect representation. I get the fact that it's a calculation and lots of other decisions could be made about how we replace. So as Chris was pointing out, like decisions were made in 1986 about what we decided to build at that time, and therefore it had a historical cost, and all we're doing is updating that historic. We could make the thing smaller, we could make the thing, we may have to make the thing bigger and do all sorts of stuff. So I get that it's not necessarily the number, but the relative measure of that, right, I think is an important thing. And I'm not necessarily sure if it's our job to, I guess we're interested in others, is it our job to help the governments explain this, right? They ought to know how this is calculated, what this is comprised of, and they're going to be able to explain to their constituents what this number represents and why they think it's not a problem or is a problem, something to be addressed, something not to be addressed.
So I don't disagree that it's not our job to help a government explain, but I think if we're giving them a number that means absolutely nothing to them and might not fit into any projections, again, depending on the historical decisions that go into that went into the old number and the fact that all we're doing is carrying it forward and blowing it up for inflation, then that's where I think there needs to be more of a handoff. And there is an onus a little bit more on us, because it's not just a number that actually truly reflects something more for that government. It's not a OPEB number that actually reflects in, hey, here's the amount that, as of today, the amount of liability that you owe for all of these people. It's not that number. It's this big number, to your point, but not every big number is created equal. So to throw a big number on the financials, yes, you want to see a big number, but the $20 million or the $30 million swing in that big number means a lot. And so if we're going to have to go through all the work and the iterations afterwards to figure out really what that number truly is, then what's the value in the number that I put in the financial statements in the first place, outside of lighting a fire under me to spend a couple $100,000 to get some sort of determination that says you got three choices and this is how much it really would cost if you were to replace this, or you were to replace all of these infrastructures after this date. So that's what I'm trying to figure out. Like if it was the actual survey, examination, whatever, that's what the professionals say. That's the number. You got to be able to stand by that. But that's not what, in this case, that's not the number that we're pointing to. And that's my concern.
Robert.
I'm still in Diane and Chris's camp on this, but just an anecdotal in terms of a number in financial statements and disclosures that is computed in accordance with our standards that literally, I think, means nothing. Okay. And I'm afraid that this might mean nothing. I don't disagree with Jeff that this is numbers that people want to know, whether they're citizens or elected officials or investors or whatever. We participate in the state of Wisconsin group life insurance plan, which is a cost-sharing, multi-employer, other post-employment benefits plan. Computed in accordance with Statement 75, we have a liability that we show in our financial statements of $1.2 million, which is not big in the whole scheme of things, but it's our contributions on an annual basis to that plan are $12,000. The state is never going to make us pay that $1.2 million liability. So when you need to explain this to an elected official, the answer is, well, it's a liability because yes, it is a liability. I mean, and it's appropriately computed. But it's never going to be paid. The numbers that we might be talking about on infrastructure are amounts that at some point you're going to have to pay the bill, but you're never going to pay it in the amount that conceivably would be disclosed in this by applying this, at least not in the near future. And I don't dispute the value of the information that it could bring, but I'm not sure it's going to be actionable, that anybody's going to do anything about it other than get phone calls from legislators and council members and media and whomever.
Isn't that part of the point, is to get phone calls, I've provided information that they're going to be able to use, that a user is going to use, that they're interested in, that it's
But I'm
important
not
to them,
sure that
they don't have right now. They don't have enough, even if we left the 80 to 100, we had a number of commenters said, I don't have any content, that historical cost is so old that it might look like $100,000, but it's from 1920. It's from 1908, you know, and so the context is kind of lost. And so I'm trying to give them, there's some old stuff that, you should be asking about and thinking about. And I'm trying to give you some context to put that in a little better light for a user to use it.
I would almost say, Joel, and I know I might get my house egged and toilet papered in the preparer community, but if there was a way to require that there was some sort of professional assessment of that amount that was above that amount or something like that, that's a number, again, that's the number that you can get behind. That's the number that you can say, okay, this really means something because we had XYZ professionals who came out and did an evaluation and they say there's nothing we could say with that, right? But that's
real replacement costs that we kind of have said isn't cost beneficial. I mean, we've been down that road. And so, I mean, I hear you, but we kind of agreed on cost benefit reasons.
Right.
We didn't want to get egged, I guess.
Right. But then this way, again, to your point of, isn't that the accountability that you expect from a government? But the flip side is it's not, because you're holding me accountable to a number that means nothing to me. That's a calculation on paper that may or may not be close or far away from the actual number of what it should be. So how am I supposed to be accountable to a number that is on a spectrum and I don't know where I fit? I don't even know where I fit in that spectrum.
Jackie.
So I think the question at this point is, do you support the idea of putting the information on there without the inflation adjustment? Because if you do, Joel has said he's okay with providing some information, letting the user put an adjustment on it and see if that works for us.
I was about to ask the same thing. It really comes down to 80% historical cost, cumulative depreciation, and what do you want that third number to be? You want that third number to be an inflation adjusted amount, which is what Joel additionally proposed, or weighted average age, which is what you proposed, or neither one.
So I was just thinking that if we did this only for those fully depreciated assets, then to provide this number, then couldn't the explanation be that these are assets that are still in use, they are fully depreciated, so we want to have some number that we're looking at that's going to give us an idea of having to replace those. And I could see explaining a number like that better and easier than the 80% to 100. So I'll just put that out there.
How is that different? These are close to being done. These are done, but it's the same number for the close to done and done. And also, as governments get better at estimating periodically reviewing their estimated useful lives, we're going to have, hopefully, less and less 100%. We're going to have much
Right.
more. It's only going to have 80 to 100s. At some point, hopefully we'll have nothing in the 100%.
So I was just thinking, because there is no depreciation happening because they're fully depreciated. So all of the others, they're still going through this depreciation, all of that. But since there is no depreciation, there's nothing really happening on the books, that this would give us something that we could point to and say, okay, so this is why this number is here. So just a thought.
And just help me out to make sure my math is correct here. So I appreciate Chris's concern, right, about, and maybe sort of Diane's too, about having to stand by a number that's I've created versus giving the raw materials to the user to make their own assessments. So if that third number that Alan's talking about would be what, placed in service date? But by weighted average of what? A placed in service date. So that even if it's 80, because my concern is the hundreds, they're well beyond whatever their original depreciation period, and they could be many years beyond that. It's still the same thing, right? Because it's still, you know, if it's
How old is it?
right, it's like if 80% of whatever 34 years you're above year 24, weighted average is going to be somewhere between 24 and 30 for those assets. This thing that was 30, but they've hung on to it. It could be 37 years, it could be 40 years, depending on how long they've hung on to it. But either way, depending whether it's 80 to 100 or 100 plus, it's that same weighted average by asset of the placed in service date that then user could take that and say, I got the historic cost, I got the weighted average placed in service date, I take my own inflation adjuster and I calculate it forward, right? That they could do that.
I guess you get, I think, if I think about it right, you get to the same number if you appropriately weight average age, those individual amounts, whatever they are.
But
then
weighted by historic,
by
original historic cost,
Right.
right?
Right. So if I've got $1 million that's 80 years old and $100,000 that's 20 years old, I, you know, my average age is gonna,
Do weight averaging and then
I
take the
think
average
you-
age multiplied by the average.
I think you get to the same
Yeah.
number.
Just making sure my math.
I'm not 100% convinced of that, but I'm 90% convinced,
I'm sort of where you're at,
80%.
right?
I'm A-okay with that approach. I have no objections to that approach.
Can we, I think it's good time for a break. Let's take a break, come back at 4:00 and I'm gonna do some math and try to figure out if I can live with this or not. All right, welcome back. So I've done some math / kind of Googling and figuring. And in the end, I am now 99.9% sure that if we gave them the weighted average, weighted based on cost, age, how old is it, number, and that's there next to historical cost, and accumulated depreciation will be there too, but that is kind of irrelevant to this calculation. That if a user took that weighted average age, multiplied it times the cost, picked their own inflation factor, whatever it is there be, you're going to get the same number I'm talking about calculating, assuming the government picked the same inflation factor that the user did. And so to me, if it makes some of you feel better to not have the government articulate that number, but put the weighted average age number in there by these same categories that we've been talking about for the 80s and the 100s, I'm comfortable that that provides essentially what I was trying to get at. And I would be comfortable with that if that is something that I don't really kind of remember who was where or what, but.
I'm good with that.
Okay, so Diane's in with that.
Hold on, just so we're all clear. So weighted average by historical cost. Weighted average, all those assets that have now weighted average by historical cost of the placed in service date. So you're going to get a weighted average placed in service date, weighted average by the original historic cost. That, if it's that, I can
Yes,
support
that's what
that.
I was trying to say.
Okay, I can support that.
So Diane's Diane's in on that, Jeff's in on that, I'm in on that. Robert
I can agree with that.
can agree with that.
Amen.
Chris is in with that. Jackie,
I can agree with that, conditional on the next, the next question.
okay, well. Carolyn. She's thinking. She's doing math. She's calculating my 99%.
I can agree with that.
All right, thanks, Carolyn. So not Jackie's provisional, but it's moving forward, kind of 6-1 or 7-0, maybe depending on the next one. But okay, and I think we kind of got hung up on that, but it seemed like 1, 2, 3. I have everybody agreeing with bringing forward what was required, adding accumulated depreciation into it. I have everybody as agreeing with that. And then the others were kind of clarifications to make sure we get at some of the concerns Jeff and I brought out, but it was more just as the words go down, make sure it's clear what we're doing, but it's not, to me, a change in the fundamental thing there. So do you feel like you know where we are, Scott, and you're good moving forward, or what do you need
I
addressed?
just want to clarify one thing based on how you and Jeff were talking about it. And that is, you were talking about it in relation to unit of account. So I think we would need to amend it. That it's not just infrastructure assets, it's infrastructure assets or their components. We would aggregate it by major, by network.
Yes.
Okay. And then second, there was discussion about the composite methods that may or may not use, and just make sure the board members and how that relates to the composite method, I guess.
Do you believe the composite method could allocate a portion that they could determine an amount of their assets that are 80% or more depreciated and therefore could determine this weighted average useful or whatever that number was we just said we would do, or no?
You know, there are two examples of composite methods in statement 34, and one of them has the number of years. So I don't think there's any problem with that one.
Right.
The example shows that one asset is an estimated 23-year life, one's 14, one's 7, or something like that. The other methodology talked about just said the average remaining life of those assets is 20 years this year. So you take 5% depreciation. Well, under the assumption that next year you look at it and it's either 19 or 20, or maybe it's grown or things like that, and you take whatever, the percentage is related to that. Those, if a government at implementation of 34 did that, they have not done, I don't believe they would have done to the level of knowing the date to their assets.
It feels like a lot to spring right here, but I have kind of been in a little bit of a worry about that since inception. This is important enough to me, and I think that I would argue we continue to allow a weighted average composite method, which is the first example you provided. And if this, we don't want governments to be able to make some choice that gets them out of this disclosure to do that weird composite method, I'd be fine just saying that's not allowed anymore. And those governments that do that are just gonna have to change. But that's kind of a lot to maybe spring on board members without a paper or something, I guess, even though I know we're running short of time for a paper, but
Okay, we'll talk about that in the transition section anyway, so
okay,
we can talk about it. We talk about transition.
okay. Were there anything else, Scott? So next
Okay.
question then. Any final thoughts? Well, good. Next
Okay.
question.
The next section is on the proposal in paragraph 22 of chapter 6, the preliminary views, that governments should disclose maintenance or preservation expense for its infrastructure assets. Now it would be by network. And that paragraph went on to define what maintenance expense is for, and how that is applies to governments that use historical costs net of accumulated depreciation to report their infrastructure assets, and then for governments that use the modified approach, what the definition of preservation expense that would be required from that disclosure. The feedback received related to that preliminary view that disagreed with it basically questioned the context that that disclosure would have. Some respondents noted that there's no, specific amount of maintenance expense necessary at any point in life of an asset. Is that providing context versus the age of the infrastructure assets that a government has? Some of those respondents noted that maintenance expense isn't necessarily what's necessary to keep those assets up, which was one of the intent of the disclosure, was to allow for users to get some information as to related to, as we talked about earlier, deferred maintenance, and are they doing adequate maintenance levels. And so, those governments that are those respondents that believe that, there's that amount will just be budgetary, will note that there, will be years in which they'll spend money if they have money on maintenance, and there'll be years that maintenance isn't done, but combined with the fact that there's no necessarily correct level or best practices level on most infrastructure assets, that it will not provide, as I said earlier, context. Some respondents noted that this would, in some cases require a change in the way that they account for their maintenance expense. Again, they would have to change their accounting systems to account for this, because they do not believe that they budget or, report expenses at that level of detail in their accounting system. And then some of the other respondents, wanted more information related to the specific definitions of maintenance expense and preservation expense that were included in that paragraph in the preliminary views. The project staff recognizes, as was mentioned by, and I started with, as mentioned by a lot of the respondents, that there is no, direct correlation between maintenance expense on an infrastructure assets based on its size, age, things of that nature. But we agree with the, reasoning the board had in the preliminary view that, as I alluded to earlier, that the intent of this was to provide users with some information as to the amount of work governments are doing to maintain or preserve their infrastructure assets. And by providing that information, users can compare that to what they would expect that government to have to spend to maintain their infrastructure assets, so that they are usable and, won't fall apart early or have to be replaced early or things of that nature. In relation to the respondents that talked or showed concerns about the definitions, the project staff believes those definitions, explain what was necessary. There were some respondents that got into, how to allocate internal costs rather than maybe the contracting out for the work done, how they should allocate internal costs. In prior standards, the board generally doesn't go into that detail and deals with that with a Q&A, but if that is something that concerns the board, we can talk about that as well. And so, those were the larger level comments related to that. As I said, project staff agrees with carrying forward this to the next due process document. And with that, I'll turn it over to the board to discuss question 6.
Thanks, Scott. Board member responses here. Jackie.
I know this is going to be surprising, but I oppose carrying this forward. Based on the field test and what we saw, it's becoming increasingly clear to me this is really not easy for governments to come up with. They're dumping all of their maintenance into one maybe capital asset category. They'd have to break it out between capital assets and infrastructure if they could do that. They don't have good data on really what it's included in maintenance necessarily. They raised a lot of questions about how to do this. I think that the information we're providing related to risk that we just decided in the last question is actually more helpful information to users than this information is going to be when there's no context for it. There's no real, how do I put this in any kind of place where it's useful for me to evaluate it when I really don't even know what it is or what it's comprised of. So I'm opposed to carrying this forward. If it eventually I lose this, which I very well might, then I have some other suggestions.
Thanks, Jackie. Robert.
We'll just get this out of the way before. I also am not in favor of pulling this forward. Besides the comments that Jackie made in referencing the field test and the feedback we got from commenters in terms of the difficulty assembling the information, I think there's a bigger issue, and Joel sort of alluded to it when he was talking about some of the tweaks in terms of capital, quote, capital maintenance versus maintenance. I'm not certain, or I'm not convinced that the information that might be disclosed would actually provide what users are looking for. In that regard, example, you fill cracks in a road. Most people would consider that routine maintenance that needs to keep the asset available to provide services. You'd report that as a maintenance expense. But in the whole scheme of things, it's probably not that major. I mean, for a state or a large county, sure, that'd be a lot of outlay, but I'm not certain that that's going to tell a user that, give them good information to determine whether that level, it's a dollar amount, it's however it's derived, if you can come up with a cost accounting system or however accounting records or whatever. But I don't think it's going to help them to assess the potential service disruption or I think you use the ticking time bomb, description, that some of the things we talked about in the previous question might give them a better sense of. And conversely, if a government determined that amount, if they perform those expenses or perform those activities, they have expenses, but they're really not significant or material and they don't disclose them, then what inference is drawn by someone if that disclosure is not there? Because it's just not, a significant amount. And it probably depends on the size and the nature of the government. So I would not be in favor of carrying it forward.
Thanks, Robert. Jeff?
So I guess I'll start by saying I support the recommendation. I think this, while not as important as the 80% disclosure, I probably agree with that. I still think it's a pretty important disclosure. I think we heard some from some of the users. So in the PV, we sort of discussed about, and this is all under this comment we heard repeatedly, there's no context for this. No context. User doesn't understand what it is. And while I agree that there is, I can't say, I know what you spent it on, I know what the relative costs are, I know what the user doesn't. But I think, we had a justification in the PV, which staff cited as one of the reasons for supporting that the user could make their own determinations about what should be spent. I think we also heard from users that this allows them to make comparisons across similarly situated governments, and also allows them to make comparisons against depreciation expense. So I can compare that. And again, what users are trying to divine is they're trying to divine what is, how this works, how these governments are in comparison. So I want to be clear, we're not looking at governments in isolation. And I think a lot of the perspective that governments are talking about assumes that somehow the user is looking at them in isolation. And we're looking at them across governments, right? I can create similarly situated counties in Wisconsin that have similar networks and say, what are these guys spending? And what are those guys? And I understand it's not a perfect approximation, but I can start to ascertain particularly meaningful differences and say, these guys seem to be spending meaningfully less than that other one that has a similar road network or whatever, right? And so I can make those comparisons. And without this, I can't do that. I also am sensitive to the other point was the cost burden, which we heard a lot about. I heard other board members talk about. So I am sensitive to that. And so I think one of the other comments we heard a lot about was you guys need to define what this is. You need to talk about what expenses. I think I agree with staff that I don't think we should go as far as to define it, right? That would be too, but I would be in favor, if we could, right, of putting some guardrails or description around what we think maintenance expenses are. In other words, not just leave it maintenance expenses. You figure out what that is. Give them some sense of what, because if we don't, then they're going down a road of, I got to allocate personnel expenses, I got to create timesheets, I got to do all of this stuff, which elevates the cost burden. And then I start to say, well, okay, now hold on. Cost benefit starts to get a little bit tricky here. But and I'm not saying we can, I'm not saying it would be easy, but I'm saying if we were to get to a place where we feel like, okay, we're putting some contours here about what maintenance expenses are, and they're reasonable, so they're not as bad as some commenters foresee them to be. And the more we can do that, the more the cost equation to me declines and the cost benefit elevates. I guess the last thing I'll say is that I also, maybe I'm reading the tea leaves, right? But if we get rid of this, then my 10-year table in RSI goes away, right? And if my 10-year table in RSI goes away, and potentially all of my, we got rid of the first one about policies, we have one coming up on policies, if that one goes away, then of the 5 big things I've been going to users saying, this standard could give you this information, and I tick off policies, changes in policies, 80% test, measurement expenses, 10-year table, and I walk out of here with 1 out of 5, then I don't know if I could support the standard, right? Because then I'm losing, and they're not all equal. Granted, the 80% is important, but then I've lost 4 out of the 5 things that I think, and then I'm like, okay, if this is more generational attempt to improve infrastructure reporting, I'm not sure we've gotten to an improvement that's worth the time period we will probably take a next crack at it for.
Jeff, one thing you mentioned, and I saw it in a couple of user comment letters, and I was trying to understand it. When you compare maintenance expense to depreciation, what's that telling you? Like it makes sense to me to compare CapEx maintenance to depreciation, because now it's about, am I replenishing what I'm replacing? How does this quote unquote regular maintenance as compared to depreciation? Like, why the comparison to depreciation?
I mean, I can't give you the answer, right? But I think what a lot of users might say is I'm trying to get some sense of how are these things wearing out and how much money. So if your useful life is right, it's wearing out over 30 years. How much money are you putting in? Are you putting in an amount? How do I assess it compared to what it's wearing out? Now, it might not be the best thing, but given what they have, they have very little to go by, right? They're going to say, okay, if it's wearing out by this amount per year, are they putting in something akin to that amount to get it to the end of its useful life, right? I think the view would be if it's much less than what the depreciation expense is, then how could you be, maintaining the asset for its useful life period?
I don't know. I almost feel like it's being misused. Like I don't, if that's the way they understand it to be, I think they're misinterpreting what it is. If it's just to give you some kind of relative number, I get maybe so, but it purely comparing it to maintenance as a kind of a way to replenish what you're doing. I don't know. That's not what this number is doing, and so that gives me worry. And I hear you on your other things. We're losing if this doesn't go, but the estimated useful lives is a big deal. Componentization is a big deal. The not major class, the network is like there are other things other than the 80%, but I understand there's a number of things going away that were proposed to be added. Diane.
So I just wanted to point out, Jeff, I think you need to add to your list the decision we just made as far as that weighted average number and what they can do with that. So anyway, overall, I disagree with this. For the reasons that Jackie outlined, the reasons that Robert gave. And then I wanted to add that, and Jeff talked about the comparing between governments but when you do some comparison, you've got direct expenses, you've got indirect expenses, you've got governments that do everything internally, and you've got other governments that contract out everything. And what expenses are you using? Which ones are you not using? I think the comparability is really lacking, even if we put parameters around what we're looking for, because of the way the governments manage their repairs. And overall, I just don't believe the benefits outweigh the costs, or in the words of the great Jeff Praviti, the juice doesn't, the squeeze doesn't know, the juice isn't worth, I can't even say it.
I'm kind of glad she butchered it because that would have been a dagger.
You don't have to live with that one, JC.
Carolyn.
With this one here, I really wanted to see this carried forward. However, based on the challenges that the field testers had and to me, a big questions out there as far as would this be reflective of outsourced and in-house, and the problems that I see with coming up with that number. I just think it's at this point in time, it's just asking the governments too much to carry this forward. So I disagree with the staff recommendation. But I will be interested in hearing Jackie's alternative at some point.
I'm not gonna say it, no.
Carolyn. Thanks, Carolyn. Chris.
So this one was tough for me as well, in part because I think if you could truly give this information, then it could be a proxy to the things that we were talking about, and Joel, you talked about before, like this idea of we can't give you deferred maintenance, and that means different things to different people, but we can give you some of this historical maintenance numbers. That said, I think what was clear in the field test, I mean, I've never seen a Homer Simpson meme in real life in the field test, the one where he falls back into the hedges. And it was like, that's what some of these field testers were doing. They did not want to touch this area because it was so problematic. Like there's so many things happening with being able to capture the numbers, and then outside of an organization capturing the numbers, you got to capture the numbers across organizations into all the points that were raised to make it consistent. And to know consistently that that user or whatever user, not to point at Jeff, but that user is comparing apples to apples. There's just no way to prove that out. And so while I support it in theory, I just think practically we're not there and we couldn't do it.
Thanks, Chris. So Jeff, it doesn't really matter, I guess, what I do. I'm interested. Like I certainly have become on the fence. I think when we went into the PV, I was pretty far in on this one. Like I thought this was this kind of not proxy, but directional information about maintenance. Users talking to me about deferred maintenance to all of us, really. It's a big deal for them. It really is. And I wanted to try to provide information, and I felt like this was doing it. I kind of, somewhat back to my comments on the last one, I kind of have evolved in my thinking to really the maintenance, the bigger part of the maintenance they're talking about is the CapEx maintenance, and we just dealt with that for the last hour. So I do see this as the smaller part. I still think it's essential. I still think it's additive. I think it's beneficial. It starts becoming a cost benefit choice to me. And I was interested in hearing, I was kind of worried about the misuse of the number a little bit, but we could, through education, we could get around that, I think. I think there's benefit to comparing government to government, but the benefit of that is lessened by we kind of have to figure out a way to develop this consistency in the information and with the contracted services versus internal. And at some level, I think some of the cost governments we're talking about was probably overblown. You're changing systems just to break out your maintenance expense number in 2 lines. But I think there was some realness to it. And I think this idea, we actually got into this conversation back in July of 24 because we had a Gas Act comments or something about what about beautifications or plowing the road or salting the road or cutting the limbs on the trees of the road? Like, is that maintenance? Is that getting it to the end of its estimated useful life? And we kind of hemmed and hawed about it for a little while. And then we kind of came back around to that stuff's just going to be insignificant related to the overall things. And so we kind of moved forward thinking, yeah, there's going to be some of that, but it's just not a big enough piece to worry about. And I've become less convinced that it's not a big enough piece, that I think just hearing about all the different, and thinking about, I've got, a state DOT person. Well, that DOT person, I probably can allocate his salary pretty easily, but I'm at, the city of Lilburn, Georgia, and I've got a maintenance guy, and he fixes the building one day, he cuts the grass the next day, he fixes the road the other day. Like him or those people splitting out their time among that, you start getting a little unwieldy. And then it becomes, well, government that does it internally versus the one that contracts it out. Now you're not as comparable as I would hope you would be. I'm interested in the guardrails. I was interested in continuing to pursue it, but I think we had fixes to do. And that, at this point, it kind of doesn't matter. I guess my vote would be, I don't really know what the fixes are. I haven't necessarily heard a fix yet. I would be worried we could find them, but I'd be interested in trying to figure them out if we could. But I don't know that we have enough support unless anybody else is interested in tentatively, like, let's not necessarily yes vote it, but let's relook at an improvement and then vote again? Carolyn would be in favor. I got Carolyn.
I want to hear Jackie's alternatives and see if that maybe gets us some of the way.
I believe that this number does have value if we could get to it in an unwielding way.
Were that what your fixes were related to, Jackie, or were your fixes unrelated?
Well, yes and no. I put three things forward, but one of the things that I had talked about was the idea that if we're going to do something, get it out of the notes, put it in RSI, keep the 10-year schedule, and just have them put the information in there. Because it's not going to be comparable. I don't care what Jeff says. You can't compare it across governments because it's going to be all over the place. But if you can at least compare it across the government then in a 10-year schedule. And don't make them break it out so much. Make them break it out between capital assets and infrastructure and just give you that figure. At least that's a number that you've got. And if they can't, they're having a hard enough time just identifying what it is right now. And then let them use budget numbers because budget numbers are probably better than anything else they've got to use. So it's not a good number, but it's maybe better than nothing. And it's a baby step instead of a giant leap, which they might be willing to take. I don't know. So those were my ideas.
Okay. I mean, the communication method to me that like either it's essential or it's not essential. And just because it's an RSI and isn't audited, if it's still not a comparable number, government to government or whatever, it's.
No, it's not. It's
that doesn't solve my concern, right?
But it does get to the idea of giving the user a history of what this government has done with regard to maintenance, which I think is the best we can probably do with regard to that. And I'm not thinking it's necessarily essential information. So that didn't bother me.
I didn't find those overly persuasive. Anybody else willing to go? And at least I don't know. I feel like I would be turning it over to Scott and saying, I don't know what to do, but you got any ideas? I'm sure if he had them, he probably would have already given them to me. So I'm a little reluctant to do it. But Jeff, do you have ideas of?
No, but I will say of the two alternatives that I have, which is nothing, or something along the lines that Jackie's talking about, I think I can I'm sure I'm in a better place with something that Jackie's talking about, given the alternative, right? Because at least we could talk about the 10-year table is there, and I could say, I could make a justification that okay, like because of its uncertainty and the difficulty, I'd rather explore what Joel's talking about, like a better way to get to the description of expenses. But if we feel like, we simply can't get there, therefore there's too much, uncertainty or whatever, therefore, even though the users want it, we can't give them what the users want. Therefore, it's not essential. But this other information could be very helpful for them to placing these financial statements in context, right? Which is what RSI's job is to do. Then I could be like, okay, maybe that would, like we say, start to be a step in terms of how we could improve the reporting.
Scott, in your view, if we said we're not moving forward with this disclosure, when you bring the RSI to us, would you keep the RSI table in there? Or would you say, well, if it's not good enough here, it's not good enough there? Or?
Well, the definition in Con 7 is obviously more specific for note disclosures. It talks about individual items, and that's how you apply it. I guess we haven't really faced this yet, but I think an argument could be made as Jeff just alluded to, that each individual item maybe is not essential, but together they put the reporting
Some kind of context.
in a historical, economic, or I forget, is it social? I forget what social and political, I think there's actually four. Yeah, but most importantly, I think historical context. I think that argument potentially could be made, but thinking of the statements we've talked about since Con 7 has been issued, I'm not sure RSI has really come up, so.
Okay. Will you tell me but you wanted to use budgeted, did you envision a budget to actual? Or you said use budgeted numbers, I think. What,
Use budgeted numbers.
like budgets, not
Well, although
actuals?
the actual from budget would work too, probably. But I'm thinking expenditure numbers as opposed to expense numbers, because we use the term expense constantly. And I think that they look at this on budget base or on expenditure level more than on expense level. But
Yep.
Robert can probably address that better than I might.
Well, it could be both. I mean, if you're talking about a enterprise fund, water network, sewer network, whatever, electric network, you could have expenditures, or I mean, you could have expenses. I don't think it solves the issue, that the underlying issue from the commentary. And RSI is not on the agenda for today, but even if that was retained, I don't think that solves the problem. And the budget to actual, in some respects, probably makes it more onerous on people, because certain governments are going to be more sophisticated and have specific maintenance budgets for these, and primarily probably larger governments. But your example of Bill in Woburn, Georgia, they're not going to have that when they're allocating that out, either on a budget or an actual basis.
Just to be clear, my alternatives were only there if I lost the vote.
I appreciate you sharing your ideas anyway, though, Jackie. I do. I mean, this whole expenditure versus expense thing was something we were gonna, well, I guess we might still have to deal with, in that this was, to me, we said expense, and we intentionally said expense. It wasn't expenditures, because the idea is that the capital expenditures are now they're capitalized. They're not maintenance. They don't meet the definition of what we described. And so whatever we did in the RSI with the estimated number, it was at least going to have to be a converted from expenditure budget to an expense budget, which governments don't expense budget. And you were going to have some kind of process to figure that out. We'll look forward to the RSI. Maybe we will revisit the RSI when we talk about the RSI. We'll leave it in, and then you can think about how it plays out, given that we are not moving this one forward, it sounds like. Because I guess, like Jeff, I'm interested in saving it if I can, but I kind of, in this way, tend to agree with Robert that the things we've talked about so far haven't necessarily made it any better. So even in RSI, so I don't know. But leave me in a vote for wanting to try to make it better, but we still are in the loss column for this one. That's all of us, yeah. Any final words? Move on to the next one.
Okay. Moving on to the fourth of the proposed disclosures in the preliminary views. That was in chapter 6, paragraph 25. And it was a disclosure on the government's policy for monitoring and maintaining or preserving its infrastructure assets. and that policy be disclosed in the summary of significant accounting principles. The feedback that we received that disagreed with that proposal, some of which was respondents that cited the fact that they don't necessarily believe this is an accounting policy. They believe it's an operations policy, and so therefore should not be included in the summary of significant accounting policies. Some other respondents noted that they thought that what would be received would be just a boilerplate discussion. Some other respondents thought that they would need assistance from external parties to prepare this type of disclosure. And then there was, as with the prior proposed disclosure, there were some that requested additional detail as to what should be included in such a disclosure, including some of those who asked what would be disclosed if the government didn't have a policy itself. And then the last group of information we received was some requesting that the same disclosure be applied to all capital assets. Government, provide their maintenance or the monitoring and maintenance policy for all capital assets. Although staff believes that, because this policy affects amounts reported in the financial statements, it could be considered an accounting policy. We are concerned about the potential for the boilerplate presentation, especially from, as we found during the pre-agenda research leading this process, that there's no, basically best practices as to what to have as a policy. And so therefore, the staff is concerned that to get enough detail as to what the government is actually doing, a government would have to present more information than, generally is expected to be seen in the summary of significant accounting policies. There is no such, like they could refer to the fact that they use, Scott's best practices for monitoring their infrastructure assets, along with the fact that there potentially would have to be different monitoring those types of policies for each different type of network. I'm trying to say it the way we agreed earlier, network instead of major classes of infrastructure assets. And so therefore, the project staff is recommending that the disclosure not be carried forward. If the board disagrees with that, we will discuss some of the other issues that were talked about to better define the disclosure.
Thank you, Scott. Board member thoughts here? Chris?
I disagreed with the staff recommendation. I think we can have conversations around what information ultimately would be necessary or the most important information to disclose in that summary of significant accounting policies. But I think that if we're, we talked a lot earlier on in this project about placing a spotlight on the modified approach and how important it is to citizens, stakeholders, et cetera, and the way that it displays information and the value that you get out of it as opposed to just straight depreciation. So whether it is Scott's method for bridge evaluations or whatever it's called, or, hey, this, we rank them between, 0 and 100, and everything has to be over 90% in order for us to consider it a passing assessment, and how long the assessments are. I think all of that stuff is really integral to understanding the modified approach as it relates to the organization whose ACFR you're reviewing. And I would like to see that in the summary.
Thanks, Chris. Carolyn?
I did see the validity of the arguments that some of the stakeholders raised regarding it's more of an operational policy, but I also thought that could be applied, if you pull that string, that could be applied to almost any policies. I saw it more of a financial policy. As far as if you don't have a policy, I think that's information, if you have it, great. You would present it. If you don't have it, that's also information that could be useful. I didn't go, I agree with a lot of what Chris also said. So, and I guess to sum it up, in summary, I disagree with the staff recommendation, and I think we should carry this policy forward, and we could have that discussion as far as the other issues that you wanted to raise, Scott.
Thanks, Carolyn. Robert?
I agreed with the staff's analysis, but as opposed to some of the other topics, I actually think this is important. I think it provides having the policy or having a statement about what you're doing, as opposed to some of the issues that could be encountered by governments trying to comply with some of the other proposals that we've discussed. I think it's important to say that I'm concerned about boilerplate, because I think that tends to be where people go. But on the one hand, if they don't have a policy, and regardless, avoiding negative disclosure, we have standards, GASB 40, that has, if you don't have a policy, you're supposed to disclose it. If they don't have a policy, I think that a user would like to know that. So I also am going to disagree with the staff recommendation.
Thanks, Robert. Diane?
So I agree with the staff recommendation. I don't think this fits with statement 62 and the description of disclosure of accounting policies. I think this could become boilerplate, and I don't believe it belongs in the disclosures.
Thanks, Diane. Jackie?
I also agreed with the staff recommendation, basically for the same reasons that Diane just discussed. I looked at it and I don't think it actually fits the definition of an accounting policy. There were a lot of governments that indicated that they don't actually have policies. So if, in fact, the board decides to go ahead with this, I would think that it might be worth considering adding process to it, because a lot of them said they have processes for maintaining and preserving, but they don't really have policies for preserving and maintaining.
Thanks, Jackie. Jeff?
So I wrote to staff that I was a little bit on the fence in this one, about particularly in the context of what had come before and the recommendations. And of course, I don't know how they turn out. So in the context of all the decisions, do I think this has I wrote this has the possibility to be a well-crafted summary of how a government, intends to handle their infrastructure that could provide essential information to users. I think, as Robert was sort of indicating, I think that answer could be yes. I do think that done poorly, it could become boilerplate. I think there's certain things we can try to do to prevent that. I think, this call for tell me what the policy should contain, to me, struck me a little bit as like, tell me what my boilerplate should be, right? And I don't think we should do that, right? Because I think it's up to them to figure out what and I'm not necessarily averse to what Jackie's talking about, if it's a process as opposed to a policy and how that works. Like, I'm indifferent to that. It can be a policy, but it's your process. Like, what do you do? How do you maintain? Give me a summary of how you maintain your infrastructure assets. I think, as we've heard and decided previously, that's essential to users. Users wanted to know that. So I'm going to come down on the side of what does that mean? Disagreeing with the recommendation and thinking we should do this, we should have this policy. I'm open to some language we can include in there to avoid boilerplate. We've attempted to do that in other places, right? And we'll have to think about like carefully, you know, do we even want to entertain illustrating something like this? Maybe not, because the illustration may become the boilerplate, right? So, but whether there's any more context we could put in about what we're aiming to do, what this policy or process deals with, that could be helpful to them, but just leave it at that. And I would then hope that governments will do what I hope they do well-crafted summaries of this rather than just simply view it as a boilerplate exercise.
Thanks, Jeff. So I find myself on kind of the flip side of the last thing where I see a version of this that is what you guys are describing. I just don't see it as realistic. I'm interested in any exploration we can do to add to the words to try to achieve that well-crafted, because my vision of it continues to be, and it was, I was against this one going even into the PV. So I stay in that camp that I'm against it, because I think it will either be boilerplate and not say much, or it's just too detailed to go through all the infrastructure, the different networks of infrastructure that a government has and how they're going to maintain them. And it's going to be really voluminous. So I kind of don't, this well-crafted summary, I'm very skeptical we will be able to achieve. And so I lean towards and actually vote towards not moving it forward, same as I did on the PV, but I'm open to the improvements or whatever extra words. I certainly don't think we need to do an illustration. And I tend to agree with you that give me the kind of components it's supposed to have or whatever is, I don't know, sounds like I'm developing the boilerplate, which is all of that is like, yep, that's exactly what we were going to end up with and why I don't think we should move forward with it. But I'm an optimist too. Hopefully we can get better with that one. So I have it at 4-3, moving it forward.
Joel, I will say, I just want your perspective, because when we talk, and Jackie and Diane as well, if they, like when we talk about boilerplate, we talk about the same exact language in every single document. But what we're talking about here is they're going to be different things that you do that might be different from another government, right? Or am I misunderstanding what we're talking about in this summary?
My version of boilerplate is everybody's going to write something similar that sounds high level, like I spend enough to maintain my infrastructure such that it's in good working condition, blah, blah, you know, some words that don't really say anything, but say, yes, I spend money to keep them at appropriate working condition.
So help me
That
out
sort
with
of
this,
thing.
because maybe I misunderstood what we should be putting in there, but things around or ideas around the frequency of evaluations, if you're evaluating the total population or if you sample the population, are those the types of things that you think would fit there, or would be more in the actual capital footnote or infrastructure footnote?
I mean, I could see how that might be in your policy for monitoring, right? The
Yeah.
infrastructure. I could see how that would, but then to me, you're starting to get into a lot of detail. Like if you're going to do that kind of level of description for all the different networks of infrastructure you have, and then layer on top of it what you do with that monitoring to maintain them, you're either very detailed, which would be descriptive. It's just going to be a lot of information, or it's going to be too summarized. But that's my concern. That's my belief, I guess. Did I convince you otherwise, or no? You're
No, I mean, I'm going off of what I'm also basing this, right, as we all do on our own experiences. And we do a summary, it's an RSI, But in Delaware, we do a summary of the modified approach, and I think it's pretty concise and gets to those major points. And so if we would, in my mind, if we would take that and lift that, most of it into the summary of those accounting policies, I think that gets me there. But again, that's just going off of, one example of what I see, but I don't know if that might be too detailed, not detailed enough, whatever.
Maybe so. Not having had a lot of clients that use the modified approach. I've seen it, right? I don't, my recollection of those policies were that they, I don't know. I mean, we had a number of commenters tell us that we were trying to backdoor force the modified approach on everybody. So I'm sensitive to that, but I guess even with this policy, even though I'm still against it, I don't think it's going that far, right? Because number one, we're not requiring it. If you don't, we'll get to that in the next question, I guess. But it seemed like the majority of the board would say, if you don't have one, just disclose you don't have one. So we're not forcing it on you. And then I think the bigger part of the modified approach is the structure and requirement of you've got to do this every 3 years and you've got to report all this stuff. And their policy might we do it every 10 years or whatever. It might not meet our minimum. So we're not forcing any cost on them. So maybe that's a good kind of directional I don't want to say example, but as we're educating and talking to stakeholders, if you're looking for examples, go look at what some modified approach governments do for that portion of their disclosure. Maybe that gives them some ideas. So be so. Anybody else? 4-3, that one goes, we'll keep it in the ED, which means we do need to do question 8.
Yeah. Yeah, I had alluded to two things. We only asked a question on one because we've dealt with the topic of, applying this to all capital assets in the other proposals, knowing that, how that panned out. If that panned out differently, we would do the same thing here. But we did, as a couple of you mentioned, did ask the question that if it is carried forward as the board has just voted to do, should the government specifically state that they have no disclosure? Generally, negative disclosure is frowned upon, but as Robert cited, there are 3 or 4 instances in our literature where the board believes it's important enough, and the project staff believes that the board keeps this and believes it's essential enough to be disclosed. If they have a policy, then users should be told that they don't. And Statement 40 is probably the best example of a similar type circumstance.
Scott, what's your view of what Jackie mentioned, or that some of the commenters mentioned, that a process or a practice, like I don't have a policy, but I have my normal operating procedures, but they don't consider it a policy? How have we dealt with that in the past?
I believe 40 dealt with that. And I believe it basically says it's the same thing. I'll go back and look.
It kind of equates that a formal policy, but some kind of formal practice or normal operating procedure is the equivalent and should be included. Okay.
And I believe unless the board tells me, I believe I took that as the intent of the proposal originally. That, we called it policy because it's in the summary of significant accounting policies, but
Jeff is asking if we can read what 40 says. Yeah, give us a minute. We could do that.
That way, just for context.
Paragraph 6 of statement 40 on deposit and investment policies says governments should briefly describe their deposit or investment policies that are related to the risks the statement requires to be disclosed. For example, it gives an example, like what, yada, yada. Then it says, if a government has no deposit or investment policy that addresses a specific type of risk that it is exposed to, the disclosure should indicate that fact. So I don't, at least in that paragraph, I don't see anything that equates, I don't know if there's IGs or if it's in the basis or somewhere else that.
And I would say what I just said was opposite in the Q&A. And because it's easier search, I was in the original. It states that it has to be formally adopted to be considered an investment policy.
Okay.
And so that if they're just by practice doing it, they would not. So if the board wanted it to be a lower level, as you know, a process like Jackie brought up, then I think we would have to specifically state that and
Come up with language
do we
to
really
do that.
it gets dangerous there is where they were calling it
I
a
know.
policy, a significant accounting policy.
So let me make sure I get this straight, right? If we, which I think we did, I think we agreed it could be policy or process in the last one, like it doesn't have to, did we, first of all, I guess, did we agree to that? And if we agreed to that, then it's not just policy here, right? If you don't have a policy, or if you don't have a process, or then I worry about the,
I mean, the preliminary view was should disclose its policy for monitoring and maintaining. And Jackie suggested that we should consider something like that, but I don't know. It wouldn't have changed my vote, but I kind of assumed everybody voted for policy, but if that changes people's view, then we you know, we could certainly go backwards. Jackie.
The only reason I made that comment is because a number of respondents indicated that they don't have formal policies. So I guess it goes to how much disclosure you want here, because you may end up with a lot of people going, yeah, well, we don't have one. So you may not get as much information as you think.
right, which is why I was sort of receptive to the or processes notion, right? Like I really want to get at how do you oversee these things rather than what formal manner do you have to oversee these things, right? So I think it's more of the, I think it would be to me more of the former rather than the latter, right? And if so, then going on to this question, if you have no policy and you have no process and it's silent and I see nothing as a user, no disclosure about this, I'm on the phone to you. Like, how do you oversee your assets? You don't have a policy? You don't even have a process for overseeing these things, right? So I don't think we need to go into the territory of you need to say you have no policy and no process.
Playing
Right.
devil's advocate for a moment, though, every government that on some level is doing something to maintain their roads and bridges or any of their infrastructure has some kind of process. Might be highly informal, but it's a process. So I think you open up the process world, you open up to everybody has something. And you just open it up, and that's not what you really want. What you want is something that's structured, documented, approved, we're going to rely on. Like every government's doing some kind of process to do something related to their infrastructure.
But am I stuck on the world of policy? If I said policy or formal process, do I now get like, I'm not talking to go talk to so-and-so in room so-and-so. He knows what our procedures are, but there's got to be some formality to it, right? It's not, but as far as, you know, the process you need to do to get it to be approved as a policy, you know, like that's
I
don't wanna get caught up in
thought
it.
about saying formal practice and I stopped myself short because if I have a formal practice, that's semantics. That's a policy
policy.
to
Yeah,
me.
it's a
And if it's formal,
Policy.
it makes it a policy. I would think so. Not everybody government might call it a policy, but in form over substance, it's a policy.
I
If it's
think it goes
formal.
to the level of approval based on what some of the things that I was reading had to do with policy being made by the formal body and stuff like that, that the management doesn't make policy, the elected body makes policy. That kind of thing is where I was thinking that people were getting hung up.
I'm kind of torn because I don't know how you have audited financial statements and no fixed asset policy at all, like just zero. Like that I can't even wrap my head around how you have zero, how you have capital assets, but yet you don't even have a how did you pick 5 years for that truck? You picked it out of the sky?
In some respect, to periodically review your estimated useful life, you've got to have some idea of monitoring. I mean, I have a policy for maintaining, but at some level.
To that point though, but if you have an estimated useful life and you're periodically updating those estimated useful lives, you maintain those assets to get you to that estimated useful life, what extra is a policy going to tell you? If you're actually doing the periodic review of the estimated useful lives and you're maintaining assets to get them to the end of that useful life. Because what you're trying to get with the policy is, are you doing what you need to do to get to the end of your useful life, right?
Well, I'll throw a further monkey
I'm
wrench.
asking, I'm not saying, I'm asking the question.
I'll
Yeah.
throw a further monkey wrench into this. Because while I think that's got value, I wouldn't have voted the way I did without. I'll go the Joel route and I'll do an add-on. What if it's your policy for monitoring and maintaining or preserving infrastructure assets and planning for their replacement? Now I'm getting at where the rubber hits the road, right? Like, how do you plan for the replacement of those assets?
At that point, and we heard this but I don't know, for whatever reason, when you just said, like, when you add that in, like, some commenters have gone to us that isn't this in your capital asset improvement plan or your capital budget or whatever. And I was like, we're venturing that way. But when you just said that, I'm like, that's essentially, tell me your budget, tell me your capital asset.
Not
improvement plan
not
that's in-
necessarily
in
budget,
this
right? But how do you
separate document that
how do you plan
governments-
for the ultimate demise of these assets, right? It's not like you've even budgeted for it necessarily. Like, well, how do you what's your approach for doing that? 5 years out, we start planning for replacement. 10 years out, we start planning for replacement. Like, what do you do? Or do you just wait till we get to the end of our useful lives and then we start to figure out what to do? Like,
I mean, isn't that what government capital improvement plans or capital budgets say? Like, in the beginning of them, they kind of probably talk about those policies and practices and how they got to this and how they accumulated what's in there. And
I mean,
I don't
I think
know.
it's somewhat maybe, but it's budgeting decisions, capital, resource allocations, resource availability, I think is a lot of that stuff. So. But if we just want to leave it a policy for maintaining assets and deal with question 8.
I guess to me, I mean, I don't want to speak for Diane, but it sounds like for Jackie, I don't know. It's more about the 4 of you that voted to move it through as to whether practice was an important part for you. or you're okay with policy. And whether or not y'all want to hash that out, because whether it's practice or policy, I wouldn't move it through, but. So that's Chris, Robert, Carolyn, and you, Jeff, were the ones that voted for it, so.
Yeah, I mean, I said, I want it.
Yeah, no,
And
With policy or with practice somehow in there, which I don't know how.
like,
but-
I don't know. I know what that means, but I don't know what that means because I've had, as an auditor, somebody say, we don't have a policy. All we have is this written document right here signed by the controller. Come on, bro. Like that's your policy. Like, oh, well, we thought it was a procedure. Like, and you get into these semantics with all of that. So, I mean, I think that if you have some kind of written documentation of what your process is, that's a policy, right?
Scott, what was the egg question you referenced? Is that helpful to this context or no? What I'm remembering you said, it might be, but.
That's the code. 2015 dash, go back. To 15.1, question 151. So it'd be 151 in the SIG.
It talked about who establishes the policy, right? The level.
Yeah, it says diversity in practice prevents specifically defining what is meant by either a deposit or investment policy. However, for purposes of this section, an investment policy is considered to be a formally adopted policy that sets forth the government's allowable deposits and investments. Maybe formally adopted through legal or contractual provisions or by other means, usually by the governing board. It goes on.
Yeah, and that's the part, Joel, for me that sometimes I acknowledge, right? Like it's not the CFO or the chief, the secretary of finance didn't sign off on this, but for all intents and purposes, I consider it your policy. But there to me personally, there's a bit of semantics there. It's not the governing board that's signing off on it, but this is the policy you guys follow when you do this. So if that highest level isn't signing off on it, does it mean it's not a policy and it's just a procedure and now we can't include it? I don't know the answer to that. But I would be comfortable with no matter what, it's in there because that's what you do.
If it were just limited to policies that met that description, would you still want it? Or you only want it if it's some lower version?
I think if it's limited to that, there's probably fewer and farther between. So we just won't find it. So I think at least in trying to think through it, the issue would be that governments, if we go through with that negative disclosure, that governments are saying that we don't have a formal policy, but they kind of sort of do, and they're doing themselves maybe a little disservice because they have to say they don't because they don't have that highest level approval, but they do, right? And is that right for the government? I don't know if in that case it's better just to not have it there at all instead of having the government being hurt by disclosing something that is actually true to the letter of the law, but you do have a process, you do have a you do have some kind of formal structure.
Joe, in my experience, we would delineate between policies and then the operating procedures. And I also wouldn't want to ding a government if they have all the procedures in place, but it just hasn't gone through that, what we would consider that formal policy that would actually go to the board to be voted on and to be adopted. Because I would think that the important information is, you know, what are you doing? I mean, I don't want somebody's handwritten scribble note, but, you know, if there's, you know, a procedure that the accounting department is doing, maintenance is also, you know, doing this to maintain those, that infrastructure. There's some value in that, but it is hard to, it's, I mean, I get the questions from some of the stakeholders were saying, well, what is a policy? That's who has to develop it, does that have to be voted on by the legislature or by the board or what have you. But I would not want to lose that information because it's not a formal policy, but they are doing the procedures or the steps to say that, yes, this is what we do to maintain our infrastructure.
So trying to move things forward, right, since I'm in before, right? So Chris and Carolyn, right, would you then, sounds like, I would be okay with policy or processes in Q7. So that we're not just, it's your world, right? It's what you're saying your world is, Chris, but we're just formalizing it so we're not caught up in the semantics of policy. And then the statement 40 interpretation of policy, right? Like, do we come out with a different interpretation of policy here, or we just say, what we really mean here is policy or processes for purposes of Q7? Same for Carol.
So then my concern shifts to, it's in the summary of the policies. And we do have a history and a track record of saying, we only
That's
want
true.
your highest approved policy.
Yeah,
And
true.
so now we're going against that. And so that's the balance that I'm struggling with.
I will point out that those investment policies do not necessarily have to be in the summary of significant accounting policies. Some governments do, and some governments disclose it later on. But that requirement's not, that has to be in significant accounting policies, I don't believe. You had it up.
So in other words, we have this, and I haven't looked back at where where the summary of significant accounting policies comes from, NCGA 1 or wherever it comes from.
Yeah, 34 probably overrode most of what we had, except for then 62.
62.
Back. Yeah.
But I don't think like those accounting policies we say have to be formally adopted by the highest level of the government. If your FIFO, LIFO inventory assumption or your depreciation method, I don't think we have to have that be formally adopted by the highest level of government. So that's an extrapolation of an interpretation of what you just said, which was that thing that we rose to that level for that one disclosure doesn't necessarily apply in all of GAAP where we require policy disclosure.
So we could sit in the summary of significant accounting policies without having to reach that.
I mean, you certainly, in sitting in the summary of significant accounting policies, which is, I guess, where this will be, I mean, I would argue you definitely venture into, is this really an accounting policy or an operational policy that some argue against, but anyway, that's just, to Carolyn's point, how many minutes ago was this kind of a financial policy in a way, maybe. I mean, it's about assessing at some point condition, which is reflective of economic condition of assets that you have on your books. So, I mean, it's economic policy. How about that?
Well, in 62, it does talk about being adopted by the government, though. That the
But
accounting.
it doesn't say
policy-
highest level, like it's so.
It doesn't say the highest
So it
level,
could be the
but
finance director, it could be the
yeah,
accounting manager, it could be the maintenance supervisor, I guess, but.
Well, even the, usually by the government.
Is it on the investment? Okay.
says usually by the governing board.
The
in the
implementation guide.
implementation guide.
Okay.
Yeah.
Okay.
I'm wobbling on this as this conversation goes on. Maybe I'm just being too, straight line, bright line here. I struggle with a processor or things, I mean, as a policy.
So maybe this will help.
Yeah.
I it just popped in my head because I'm going back to what Chris said earlier. And I don't want to equate this necessarily to the modified approach, but whatever you have disclosed in your act for the modified approach for those policies, is it a policy? Is it at what level is it adopted? Like for those modified approach people that we said, that might be a good example of the summary. Where does that come from?
It comes from our practice and just what we do. So it just comes from our practice and what we do. It's not signed by the Secretary of Finance or the governor, and it's literally just, hey, we have this many roads and bridges. We use this approach for surveying roads. We use this approach for surveying bridges. We expect a percentage of this amount for bridges and this amount for roads. And
yeah, so at the risk of helping you guys, I mean, is it like, if that's good, if it's good enough for that, if it's good enough for the RSI, the modified approach, shouldn't it be good enough for this?
I mean, that goes back to, that's what I think. I'm fine with it, but I don't want to propose something that goes against what we do. If we only put it in at a certain level and this doesn't meet the level because it wasn't agreed upon by the highest level of government, then I would hate for governments to have to say, I don't have this, when really they in fact do have it, but they aren't allowed to say they have it because it wasn't approved by some higher level. If we can get around that, I'm in on this.
The implementation guide, talks about formally adopted. I mean, and then that it's usually by a governing body. Okay. How many governing bodies formally adopt the capitalization policy for capital assets? I'd venture to say 0, 1, okay, maybe. Which is part. I'm waffling a little bit on question 7.
Why, right? Doesn't that make it trying to be in the summary of significant accounting policies? Because you just said that the thing that's in your summary of significant accounting policies didn't actually get formally adopted. So this is the same thing as that. So I don't think that would help you.
I mean, this helps. What you just said helps me, Robert. Like, it makes me feel more comfortable to say, well, then, if those things could be considered, then this can be considered, and it's not an issue.
Right.
And we could talk about the level of information that's being considered, but the first threshold, that is whether or not you even deserve to be in the room, we meet that threshold. So I'm good now. Now we could just talk about what's in, what's out, and have that negotiation conversation.
Yeah, and I agree with that also. Because our board would not approve the accounting policy and procedures. You know, it would have to be a much higher, almost district-wide policy to get to that level.
So Chris, kind of going back, if I look at the modified approach reporting requirements, paragraph 133 of 34 says the following disclosures should accompany essentially the RSI. And it's A is the basis for the condition measurement and the measurement scale used to assess and report condition. For example, a basis for condition measurement should be distresses found in pavement surfaces. A scale used to assess and report condition could range from 0 to a failed pavement for a failed pavement to 100 for a pavement in perfect condition. That's A. B is disclose the condition level at which the government intends to preserve its eligible infrastructure assets reported using the modified approach. And then C is factors that significantly affect trends in the information reported, including any changes in the measurement scale. If there's a change in condition level at which the government intends, an estimate of the effect of the change on estimated amount should be disclosed. I mean, that just, I don't know, that doesn't sound like what we originally, we were thinking about, I thought, with your policy for monitoring and maintaining. This is all about kind of condition measurement and scale. I mean, I guess it could be an aspect of it, but it's to me, a subset aspect of it. And so whatever you included in your RSI in the modified approach is probably only a subset of what I would think your overall policy for monitoring and maintaining your infrastructure would be. Maybe, unless you're maybe a little bit more verbose than specifically the exact requirements of this.
What other
disclosure.
things do you think, like when we talked before, I guess going back to your comments, that you think it might just be weighted down with too much information? Like what other things do you think you would include in there?
I go every 5 years and fill in the cracks on every road, and I for the bridges, I go and oil the nuts and the bolts on the first section every October.
See, so I get that, but I would think that would be too granular. If you just say we maintain at a level, it was said 0 to 100 for all the cracks in the world and potholes at 0 and none at 100, you maintain at a level of 85.
But I don't think if you don't do the modified approach, you don't probably have this whole scale thing.
Right.
You just have you might have some practice of
mhm.
how often you do it, or the kind more detail. I don't. That's to
But
me.
so
I've ended
even
up, it's
that,
either going to be really
so
detailed
even that
or,
though, and maybe this is to your point if you're not on the modified approach, because it would be, hey, we conduct this in accordance with our more detailed procedural document or whatever that details out how these types of infrastructure assets and these other types of infrastructure assets need to be maintained. So
Scott's practices. We maintain it in accordance with Scott's practices.
right.
Well, that tells you that much, does it? I don't know what Scott's practices are. Tells me that I have something, but it doesn't tell me what it is.
So would there be a split? Could you do a split for modified approach, and that would be in the summary of significant accounting policies, but not overall, not if you choose not to use the modified approach, then you wouldn't detail, because then it would be too boilerplate and you're not given specific information without diving into detail? Or is that not worth it?
I mean, you already have that information for the modified approach, right? It
In
might be an RSI, but you have
and
it.
the RSI, yeah.
So
Well, again, I think, so, from, you said earlier, people felt like we were trying to backdoor them into the modified approach. And while you all were not, I was, because I thought that it was a better method to help people. Yeah, I left it on for that one. So I thought it was important. So I just also, if I can get a chance to elevate that and put a spotlight on it, and that's the way, I mean, I would take that. I do acknowledge that maybe the level of detail that you would have to go through might be a little too much for that summary of significant accounting policies, and you probably could capture it. I mean, you would capture it in just the regular footnote, all the important details, I guess, and it would. I could be okay with that. I would actually flip-flop for that.
you lost me. Flip-flop for what?
Flip-flop for with the idea that the level of detail that might be included in the SOSAP would be too much, and therefore, unless it was just the modified approach that you're putting in there and elevating it up, right? So as part of this process, we elevate it up and take it out of the RSI, and maybe elevate it into that policies, those accounting policies. And then, I would agree with you, and
Only for the governments that use the modified approach, or for, you want everybody to have to do that?
well, for the governments that don't use a modified approach, they wouldn't have anything to elevate up.
Okay.
Yeah. So it would get to your side, but the only difference would be that we're going to elevate disclosure of the modified approach up a bit.
I just, wouldn't you want just all your RSI, all your modified approach stuff to be together in one place in the report? Rather than now I'm moving, I mean,
How important is it?
I don't know, you're
I guess
getting into
not.
an, you're
I guess
getting
it's
into an
not, right?
essentiality determination,
So
I guess,
I guess
and
it's-
I'm
Yeah.
gonna stay.
I already lost the argument one time. I could lose it again, but I just, again, I understand what you're saying, but I think you got to send a message with this, and maybe we don't want to send that message.
People that do the modified approach have already heard the message, like they're the good guys.
Yeah, but the point
They're
was, the point from the
providing good
beginning was that
information.
we need more to do the modified approach. And by elevating it and highlighting it, et cetera. And by doing some of the things that we did not agree to earlier on.
But earlier today, you decided to take out the encouragement to the SI that was related to modified approach.
Right, and the current question 7 makes no distinction, so the modified approach governments are in question 7. So I'm not getting the addition by subtraction here. By taking out all the non-modified, somehow we're making it better. It's already in there for modified, right? I think we heard from the users, it's important for the non-modified, right? Which is what I thought we agreed to, right? They want to understand what their policy, and I agree, seems like we can explore it a little more. We got a little more flexibility. We can stay to a term of policy because we're not tied to this formal highest level. So this notion of what your policy is in there is you can describe what it is, what formal thing you follow, right? We're not hinged to it has to be approved by your county board. It's like, what do you follow? That's the policy here, and that's where it's going to stick in there, and that's what all the users want to know, and that's why I feel it has value, right? I think we're getting a little off track somehow in this discussion of question 8 to now go back. Question 8's a different animal in my view. It's like, okay, if you don't, and again, if we think it's a policy broader than a formally adopted policy by the highest level of government, I personally would be okay in question 8. Like, you don't have to say anything. You don't have something, you just don't say anything. And I, as a user, will figure out you don't have any way of overseeing what you do with your infrastructure. Like, really? So I'm going to contact you. I'm going to talk to you about that, right? And say, what's up with that, right? These other guys talk about it. They have disclosures about it. You don't? Why don't you? You don't have a policy? That's a red flag. That's an alarm bell going off, which I think will be rare if it's not the formally adopted policy thing. Like everybody's, like you're saying, Chris, everybody's got a way they oversee this stuff. Of course they do. So that's why I get caught up in, well, you don't have it's not policy, it's the formally adopted thing. So I don't think we have to have the negative disclosure there. It's like, if you don't have anything to say, okay, you won't say anything. But that will be noticed, I think, or should be noticed by your absence of anything related to a Q7 disclosure.
So if that's on the table too, then that's okay. But my point earlier was that I don't want governments to be negatively impacted by saying, I don't have a policy and they really have a policy, or they have a procedure or a process that's below the level that we would accept. And it might be overly cumbersome. So can we just elevate this other piece forward? But are we talking as well about that question? If we're going to remove the requirement that they have to disclose that they have nothing?
Well, that's what I'm saying. I'd be okay. I don't want to me, that's sort of the tail wagging the dog, right? Like, I don't want I'd be okay. Like, I don't force them to say that you don't have anything. I don't think that we need to do that, right? I think if you don't have anything, you're silent. And if you're silent, okay, to me, the users would notice that. And therefore, that's okay, right? Like, so I don't, especially because we don't mean it. If we really meant it as formally adopted policy, then maybe, I don't know. I don't even think I was there with the formally adopted policy, but maybe I could see more of an argument for a formally adopted policy to have this negative disclosure thing if we felt that policy was super important, right? And so we needed to have that negative disclosure. Here, I don't care. I'm with you. I don't care if it's what's your formally adopted procedure, right? Like, that's what I care about. So so then in question 8, I'm like, if you don't have anything really, which I think should be rare, then you wouldn't say anything. Right? Because I don't care that you don't have it adopted by the highest level of your governing body or whatever other language we have. That makes sense.
Just to bring us back circle. Again, that disclosure in 40 is not a summary of significant compounding policies. It has to be. It's just a policy on investments. And that's the one that says it has to be formally approved by the highest level. Significant accounting policies have to be adopted by the government. So if you're going to a lower level than being adopted by the government, we can't put it in the summary, or if we put it in the summary of significant accounting policies, we should amend statement 62 and say, except for the disclosures related.
No,
to
but you
this.
said adopted, right?
Yes.
But not by who?
Adopted by the government, that it's something that's going to be done. It's not.
So that's why I agree with Joel. Maintenance supervisor adopted it. Somebody signed off on that.
Does somebody have to sign off on it though? Or is it just a policy that everybody can go to the R drive and see, here's the policy?
But at some point, there's a policy, right? Somebody
there's a
approved
policy,
that.
but like it
Somebody
doesn't have
approved
to
it.
be signed off by the controller. It's just a policy that we've been following for 5 years. It's in this PDF and that's what it is.
I mean, at some level, our capitalization thresholds or the fact that we use straight line depreciation or whatever is probably only documented in the notes to the financial statements. So but I would probably consider that adopted because the government somebody had to make the choice that this is what we're going to do. It is what they're doing. It's reflected in the numbers. And so they put it in there. And so I wouldn't get overly hung up as long as they consider it to be adopted by the government some level, then it should meet this threshold. Jackie.
So maybe the solution is to go with a significant accounting policy and it's adopted by the government. And then in the basis for conclusion, indicate that policy here is not analogous to what's in statement 62 or whatever it is, just so they're clear. And then you probably get to where you want to go.
62 is the one that talks about adopted. I don't think the only thing it's not analogous to is wherever we say the policy has to be adopted by the formal highest level, which is not the lead into the summary of significant accounting policy.
But circling back to the start of this discussion, it wasn't policy, it was processes. So if you want to disclose processes at that same level, what do we do?
What the government considers to be a policy. And a policy is what they've adopted, right? We haven't put more strictures on that than what they've adopted, right? And so, like lots of other stuff, right, that they probably call policies, this is the same thing, right? And I don't think we're being inconsistent with where we're placing it or how we're thinking about it, given that.
So we'll call it a policy. Okay. That deals with that.
Calling it a formally adopted policy doesn't cause it. I mean, that doesn't cause any problems. Does it use those 3 words? Because we use those 3 words routinely.
You just added a word, formally
just
adopted, just an adopted policy.
So I think we redecided 7 is where we were. But then 8 is like, okay, given that,
I don't think you changed that.
no, we didn't. And so therefore, then I'm back trying to get with 8.
Somehow it came up. We weren't sure if it included these practices or not. Somebody brought it up. I don't remember who. And we just spent 45 minutes on it. But yes, so we're back to 8, I think. Unless anybody's changed their mind on 7.
Come on, it's your chance.
Then given that 8, I
No.
would just say
8.
I would be fine if it's just they don't say anything. Rather than have a negative disclosure. I don't think.
In light of thinking about significant accounting policies, we don't make them disclose. I don't know.
Yeah, I
Any
don't
of
have
those
a
other ones
policy.
negatively.
Right.
I would agree with what Jeff just said, that I wouldn't have been here, but because we're here, I would.
Now you're a part of it.
I wouldn't require. No, I know I have to vote now that we're here. But I wouldn't require the negative disclosure either. Karen?
I agree. Before I was saying, if you don't have it, then state so, but I also agree, if it's not there, and a user or someone could always follow up and figure out that either they don't have it. So you don't have to you don't have to put flashing lights saying that you don't have it.
Right, different than what we do for any other summary of significant accounting policy, right? Like,
So either you're going to say something in this section about a policy or you're not. And that's the light switch on or light switch off. Either you're saying something or somebody goes to that section and it's blank. And they're like, okay, well, it won't be, it'll be blank. So there you go.
We just have 10 blank pages.
Right. Have a big
10
gap
pages of
in your
detail.
act. Right.
So Chris, you agree with that?
Yeah, I think that, as long as they understand that whole adopted policy piece that we talked about, which, like Jackie said, the basis or whatever is fine to explain it out.
Robert, Diane, Robert,
No negative disclosure.
no negative.
Well, if we're voting on this, then no negative disclosure.
Okay. Jackie,
I'm fine with going with no negative disclosure.
shoo. That's it, right? Excellent. All right, Scott, thank you for bearing with us on that. But this is important. We knew this was going to be a long discussion. There's a lot of important stuff in here. I appreciate all the team's work and appreciate all the board's deliberations. Do you want to talk about next steps a little bit?
About you next with RSI and effective date transition.
And the plan is to do that at the short meeting on the 29th of September. Very good. All right. This meeting adjourned for today. We will start back at 9 a.m. tomorrow with our informational session. We've got some voluntary digital financial reporting update after that, and then time permitting, we'll approve the tech plan. Or we'll look at the tech plan. We'll consider the tech plan approval. Meeting adjourned for today. See everybody tomorrow morning at 9 a.m.